Give it a second, see if it picks up on YouTube. Yep, and you're on.
Awesome. Good morning, everybody. Welcome back to the next session 3 of a 24-hour marathon of Crypto Alpha. So today, what we're going to be doing is we're going to be covering in this section a view that I have towards how to structure your portfolio within the crypto ecosystem so that you can essentially, firstly, protect yourself from the potential bad decisions that you could make in this bull run in the long term, and then also allow yourself opportunity to make solid, hardcore gains in the bull market. Now, what we're going to do is we're going to be basing the framework of this discussion around obviously people that are far smarter than me. This is going to be part 1 of a series that I do in the whale room. So it's just going to be an overview. We don't really have far too much time, but we'll jump straight into it, and then hopefully we'll have a little bit of time at the end to answer some questions. All right. So David, you can bring up that the slides, and then we'll get into the nitty-gritty of it. So essentially, what we're looking to do here is build a framework that provides you with a structure. If we go into a bull run and we don't plan, essentially we plan to fail. We all know the saying. So if we're going to what we want to do is we want to have some kind of framework, some kind of measuring stick that we can use to guide our path and navigate the waters as we kind of move through this probably the most parabolic and crazy bull market that we will ever see. And then from that point, also have some kind of structured, systematic approach to rebalancing the portfolio, and also to structuring sort of the different segments and having different decision-making processes in those segments, so that you can get to the targets that you're looking for, right? So I just want to, before we start, I would like whoever's here in the YouTube just to throw in the chat where do you think, what price do you think Bitcoin and Ethereum could reach conservatively within the next 5 to 10 years, right? So next 5 to 10 years, what's the peak for BTC and Ethereum? And just give me that feedback in the chat, and I'm going to jump back into that in a second. All right. So when it comes to navigating our portfolio, we base this framework around the 2 mentors, 2 extremely intelligent individuals whose knowledge has stood the test of time. The one being Benjamin Graham, right? Who's according to Warren Buffett, the most intelligent investor of all time, as in better than Warren Buffett. Warren Buffett read Benjamin Graham's book in the 1950s, and from then until now has not found a single source of information about investments that surpasses the alpha that is put across and the strategies that are put across in that little Bible. And the other one is Mark Douglas, who you guys know I'm an advocate for, who speaks around trading in the zone. All right. So as Benjamin Graham delineates, right, speculative investors are like gamblers seeking short-term gains with high risk. If you were in my session yesterday, we were talking about how leverage trading and spot trading, we are essentially gambling on the direction of the markets. We're speculating as to what direction that market will go. Okay. Now you have long-term investments. You are able to gauge the direction of the market in a much more conservative but accurate manner. If you're looking at sort of a 5-10 year plan compared to sort of the short terms, where we're looking at sort of that medium term, daily term, weekly term, monthly term, right? So we've got your long-term investors, right, which aim for sustainable growth. So what we want to try and do is build a portfolio that balances between the two different types of investing, right? You want your long-term investments, where you will get a secured APY, something that will come through over the next 5 to 10 years. And then you want your speculative investments, where you can kind of try and scale and leapfrog your investments by applying the skills that you've learned through school and through the different clubs and through watching, and through your own means offline or prior to joining this community. And then through balancing those two approaches, you can secure yourself in the short term and then try and secure yourself in the long term. I mentioned Warren Buffett. His quote is one of the most successful investors credits to the intelligent investor for shaping his investment philosophy, right? So if Buffett listens to this guy, I'm also going to listen to this guy, right? So we're essentially going to go now, just 2 quick quotes, right? And then I want to talk about how we get into that. And I'd love to hear from you guys where you feel that Bitcoin and Ethereum price point will be 5 to 10 years from now. Okay. So now, intelligent investor, right, acts as a steadfast guide. This is basically an overview of what he does, right? Emphasizing pivotal differences between speculative and long-term investors. While speculators chase short-term tides, long-term investors chart a course towards a sustainable compounded growth, right? Now, with Warren Buffett, he lauds the enduring relevance of this book. He said that he read it in the 1950s. I've mentioned this, and it's still basically 100% relevant. Now, I'll be honest, and that book is extremely difficult to read because it speaks about the S&P 500 figures from the 1950s and historic data from the 1950s, but the underlying principles remain. So when you do find time to read it, I would suggest going to the conclusion of the chapter, read the conclusion of the chapter, and then use that to kind of understand everything that's going on in the individual chapters, right? So when we again then as a basis for where we gained the information from trading in the zone, right? So if you were in the session yesterday, we talked about the difference between trading certainties and probabilities, right? So here we emphasize the essence of approaching financial markets with that probabilistic mindset, okay? Acknowledging the inherent uncertainty in trading and using this approach, right, towards how we balance and structure those portfolios, right? So we need to know that it's a mindset that fosters adaptability, resilience, and disciplined risk management, and aligning seamlessly within Graham's principles to emphasize sound decision-making processes, right? So this principle reminds us then to approach trading with a realistic mindset, and we need to acknowledge that and then manage our risks accordingly. So 5 principles that we're going to look at when we balance our portfolios, okay? Firstly, principle of safety, okay? Have a margin of safety in investments. For more conservative investors, you need to obviously have a larger margin of safety. For less conservative, less conservative. But bear in mind that more risk, more potential reward also means more potential risk. Risk and reward come together, and also bear in mind in that statement that risk comes before reward. You first need to look at what am I risking, not look at what do I want to gain. Because if you're going to start with what I want to gain, you might lose track and forget how much you're actually risking in the process and get sorely hurt in that journey, right? So higher percentage of bonds in the portfolio provides a measure of safety. Now, obviously, this is a principle from Graham. We look at it. That's USDT, USDC within the crypto component of our portfolio. Now, historically, you would buy government bonds, and those bonds would give you a sort of an APY, 5-10% per annum. Now you can look at LPs, you can look at lending USDT on exchanges. You can also use that while getting an APY on that, also lending it on exchanges to then farm for airdrops and things like that, while still balancing the risk within your portfolio. So this is you can essentially make both sides of your portfolio work for you, right? Now, where market conditions come in, essentially, where what you want to look to do is you weight your portfolio then between markets, and you weight your portfolio between dollars. Now, I should have started off with first saying that at the beginning of this conversation that this is not financial advice. I'm going to throw it in here right now. Right? This is obviously my opinion, my view of what these professionals do and how I look at building and balancing my portfolio. Right? So throw that out there, and now let's continue. So with regards to market conditions, right, we teach that you you buying into the markets, you weight more into the market when the markets are discounted, right? So you would then balance more from your USDT, USDC into Bitcoin, Ethereum, altcoins, things like that. You put more risk on, right? And then as the markets become overpriced, you would then be moving your money from the markets back into dollar, right? You always want to be keeping a little bit of dry powder, even when the markets are super heated, so that you can always have an opportunity to dollar cost average on any sort of major dips or corrections in the market, bearing in mind that right now, price on Bitcoin could correct all the way from where we are currently, all the way back to $32,000, right? That's like a 40% dip from where we are currently, and still remain 100% bullish. So we need to keep in mind what are the healthy corrections within the tokens that we are investing into, and have dry powder for the times when those corrections do take place, and then have that ratio split between the dollars and the markets, so that you can balance the risk accordingly. Now, how Graham does it is you'll start with say a 20% market, 80% dollar, right? Then as the markets become super discounted, you move towards like a 50-50 split, right? And as the markets become more bullish, you would then move to say a 70 or an 80-20 split into the market, ride the wave, and then again balance back towards the other side. So where you'd eventually be left with now only 20% exposure to the market, and you would have moved your profits into more stable investment solutions where you're getting a standard APY, and you can then ride that bear market out. Now, this basically provides you with a risk off approach, or a risk stable approach towards how you invest. Now, the next stage will be, how do we make these decisions? When do we make these decisions with regards to different components within our portfolio? So dynamic asset allocation, right? So you should periodically then reassess those market environments and look at your own risk tolerances to determine appropriate balances, right? So this is now where you're going to come into your decision-making process, which is going to be on the next slide, right? Dollar cost averaging, okay? So I think everybody here should already know dollar cost averaging. That there's the two most famous sayings in crypto is dollar cost average and not your keys, not your crypto, right? So if you got to know those, like these are the two like basic fundamentals, right? Now, the last one is individual investor considerations. Okay, so just on the dollar cost averaging, you know, when you look at the allocation into a project, like you want to buy into a token now, you've got $1,000 to put into it. You know, okay, cool. Put a 30% allocation. You wait to see, is price going to have a shift in market? Like, let's say you hit a major major daily support area, you buy 30%. Okay. Do we break the support, break lower? Cool. You can then buy another 30-40% at the next major daily support area. Or do you have a shift in market structure where you see that sort of change from a downward trend to an upward trend? You look at that higher time frame, higher low, and you can then also still look to add 30-40% there, and then keep a small percentage of the allocation in that token for any sort of liquidation event where you can really buy something at a discount. Okay. At the same time, always weighting weighting each sort of token allocation in the same way as you would weight your overall portfolio. So you can then hone in and dig into each different components, right? But you're able to track each individual component of your portfolio at the same time, balancing that on a holistic overall perspective and having systematic decision-making processes for each component, right? And now we're going to jump into that in a second, okay? So now you've got your you need to then obviously balance this, right? In line with your own financial goals, your age, your risk tolerances. But this is just kind of like a framework, a base, right? Now, managing your portfolio, right? So if, or what, who, let me just throw, I just want to jump here quickly to the chat. What price? Okay, 350,000 on Bitcoin and 25K on Ethereum, 250K Bitcoin, 20K Ethereum, 15K Ethereum, 300K Bitcoin. Awesome, guys. What's up, Chaos? Welcome, brother. 400K Bitcoin and 25K Ethereum. Okay, 5 years Bitcoin, 175. Okay, let's take the most conservative figure possible, which you guys are not even like, yeah, not financial advice, guys. Not. Okay, so we're just gonna. I'm actually gonna go a lot more conservative than you guys for this part, right? And I'm gonna say within the next 5 to 10 years, Bitcoin is gonna hit 150K Bitcoin, right? And it's gonna hit 20K Ethereum. Okay, so now, so I'm more. So my figures, I'm gonna say more conservative. Okay, because we want to be able to make sure that, you know, as we scale our portfolio and we scale our risk. Now, bear in mind that like what we've already understood from my presentation here is that speculative investing is gambling on the markets, which means that there is, regardless of how much probability there is of you making money, there is also as high a probability of you losing everything. Right? If you do not manage your risk accordingly, right? A lot of people, you'll hear the story from pretty much everybody who's been through a bull market before. They rode it to the top, they didn't sell, they rode it to the bottom, right? Now, we're going into the most crazy bull market that we've ever seen before, right? We're going to hit 150. If we hit 150K, people are going to be calling 350K. If we hit 300K, people are going to be calling 500,000, right? We don't know how high this thing's going to go. All we can know is what do we want to get out of this bull run, right? How are we going to plan for that, and how are we going to execute it? And then we need to be able to make sure that we stick to that plan. And when we hit those targets, right, we secure our future. And instead of looking at it and going, it's going to the moon, baby, diamond hands, hold this thing forever. Like we got to be realistic. We need to make sure that we have an approach that is going to be able to help us long term, right? And that this is where you start to then weight your portfolio from heavily market orientated to balancing it back into USDT orientated, right? Now, if you have $10,000 now and you put it in the bank, okay, now you're going to get a very small return on it. If you be able to grow that 10,000 over the next year to say 50,000, or you grow that 10,000 to 100,000, you know, like, and now you're going to take that and put it into, and you're going to lend that crypto out to get an APY of 10, 15% per annum. Like that is some serious financial, some serious gain in your financial situation, right? Why now look at it and go like, I need to make it 200 now. Actually, I know I had a target of 100, but let me make it 200 now. And then you watch it go from 100 back to 20, right? And this is the thing that we all do, that we've all done at some points, if we, in a previous bull market. And so what we need, what the goal is here in this bull market is, how do we protect ourselves from ourselves, have the goals that we need, and then understand our goals and then work for it. Okay. So now, long-term portfolio. Okay. If you were to buy Bitcoin right now, okay, 50K, you take it 100%, you take it all, say you like dollar costing average, you get roughly sort of you get roughly a sort of, you know, 40K, 50K Bitcoin, you get like a $2,000-3,000 Ethereum, okay, and then you take that capital, you take that money, you put it off the exchange, you put it on a wallet, you hold it. Worst case scenario, within the next 5 to 10 years, right? The Ethereum, let's say you do a 30% split there, will go from 3K to 20K, right? So that's like a 7x, okay? Then you got your Ethereum, your Bitcoin's going to do a 3x, right? So do you understand that you've taken 50 to 70% of your capital, And from a relativity perspective, you have essentially secured the bulk of your entire the bulk of your portfolio, looking at looking at conservative figures of where Bitcoin and Ethereum could go in the next 5 to 10 years. The reason why I look at just those two is, personally, those are the only two assets in the space that I could conservatively say will be here 5, 10 years from now, right? Even if Ethereum goes to zero, conservatively, Bitcoin will be here 5, 10 years from now, and adoption will continue to grow, right? So now I can say, then you can say, mitigate the emotion from your environment, from your investment solution, and you look at it. You can now start to look at your spot and your leverage portfolios and say, look, I'm looking to make financial wealth, or I'm looking to change my situation, right? But at the same time, I don't want to lose everything that I have. So I'm going to take 50% of this to 70%, right? And I'm going to put it into, I'm going to say, okay, cool. The targets I need to hit on this is X, Y, and Z on Bitcoin and Ethereum. If you guys have other tokens you feel can last 5, 10 years, by sure, include it. It's your portfolio, do what you want. So then that then essentially, that bucket, right? Now, when that hits target, it should, even if you are really, really, really bad with your spot and really, really, really bad with your leverage, and you liquidate your leverage and all of your spot goes to zero, and all you have is that long-term portfolio, right? You're then going to, within the next sort of 5 to 10 years, as that asset scales through the next 2 to 3 bull cycles, right? You should at least recoup the 30, 40%, the 40% or 50, the spot and leverage portfolio that was lost, and still make that APY as if you were to have taken that entire investment right now and thrown it in the bank for a lower interest rate. Okay, so you're able to free your mind from the stress of potentially losing everything from that perspective, right? Then you look at your spot portfolio. Now, with the spot portfolio, you then look to you're going to assign different sort of decision-making timeframes to this. Okay, long term, where do I make my decision? I make it on a biannual basis. Okay, the only monthly decision that we made, and you just DCA every single month, adding dollars, right? You slowly but surely weighting from dollar into market, right? Then you're going to the only decision you're going to make there is, am I putting more into Ethereum or more into Bitcoin, or am I putting equal amounts into both, right? Okay, then every 6 months, you're going to look at it and go, where are we in the cycle? Are we just entering into a halving? No? Are we at the peak of the cycle? Have I hit the financial goals that I had already for this aspect of the portfolio? As in, am I already at over 150 and over 20K, right? So you need to understand where are you within that sort of framework of that, and you make that decision sort of biannually to determine whether or not you're now going to start weighting back into dollar on that portfolio, or whether or not you're going to continue weighting into markets, right? In your spot portfolio, this is where you can become a lot more speculative, a lot more comfortable with then building into 10x positions, into potential 100x positions, right? How I look at it is, then on a spot portfolio, you want to apply a similar strategy where you're DCAing and you're into projects, and you let's say have an allocation of like $1,000 in render. Now you bought render, you buy render you manage to get into render at $1, right? Now you go up. As you get up, now we're at $7. You want to be taking profits off of the table, weighting it back into USDT, right? You don't want to be riding it to the moon and riding it all the way back to the floor. You need to be able to take profits along the way. So you're going to make then decisions with regards to your spot portfolio on that sort of monthly, quarterly basis, right? And you're going to make those investments as well. You're going to be looking at sort of 1 week, anything from 1 week up to 6 months, depending on whether or not it's a small cap, things like that. Okay. Now, in the full course that we do on this portfolio, we go a lot more in depth on each section of this, but I don't have that much time with you guys today. So we're just kind of doing an overview, and I hope you guys are able to take this away and it adds some value, right? Now, as we should all be well aware, leverage is the most risky form of trading that there is, right? Spot is a lot more forgiving, long-term extremely forgiving, right? You bought Bitcoin at the peak of the 2017 bull run, right? Like I did. I got into Bitcoin and Ethereum and these things at the peak at like 20K Bitcoin, right? Now look at us 5 years later. We're double that, you know, like what we were. That was barely the floor when we went into our last bear market. The floor was the peak of 2017. So long term can be a lot more forgiving, even if you make extremely bad investments. Timing decisions as to when you're buying in. Spot, obviously a lot less forgiving. Leverage, extremely unforgiving. Okay, so now on the leverage component of our portfolio, we're now doing those adjustments on a monthly basis, right? We're looking at a smaller percentage of our overall portfolio, right? And those are really short term. You can have daily, you know, you're in and out of trades on a daily basis, on a tri-daily basis, on a weekly basis. You know, the probability of holding trades more than a month, unless you get a massive runner, you know, like we've got like on our cash trade that we're running, on some of the other ones, you know, you're going to be essentially looking at now balancing that backwards, right? So let's say you make 50-60% on leverage, then that leverage portfolio is going to be what's able to pay you a salary every month. You know, when you want to become a full-time trader, it's going to be where you get extra capital to now go and add to your spot bags, add to your long-term bags, create buffer funds for, you know, and lend a more USDT on these DEXs in order to get airdrops, in order to get an APY and balance sort of your returns over time, right? Nothing wrong with shooting for the moon. But if you're going to shoot there with 100% of your capital, also understand that you can go up and come down just as quickly. So a balanced approach is a little bit more conservative, but it does provide a more consistent gain over time, right? Now, your portfolio breakdown, right? So now if you had, assuming a portfolio valuation of 100,000 like that, look, I know that a lot of you guys have a lot less than this. So we're just using these figures as sort of comfortable, like easy to read, okay? You can have 10, you can have 5, you can have whatever you want. Just understand, first you want to understand what percentage of this am I willing to go to zero, right? And then how much percentage do I need to use in long term to protect to protect the balance, right? Spot and leverage, okay? So let's say we balanced it, split 70-30 split, hold 5 to 10 years on the long term, right? You DCA monthly, your decision-making process, you go bearish conditions, 70-80% bonds, or in line with what we do, USDT, USDC, lent out, or just sitting on a cold wallet. Then in bullish conditions, you target shifts, DCA into the markets, okay, on any sort of major dips. Then your market directions, annual and biannually. So we're just recapping here, guys. Okay, so imagine you have that sort of average net cost, okay, your targets, you're essentially able to now recoup and make your capital back on the long term, okay, just going through a bit of the math, okay. Now, capital and maturity of the investment, so your Bitcoin target was 150K, your initial capital, let's say, was 15, okay, your ETH target was 30, your initial capital was 15, you invested that 50, and your essential goal, your gain at the end of that, when you're going to in 5 to 10 years, you've still made over 100% on your on your original overall capital, even if the balance of it goes to zero. So even as an investor, you've now gone, okay, cool. I am an investor and I am a speculative trader. Let me balance these two components of my psyche in order to create a seamless framework for how we're going to approach the markets. Okay, so now in additional investment strategies, right? So obviously we inspired these principles by Benjamin Graham, and by Mark Douglas, right? So what we look to do is now you DCA. So every single time so now you've got your initial capital, right? Now, every single time you DCA, you now compound that interest on a monthly basis, depending on where you're adding, depending on any dips, right? So at this point, now Bitcoin goes from 50 to 30, you're welcoming that. You know, you're not freaking out. I need to sell all my bags. Oh my gosh, because you get this actual bullish retrace in the markets, which is super healthy prior to a halving. You're now looking at it and going, amazing. I get to add now, and I'm farming and I'm getting more tokens because you've still got dollars to add, right? Then that dynamic approach then is also enhancing the strategy, right? So that we can adapt our principles towards these market conditions. Okay. Now we do a quick calculation. We don't need to go too much into this. This is just showing some figures, right? And we come to the end, and we actually have so much free time. So we're going to get adaptability, diversification, and commitment to long-term growth guide our journey, right? Echoing the timeless principles from the intelligent investor and targeting in the trading in the zone. So just wanted to leave you guys with that step. And I'm just I want to jump into the chats here, right? So you might be able to go through another section of this, dig more into sort of one of the components of this portfolio. Sort of how do we look at leverage trading? How do we look at spot trading? But in the chat, let me just jump in here, guys. Is there any questions that I can answer? Anything. Okay, let me just look here. Okay, cool. Not so much, nothing really in the chat going on. But yeah, so we can look. I mean, what we could do is we could look at a bit more into having a bit of a banter. If any of you guys anyone else is around, jump on. We can have a bit of a banter around around how different traders look at balancing your portfolios. I know that this is one view. Let's see if we can get anybody else here who's keen to come and jump on and join and talk a bit more about sort of maybe a more degen or less degen approach to how you are how you're building your portfolio or looking at portfolio and adding to what I'm saying here. If not, then I'll jump in and we can maybe go into a bit more around one of the either spot or leverage component, how we look to essentially build those. So which would you guys prefer? Just throw something here in the chat and let me know. I'm in the chat, by the way. I see you guys. A good way to track your portfolios. Yes. Okay, cool. So what determines how much leverage you use on a trade? Okay, so Alex, when it comes to leverage, I think I look at leverage as a tool. It's not really a component of the strategy. If you're going to let me change my screen here, and I'll bring up. I'm gonna bring this one up. Okay, so let's say, have you got me up here, David? Bring up the slide. Okay, cool. So let's do a bit of Q&A here. Okay, so firstly, what is a good way to track your portfolio? You can either use Excel. I put together an Excel portfolio, which is a tracking sheet, which is in the whale room. If you're part of the whale room, you guys can access that there. Essentially, it tracks your exposure within each narrative, what tokens you're in, your dollar cost average, what your APY is within that narrative, and each specific token that you're invested to within that narrative. Alternatively, you could also come to you can also use CoinGecko, which is a lot more sort of user-friendly and a little bit more basic, right? And then you can just add all of your buys. Every single time you buy a token, you're going to add it there, and it will track your portfolio very nicely there. So that you can kind of see an overview of what your P&L is on your spot portfolio, and also see sort of once you start hitting 100% growth or 1x, 2x on things, it'll help you to then be able to make decisions as to DCA but out. Alex, when it comes to leverage, right? So essentially, when you say take a chart, okay. Now let's say take this chart, okay. Let's say we've got our risk, and our risk is going to be 5%. Now, if for instance, that means if the trade goes against you, you're losing 5% of the volume in the trade. It's got nothing to do with the leverage. Okay, if you're going sort of $100 10x leverage, then your position size is going to be $1,000. Your risk to capital is going to be 5%, right? Which is then going to be equal to $50, right? If you go and say, okay, actually what I want to do is I'm going to do $50, actually 20x, right? Now that same position size is $1,000, okay? Your risk to capital is going to be 5% is equal to the same $50, right? So the leverage part is not really what's important here. What's important is whether or not you're going to now what is essentially that $50 that $50. So the important component in the trade is going to be actually what is the percentage, but from my entry to my invalidation, right? What is, now this is not a trade, don't take this trade, I'm just as an example, okay? If you have that $50, right? Now you're going to say, okay, cool, $50 is $50 as a percentage of my capital. So you're going to look and say, okay, cool. Now capital, and let's say the capital in your account is say $2,000. So you've got a $2,000 leverage trading account. Okay. So then 50 divided by 2,000, right? It's going to be say 2.5%. Right? So now you say, okay, cool. So I'm now risking in this trade 2.5% of my capital. So then with that in mind, you're then going to say, well, is 2.5% risk to capital an acceptable loss, right? And if yes, then you're going to pay that. What you're doing is when you take the trade, you're paying that $50 to the market to then determine whether or not you were correct. And the more indicators or the more time you give to that trade, the more likely you are to make a right decision before you pay that money to the market, right? Now, where leverage comes in is if, for instance, now you've got a 5% stop loss, okay? You can't go and apply 20%, 20x leverage to that trade because you would get liquidated before you're going to hit your stop loss, right? Because every single 1% that price moves down is going to be 20% of your capital in the trade, 20% of the $50, right? So then you're going to need to apply, you could go 10x. 10x would allow you a stop loss of up to say 9%, right? Before the position gets liquidated, right? So now this is where so that is the only sort of space where you're going to be looking at what percentage, what is my leverage in this position. The important component is what is the volume in the position, right? And if I hit my stop loss, what percentage of my capital am I losing, right? And then leverage is just going to be there to help you allocate less or more of the capital, this $2,000 over here to the trade, right? In order to pay the market to determine whether or not you are accurate with your technical analysis in this circumstance, while you're speculatively trading. right? And then you're going to essentially be looking to gain that, get that sort of next, you look at this and you go, okay, cool. Now I can either enter here, right? Or I can wait for the shift and maybe break up, right? Get back above those highs and then take a trade here, right? Where are you more conservative? Where's you currently trending downwards, right? So now in order to be able to take a trade here, you need to consider the chart. Over here, you're considering the chart probability of a move up from that level compared to that level is higher, right? So then you would be when you take your trade, if you're taking a chair, you need to bear in mind that price can still potentially fill the gap down here. Do you want to take it as a tight stop loss, in which case you can use a higher leverage, but with a similar volume, right? Or do you want to take it, do you want to be able to DCA into a position over here by maybe adding a bit here, adding on a very low leverage in order to then build a position on that sort of liquidity and on a potential liquidity sweep here to the lower sides, right? And then use the leverage as a tool, not as a strategy, as a controlling component in your strategy. Does that answer your question, Alex? Yes. So Patrick, this is actually I'm very, very degen. I go very degen, but with 50% of the portfolio. The other 50%, 60% is if I get everything really, really, really wrong, I know at least within I can go back, get a job, failed as a trader, whatever, go back and get a job, and then 5 to 10 years from now, at least that financial that capital that I've currently got is still protected, and I could continue to DCA and add to it. And then the other 50% is what am I going to do to be able to retire within the next 5 years, right? In the next 3 to 5 years, I want to be able to retire. I'm going to use that 50% as hard as I can to make sure that that's possible, right? Awesome, Alex. I'm glad it's helpful. More questions. If you join the whale school, Daniel, I think they will be talking about that in the coming weeks when that school starts. So yeah, get into the whale school, and I'm sure that they're going to be making some announcements along that way. Justin, I need to learn setting stop loss and leverage stuff because I didn't know any of that before. Okay, cool. So let me jump back here, right? So think about a trade. Okay, here's a trade that I gave on the whale room yesterday, right? On Thursday, sorry. So we had our entry down here. What happened is so where is your invalidation, right? So you get this break. Where's your invalidation going to be? Your invalidation is going to be essentially underneath those major lows, right? What is your thesis on the trade? Your thesis is that essentially we are breaking this trend to the downside, right? And we're essentially going to be making a move, changing structure from what was previously a sort of this downward trend, right? You had this downward trend, then you get that sort of you get the break to the upside, so you go and then you get that trend, you get that break, high low, right? And you look at taking that sort of shift in market structure, and your speculative bet on the market is that price is going to reverse here and make a higher high, right? So in order to take that trade, you also need to then look at where is my trade invalidated? Where am I going to be? Where is my speculative approach to the market direction invalidated, right? So you then, when you look at that, you're going to say, okay, cool. If price now breaks back below and creates a new lower low over here, then I was wrong. Price is not going, this break of trend is a fake out, right? and I'm not going up, I'm actually going to continue going down to make a new low and continue that trend. And then over here, maybe I'll make a shift, right? So that's your stop loss then should be where your trade is invalidated. Okay, depending on the size of the stop loss, that is going to determine what percentage of leverage you can use in order to be able to factor in that stop loss without getting liquidated prior to your invalidation, right? So this is why on a wider stop, you need to use lower leverage, or you need to use cross. But if you're new to trading, I would say stay away from cross, right? Then you're going to look at your risk to reward. Now, this is something that as traders, we determine over time as we develop our strategies, what is the minimum risk to reward we require in order to take a trade. For me, I need a minimum of 1 to 5 because of the strategy that I follow, right? Which we go into more on sort of how we develop a leverage trading solution that is essentially firstly going, how do we reduce risk in the trade once we're in it? Then how do we make money? And then how do we essentially hold for potentially higher levels and essentially scale those positions, right? So over here, you're then taking that invalidation, right? Now, let's say this is 10%. Now you're going to look at that and say, okay, cool. What is 10% of the volume in the trade? Not like that you've got $100, 10x, it's $1,000, $50, 20x, it's $1,000. So the $1,000, what is 10% of that? Okay, cool. 10% of that is $100. Okay, so now you apply leverage to allow for a possible price change of at least the stop loss, right? And then you look at that percentage of your volume as a percentage of your capital to know, I'm only wanting to risk 1% of my capital. Is this $100 equivalent to 1% of my capital? Yes or no? If it's no, okay, I cannot take $1,000 volume trade here. I can only take a $500 volume trade here because then I'm balancing my risk to capital within the rules that I have as a leverage trader, which is I cannot risk more than 1%, right? Quite often you might be quite often trading even a $10,000 account. You could find yourself taking 500, like, $50 10x positions, $100 10x positions. Even with $1,000 in your leverage portfolio, you still can take $50 or $500, $1,000 volume trades. And in fact, regularly, especially when you're building the account in the early stages, just so that you can manage that risk component. Because if, for instance, you take a 1% risk, right, to capital, you can lose 10 trades, get 2 right, and be back at break even, right? As soon as you start risking more, 2.5, 3%, then you've gone into the casino and you're putting money on red, right? You're putting money on red, you're putting money on black, because you can you're going to find that over time, yes, you might get amazing gains in the short term. You might go from like $200 to $2,000 super quick, but then without the correct risk management and without understanding this sort of component here in your trading strategy, then you're going to end up missing the line, and then you risking too much capital, right? And you haven't balanced, you haven't had a systematic approach to take money out of the markets as well, and then you end up into this sort of 10 losing streak, right? Now you're losing money, you get emotional, you lose more money, you get more emotional, and now you're trying to trade a $2,000 account, but actually the remaining capital in your account is back at 1,000, right? But you're unable to accept the loss of that 1,000, so you're still pretending like you're trading a $2,000 account, and also at the same time pretend you're applying risk to your trades as if you still have $2,000 in your account, and then you liquidate. See, and now you've gone through this entire process of 200 to 2,000, and then from 2,000 to 0, you've made actually no money because you don't have a systematic approach to take money out of the markets as you gain or as you hit certain targets, right? You're not rebalancing that portfolio, and then at the end of the day, you're now going to go and find another new $200 to start trading. So you understand that there's all these different components that then come into play as you building in that, you understanding where's that stop loss, where is my profits, where am I going to be taking my taking profits to de-risk the position. Where am I going to be looking to take profits to actually make money and prioritize the P&L for the month, right? So yeah, I hope that answered your question. Awesome, Justin. Thank you so much. Okay. So let me just jump into the chat. Okay. Justin, I've been trading. Well, I've been in crypto since 2017. I'd say I've been leverage trading for about 3-4 years, and I'm a full-time trader now. I'm a full-time trader. Basically I travel and trade. So spent the last few months in traveling the US, Bahamas, UK, going off to Japan in a few weeks, and yeah, take my laptop, trade, manage risk, pay a salary, and move. So yeah, that's just a bit about how long and what I do. Awesome, great, thank you so much. Okay, cool. Putting it on ADA. Gianluca, please just tell me what your give me a bit more there. I don't really understand what you want. Why would you throw your money on ADA? I don't know. I don't know why anybody would do that. I explained very, very well. Thanks, Justin. Okay, cool. Where's you're absolute DJ and legend? Good to see you here, bro. And all right, so we've got about 5 minutes. So what do you guys want me to cover? What's the last thing that I can go over for you guys? One more, 5 more minutes, and then I'm going to be handing on to the next set of legends to kind of take you guys forward into the next component of today's marathon. So one more question in the chat. I'll cover that, and then we can bring up the next speakers. Spicy sauce, thank you so much. I'll dig the name, and cool thumbnail, by the way. Very nice. Market manipulation. Okay, explain that a little bit more, Justin, and I'll cover it for you. What components of manipulation are you looking at? Oh, okay, cool. What mistakes do market manipulation and how it works? Cool, no problem. Mistakes that I still make, definitely. Okay, so we all make mistakes. Okay, I made a mistake here by closing my trade on a 1 hourly time frame because we had lost this moving average, but then hadn't lost the trend, and I was able to then re-enter the trade. Yeah, that was a mistake. Biggest mistakes that I make sometimes is to FOMO in. To still, you see something happening and you want to get in far before it's time ready to do so. And the lesson there is obviously patience, right? Also, when it comes to spot, the way that you deal with that is by DCA, right? You want to you see something that's gone parabolic, like let's bring up 𝗬, right? Let's bring up 𝗬. So you see something like this, you're like, it's going to continue forever. We actually gave a call on 𝗬 down here at about 220. But yeah, so you see this thing that's gone parabolic, you feel like it's going to go forever. You know, sometimes you still make the mistake of wanting to get in up here, right? Bear in mind also how I deal with that now is I won't buy into something if it hasn't had that 50% retrace. In the markets of price action, right? If you see here, we went parabolic on 𝗬, parabolic, boom. What happened? 50% retracement, creating that healthy graph. Okay, ready for the next move up. What's going to happen now? Needs to come back, retrace. So when you start looking at something, remember that you don't have to have exposure to everything to have exposure to the markets. You need healthy, good entries. So look for those 50% retraces in price action to start DCAing then you can DCA here, and you can DCA here, you can DCA here. You see that gap gets filled. Maybe we come back and retest that as a support, previous resistance, now support, right? Instead of going all in over here. Mistake that I used to make, something I work very hard not to do now, is by balancing the by prioritizing the portfolio and not getting into 100 different projects that are untrackable, right? Marvia is looking good. So yeah, that's a mistake I used to. I've been working very hard not to make. Market manipulation and how it works. Okay, so look at when you look at a chart, right? Now you zoom out onto the daily. You're going to look at and see where has everybody kind of gone? Where are all of the liquidation levels sitting? Okay, so if you were to look at, say, this chart here, now let's take let's come back to CAS because it's got a good example of it, right? So okay, so imagine you've got CAS here. Now, what happens, right? So think about the levels, okay? So price breaks through and retests at support and then goes parabolic, okay? What happens? People start longing. So you get all these longs that go long, they go long. Let me pull up this one. They go long over here, right? And then there's a bunch of people, a lot of whales jumped in and pushed the volume of the token up over here, okay? So that means that now, as soon as price moved off, broke this high, okay, and created a new high and went all the way parabolic like that, okay, then what happens is now all of the people that are trading CAS over here, they put their stop losses at 0.0796, right, underneath this low. I mean, considering that price has subsequently moved up 100%, right, they're going to put their stops under there, okay, and say, okay, cool, CAS is never going to come back below that area. Then what happens, right? And market manipulators will, what they will do is now, all of this massive gap over here is a lot of buy orders that got missed, right? There was not, quite often there is not enough liquidity in the market in a move like this to fill all of the buy orders, okay? So what the whales will want to do is the whales will want to bring price back down, right? So in order to fill their positions, get their DCA that is required within their portfolio in order for them to hold that position. They know that they cannot buy CAS at this level because it is overpriced, right? Like TAO currently is overpriced, right? They cannot buy it at this level, so they have to bring it down. So what they'll do is market makers will then manipulate the price, okay, by shorting it. So then they short the stock, right? You can start to see that your wicks to the upside are becoming a bit longer, right? And you can start to see, you see how we then break this support here, okay? We broke the support, okay? And we come back and we retest it. See here, okay? You see how we now essentially, this is the bulls. So this is all of the whales that are long down here at 7.9, right? All the whales down here, they've got their stops here. They want to hold CAS to $1, right? But they also don't want to risk the capital that they've got because now they've taken allocations in other tokens that are at risk. They cannot risk CAS and those other allocations. They need to manage the risk to capital of their entire portfolio, which is what the whales do and which is what I'm saying to you guys we need to do, right? So now you see that now they're going to push price, essentially rejects. See how we struggle. The whales push back. So this goes on, but you can see that slowly but surely, boom. So waited for that dude who was holding up the price of CAS to go on lunch. The guy left the office. He walked over the street, go buy a bagel, have a coffee, and they came and stopped him out. Okay. Now that happens so much in the markets. It's not even funny. Like you might have one guy out there who's holding the price up here. The guy goes to sleep. You know, it's like 2 o'clock in the morning for him. He thinks that everything's fine. He thinks that he's winning, and then they come and liquidate. They come and liquidate his position. So what they do is they'll short the stock, right? Push it all the way down and then market buy. So as you guys are all getting stopped out, right? As everybody's getting stopped out of their positions, they market buying your positions. And essentially, from the base of that candle all the way back up to the green of the following day, they've already made 50% on their capital by market buying your stop losses at a discount, right? So these are the kind of as you start to see that weakness in the charts, right? This is why from a spot portfolio perspective, I always love to have like at least 30%, minimum 30% dry powder allocation. So like if you buy CAS here, right? Then you get this sort of, you look for that sort of pullback, right? You get the pullback. Let's say you bought CAS here, you added, so now you bought 30%, then you're now 70% allocated, you go up, you get that double top, you take a bit of profits, okay? And then you're going to look at the charts and you're going to say, where is the imbalance, right? And so this over here is a massive imbalance in the charts, right? That needs to get filled, okay? What's going to happen? You need to make sure that price is going to come back here. So you could look at adding a little bit more in here, but then you say, where is everybody's stop losses sitting? Okay, let me add let me put a limit order also at that level to essentially buy CAS at a discount again, right? So then while the market is getting manipulated, use that manipulation to your advantage. You always have a little bit of dry powder to kind of gain that position. And as you push up, then balance a little bit back into cash. So now you're playing the manipulation instead of getting caught out by it, right? Then you see now what happens next. I'll just speed it up. All right. See, liquidation there. Price never comes back below those levels. They've trapped the shorts as well. What happens? Now you go up, you liquidate the shorts, you've liquidated the longs, you liquidated the shorts. What happened? And then what's next? Okay, cool. They've essentially just taken full control of CAS and they're moving it to higher levels. You guys, does that make sense? I think I'm just looking at the time and I might be. Hey, Shono. Awesome, bro. I was looking at my chart. I didn't even see you there.
That's okay, Chris. Love your work. I love watching your stuff, man, and in the wild room as well. Just phenomenal what you've done.
Thank you very much.
I'm just got YouTube on my phone on the side here. I'm kind of looking through some of the questions and the chats and that sort of thing. Somebody asked, like, is this market manipulation even legal? You know, well, at the end of the day, define legality. And I honestly think the best analogy I ever heard was on researching a couple of years ago. And a guy gave an analogy of, you know, back in the day, they used to use lead because for water pipes in houses and things like that, you know, because it's soft, it's easy to work with, it's durable, it doesn't corrode. It was a fantastic thing. And then all the clever medical guys came along and they worked out that lead's actually very bad for you, you know. So they start looking for new products or new stuff that they can use, and they find, well, you know what, copper is going to be really great for water pipes. And some insider tells his buddy, he says, hey, guess what they're doing? They're going to recommend changing all water pipes to copper. And his buddy's sitting on, say, 50 tons of copper at the moment. And, you know, it's currently trading at, say, $1 or $10 a ton, whatever, you know. And he decides, well, I've got this knowledge that they're going to start, copper's going to become more expensive because they're going to need it for these water pipes. I've only got 50 tons. I really want 150. How am I going to do that? It costs $10 a ton, right? So what he will do is create a rumor, something about copper, some sort of fake news, some sort of whatever, it doesn't matter. and he would he would sell 5 tons at $9.80, another 5 tons at $9.40 or $9.60, you know, another 10 tons at $9.20. And you will see on the copper chart, this price just starts tanking, and he can sell 30, 40 of his 50 tons of copper just like that. And his price is ranging that he's sold at is between $9 or $10 and say, you know, $8.80. And that creates panic in the market. It gets everyone's emotions fired up. Anyone who's holding copper goes, they haven't even seen the stuff yet. They start selling theirs, and they're selling it down to you know, $6.50, $5.40, $4.80. The price will just drop. And this dude that was holding 50 tons and sold it at a rapid rate between, you know, $10 and sort of $9.80, now snaps up all that copper that people are panic selling. He takes the same money he had that he got for selling it at $9, and he buys up 100 tons of copper at $5.
Sure.
That's how they do it. If you have enough copper, if you have enough Bitcoin, if you have enough Casper, as Chris was just going through, you can do that. And someone asked, is it just one person, or is it, you know, do people get together? A lot of the whales know each other, dude. They do over-the-counter trades that don't show up on Binance or on Bybit or anywhere else. A lot of them do know each other. So, but that effectively was the best analogy I've heard on how to explain that sort of market manipulation.
I think that's a great one. Thanks, Shona. I'm gonna jump out and leave you to cover it. What session are you gonna be? What are you gonna be going over today?
I basically it was just an idea I had about 6 weeks ago. I fell into a rabbit hole, basically. I feel it's the first time I've ever presented this. I've been researching, but I'm going to be covering essentially, is there another ecosystem like Solana or something else that can knock Ethereum off its perch, you know, from the number 2? Ethereum's been number 2 since it came out. Is it possible to get knocked off? And I thought, well, let's find out. Let's do a bit of research, and and I tell you what, the deeper I dive, the deeper it goes. So I'm kind of nervous about this. I haven't presented it before, but I've just played around with it. I feel it, you know, I just wanted to share sort of a little bit. And I thought I'd do something different, you know, something that hasn't been up. So
yeah, big man. Well, I'll leave you at the stage, but I caught parts of your margin trading session last night as well. I mean, dude, very cool. People don't cover it enough. It was an epic session. So I leave the audience in your capable hands, and as one of our OG best trade, like literally like best mentors in the whole of the school. So yeah, awesome. I'll be in the background. So if you need support, just have a good one.
I will. Thank you very much. I will. Okay. I'm going to entire screen. Okay, I'm going to put that up. David's going to put it up. I need to turn another light on in here. Give us just a second. All right. Hopefully it's going to be a little bit better. I hope so. Yeah, as I was just telling Chris, this is something that got me thinking, and the reason it did, there has been a bit in the news. You know, we've got aging populations. We've got our baby boomers all starting to retire, and those sort of things, and we got a lot of them buying mobile homes, becoming grey nomads, traveling with their countries, doing international travel, and that sort of thing. And to get crypto is pretty new, right? It's 15 years since Bitcoin came out. Shorter period than that since Ethereum. We've seen a massive, massive jump in Solana over the last 6 months, and you hear of so many times, you hear on whether it's YouTube or Twitter X or anyone in crypto, they're saying that this is the next Ethereum killer, you know, and it just got me thinking, can something kill Ethereum? We'll see. I don't know. So I'm going to play this little video here quickly. It's basically the companies, and I've got it on double speed because it's about an 8-minute video. So I have got it on double speed, but it's essentially since 1970 till now, if it'll play. Yeah, I have got it on double speed. And it was playing before when I tested it. Let's go. Oh, that's inconvenient. I'll keep chatting while it's loading. Essentially, I just looked at the top largest companies in the world by market cap. And come on, let's play. I might have to reload this. Here we go. No, it's not. You know, and I've tested this a couple of times in the last hour. You would not believe. I started this deep dive, like I said, about 6 weeks ago. I started building this presentation about 3 weeks ago. For this to happen is very disappointing. But you saw, if somebody told me in the 1970s, buy IBM stock, you know, it went crazy. If somebody told me in the 90s, buy Microsoft stock, it went crazy. If somebody told me in the early 2000s, buy Apple stock. David, I'm going to stop sharing the screen for a second. Okay. And I'm going to see if I can reload this. If I could reload this. May have a bit much going on the internet. Give me a second. You can prep as much as you want, and sometimes internet goes down. We just had a massive, massive storm here, and it may have affected the internet lines. Okay, let's share again. May have an issue. I've just reloaded. Okay, here we go. We're playing at double speed. So essentially, no, it's not playing. Okay. Essentially, you see how you have this tech revolution, IBM computers, that sort of thing, come up, and they take over, and then you get through the 70s or 80s, you start getting the all the energy companies, the oil companies. You see Shell, ExxonMobil, Chevron, all of those come in, and from there you end up getting Sorry, guys. You end up getting tech companies coming in, and then like you'll see companies like Microsoft and all right, we're playing at slowly. Companies like Microsoft come in, and then from that you see companies like Apple come in and take over. There we go. So we're up to 1982. So it's playing now. I might see if it'll go on to full screen at all. That might be what the issue is. But like I said, it was playing before. You see these different eras, you know, and it's going to depend. The companies that succeed are the ones that are providing the right product at the right price at the right time, you know. IBM, 1983, they were up on the top of the chart there. They were the largest company by market cap in the whole world. And they are nowhere near there at the moment. They're not even in the top 20 or 50, you know. It's all about providing the correct product at the right price when there's a demand for it, okay? There's absolutely no point in doing no, it's not going to play, guys, sorry. Absolutely no point in doing a product that's a great product at a great price if nobody needs it, right? It's going to be like, I'm going to sell, I've got this great design, I'm going to sell horse-drawn carriages in the 21st century. Nobody's going to buy them. You're not going to sell them. You have a new era of electric vehicles coming out. You see how Tesla and those sort of companies are taking over and you know, increasing in market cap and really taking over the world. So this kind of prompted, and I'm really sorry that video didn't play. I even downloaded it on my computer, and I had issues with that copy as well. So I started looking at who's going to be the king of the ecosystems. I don't believe, there was another video there I had trouble with where you saw the top 10 assets globally by market cap, and how at the moment gold is probably number one at you know, whatever, hundreds of trillions of dollars. And Bitcoin in the last bull run came up into that top 10, and it's dropped out again, and it's just peeking its way back up in, you know. And how much further is going to go? We'll see. We'll see. Can it knock gold off the perch? I don't know. Can Ethereum or any other ecosystem knock Bitcoin off the perch? I don't think so. I think it's going to remain it's going to remain a staple store of value, just like gold has been for the last 100 years. I think Bitcoin in the cryptocurrency and digital ecosystem is going to remain that store of value. And gold has been number one in market cap for many, many, many years. It's going to take a very big revolution to knock it off there. And I think Bitcoin is going to have the same standing in the cryptocurrency world that gold has had in the financial world for the last very long time. Okay. But that number two spot, I think, is open. And that number two spot in the fiat world has changed a number of times over the last 20 or 30 years. A number of times. You know, again, and we just look at companies that were up there in the past. Think of AOL, America Online. They were the largest internet company in the world. Where are they now? They're some subsidiary that was bought up by someone else. Look at Blockbuster Video. You know, whatever happened to Blockbuster Video? Revolution, digital revolution. Netflix happened. First of all, DVDs, and then Netflix, and then live streaming services. You know, technology changes, demand changes, And part of you got the ease of use, the convenience. You know, I no longer have to jump in the car and go to Blockbuster to get a movie for tonight. I simply click on do a couple of clicks and I can watch Netflix. I don't have to, the delivery of Netflix, they don't have to, first of all, print that movie onto tape, package it in a cassette, and send so many copies to each store. It's instant delivery online. And the cost of that delivery is marginal compared to the cost of producing one of those tapes, okay? It's marginal compared to the cost of actually distributing those tapes across the world. It's the way it is, you know? So when we're evaluating ecosystems, and this is, like I said, a deep dive, and you'll see some evidence of it in this presentation. But when you look at them, the traditional way of valuing which is the biggest or the number one ecosystem is generally just by the total value locked, okay? And we can look at some of those metrics in a bit, but you do need to weigh up all aspects of your ecosystem. You know, you need speed, how many transactions can I do? The scalability. As the user base grows, are they able to scale up? You know, right now we've got, in our ecosystem, say we've got 500,000 individual wallets. They're all active daily, or 40% of them are active daily. What happens with the network effect, where we go from 500,000 to 500 million wallets? What then? You know, can we scale it up? And then you got the security side of it. The security side, I mean, how many hacks have we had? We've had our medical system here hacked, people stealing information. We've had banks hacked. We've had Ledger, and we've had many projects and companies hacked, even exchanges hacked. It is so, security is so important, right? Cost of delivery is another thing, or cost of transactions. You know, I'm going to cover this in a little bit. They all important factors to consider as a blockchain. Your decentralization, and as by the slide here, you can see that there seems to be a bit of a balance. You have to find a balance, because I think the blockchain that is going to get the correct balance between these aspects, the speed, the scalability, the security, the cost, okay, is going to be the winner. They're going to be triumphant until someone can come across and do it better. Right now, Ethereum definitely has the size, the distribution network, the most number of users, the most number of wallets. Are they all active? Not necessarily. There are others that have more daily users than Ethereum. The cost side of Ethereum is an absolute killer, and I'll show you some examples of that. So, and even the balance between speed and scalability, and security and decentralization. The more decentralized something is, okay, the more split up. You've got hundreds of little nodes around, or thousands of little nodes. But and that is secure because you need a majority vote to get a transaction, or a majority agreement to get a transaction approved. But getting all those approvals from all the different nodes slows down, and that's why speed is on the other side of the scale. And then so security as well. As soon as you take away that decentralization, make it centralized, you start opening up to one single port of entry. That in a centralized system, you only need one little flaw in your code, and it leaves a backdoor for hackers. So you lose the security, but you're able to scale it up quicker. You're able to scale it and handle more transactions by increasing your hardware. So there is this balance here, and it's certainly I obviously don't have I don't have an answer to this. You know, I'm just an end user that in the space, you know. And at the moment, so traditionally an ecosystem, as I said, is valued by its total value locked. And the rewards at the moment for staking Ethereum, or you actually have to stake Ethereum in order to become a validator, and you get your returns and you become part of the network, one of the people that approves transactions. Number 2 on this list, Tron, TRX, that surprised me as number 2 in the total value locked. Other than if I'm sending money or you know, money from one exchange to another, or to a DeFi wallet or something like that, I generally use the Tron network, the TRX network, because it's super cheap. But it's about the same price as XRP and the Binance Smart Chain at the moment, you know. So it really surprised me there. But Ethereum has like over 60% of the total value locked out of all the ecosystems. It's absolutely phenomenal, and you can see how they pop up here. I might change this presentation so that let me go, because my face is going to block the bottom left. If I change it to that, okay. Oh, David's already changed it. Let's go back to slideshow. Thank you, David. He's an absolute star. I was going to change this so that my face sits here and covers these, but let's carry on. Cool. Change the view slightly. There we go. Okay, back to the slide we're on. So you can see here that there are quite a few very well recognized ecosystems, and these are the ones by total value locked. You've got Tron in there again, but also Binance Smart Chain is massive. They have the massive amount of data users. Arbitrum is growing rapidly, you know. You got your Solana, your Bitcoin. People are staking Bitcoin, and this number of value locked, I'm not sure how they measure it, but it's been increasing at a rapid rate since these ETFs came out. And you've got some newcomers to the whole system as well here. You know, you've got Base, that's the Coinbase chain that has only, it really was only launched within the last 12 months. I don't know how much of their value locked is actually held by Coinbase themselves, you know. But as we go through, this is the traditional way of ranking ecosystems. And after watching that clip that you guys didn't get to see on how different companies come in and change position on those lists, I thought, let's look at some other metrics. Let's look at what happens if we start looking at how much they've changed in the last month, which are the fastest growing. And that took me down another rabbit hole, and I started looking at things like, well, wait, hang on, a 1 month's change of 3,486,000%. Are you serious? But their total value locked is only $156,000. Okay, something different here. You've got something, a network called Mode. 431,000% increase in total value locked in 1 month. And they've got 52 million in there. Right? So I did start looking at these sort of projects, and there's a few that are up and coming, recently launched, recently had airdrops like Archway. Down the bottom, number 17, you've got the hetero, which is HBAR. They've been around. They've been on. You know, you've got MVC here, microvision chain. If anyone's heard of the token space, it's a phenomenal project. So Bifrost has come up, is starting to get mentioned. Stacks has been around a bit. So you start looking at these. I did have a massive. This is how it became such a rabbit hole for me, because I went, what is FF? I've never heard of it. Never heard of it. You know, so I went to look through it, and you'll see in a couple of slides' time. I also had a look at, so yeah, okay, they've got total value locked, but how much is that total value locked compared to their market cap? And so I thought, okay, market cap divided by total value locked. Let's get some other figures and rank it from number 1 to number 2. And this is interesting because there are certain tokens here that come up a lot. And I took these 2 screenshots not more than a day or 2 apart. Okay. I went through. Here's the slide. What is FF? I have no idea. So it's something called 𝗓𝗟𝗓𝗏. It's been around a while, but what absolutely shocked me, and guys, don't get into this, but 𝗓𝗟𝗓𝗏, when I went to look for it, I found that it had an all-time high of $22 in, it was about 10 a.m. this morning. I went to look what it was while I was putting together or reordering my presentation. And it had an all-time high of $22 back in September last year. Okay. This morning at 10 a.m., it was 16 cents. And I looked at the previous top was 15th of February. That's 14 days ago. Oh, sorry, 9 days ago. 9 days ago was at $8.88. This morning at 10 a.m., it was at 16 cents. I mean, this is bizarre. So I went to try and get another metric on it just before I came online now. And 6 hours later, it's gone up from 16 cents to $7.31. That's a 4,400% increase in 6 hours. That is crazy. I don't know what this project is. I don't know what 𝗓𝗟𝗓𝗏 is. I do know that the trading volume for 24 hours is only 18,000. If you're thinking you're going to put 5K in there and withdraw 4,400 times or 440 times that, it doesn't have the volume to do that. Okay. There would be lots of these types of tokens, but to give you some idea on how dangerous they can be, just remember these things go the other way as well. 9 days ago, you might have bought it at $8.88 thinking, I'm going to go to $22. And a week later, it's at 16 cents. You know, these tokens are dangerous, but this is one of the little rabbit hole things I went down when doing this. You know, it's bizarre. And it took me so much longer to put this together than you ever would have imagined because of all the detours. Okay. Right. And I also, so when I saw that, oh, hang on, that's changed a lot and certain things are different. These 2 screenshots were taken about a day apart. And you'll see here that, okay, market cap divided by total value was very different. You got your mainstream ones here. All of a sudden, it wasn't even a full day. And now you've got Polkadot at the top where Somalia was before. Celestia is still up there. But some of these, when you take the market cap divided by total value lock and you look at, you'll get a misreading because certain projects only have a market cap of, 5 or 1.5 million or 500,000. And when somebody stakes or one of their directors or someone in the project stakes 5,000, it massively pushes out. So it's possibly not the best metric to use. But once again, I was just investigating and going through it, So it was very interesting and a very, very, a very bizarre experience. When I looked at, okay, let's look at who's doing the most volume, 24-hour volume. And I would love to have looked at 7-day volume or weekly volume, or even monthly volume, and compared it on a chart. I couldn't really find the right metrics and the right visual display to do that. Okay. But it's no surprise that volume-wise, Ethereum is still at the top. When you look at the difference between Ethereum in the last 24 hours and Binance Smart Chain, you're looking at a 1 to 10 difference there. Ethereum did $45 billion worth of volume in 24 hours. Binance or BSC, 4.2 billion, 1/10. And then you got Solana, which is less than a half of that, But there's other notable mentions in there. And there's other projects. zk-Sync is building and building. Thorchain Rune's been around a while. You've got your Starknet and Base is there again. That's your Coinbase thing. Down on the bottom of that list, Mantle. Mantle is a new project that's launching and getting massive growth. So it'll be interesting to see what happens and whether these other projects are going to move up and down the chain. When you consider that during the last bull cycle or bull market 4 years ago, at this stage, this close to the halving, Solana wasn't even released yet. Or it was just being released 4 years ago at this time. Or at this we're about 66 days from the Bitcoin halving at the moment. At this stage of the cycle, Solana, if it was already out, was baby brand new. And look where it is now. It's unreal. So it's possible that in the top 10 in 18 months' time, you may have a token or ecosystem you've never heard of yet, and it might be there. And this was part of my inspiration in diving into this and looking at what it's following narratives. Looking at what is going to be the demand. And in that video I had earlier you had your oil demand, then your IT demand, and then your distribution demand, and then your companies like Alibaba and Amazon and all that took over. And it's quite fascinating to watch and research, unsurprisingly, again, I thought, okay, but for something to really sort of progress, it needs to generate income, right? How do they generate income? They generate income from fees. Now, unsurprisingly, Ethereum is again ranked on top. They took, in the fees, this is the right-hand column down here is the fees, $14.36 million worth of fees in the last 24 hours. Now, you compare that to all these new Bitcoin transactions coming with the ETFs and that, and they did 1.6 million. Tron, 1.56 million, number 3 on the list. Again, Tron. Where's it coming from? Binance Smart Chain, 549,000. And you look down that list, and this is just in the last 24 hours on the fees charged. And I don't know about you guys, but it got me thinking about fees, right? It really did, because I got little bits of render in a couple of different exchanges, and all I wanted to do was consolidate them because I've been sort of farming my render a little bit over time. And I decided I wanted to essentially consolidate and send my render from one exchange to another. And I looked, and these are so the first transaction, the picture on the left here, for me to send 14 render to another exchange, the fee on this, okay, was 5.25 render. That is more than a third of my render. And the only withdrawal, the only chain option for me to send it was Ethereum, ERC20. So I'm going to lose more than 35% of my render if I send it at this time. I mean, I don't know about you guys, but I've stopped using Ethereum. There are other options. You know, I can change this to USDT, send it on the Binance chain send it on the Binance chain for $1, and then buy my render back there. You have options to stop using Ethereum in a lot of cases. The gas fees do change. A couple of days later, I was able to send it and looked at it, and yeah, the network fee is still 1.91 render. It is still more than 12% of my actual amount I'm sending, you know. And you look at these F3s, sometimes they are absolutely nuts. And a lot of the transactional volume that you saw in those 24-hour volumes and that sort of thing, a lot of those they're definitely boosted by the layer 2. The EVM is this Ethereum virtual machine. You've got your layer 2 projects on there, and you cannot deny Ethereum is developing all the time. Vitalik is continuously doing upgrades. We had our Shanghai upgrade recently. We've had upgrades that have allowed people to unstake the Ethereum, because originally it couldn't be unstaked, and you had to have a minimum of like 32 Ethereum or 21 Ethereum, whatever it was. There's been a couple upgrades recently, and the merging into Ethereum 2.0 has incredibly amplified the number of transactions it could do. Ethereum was super slow. It could only do, you know, a couple hundred transactions a second at best. Now, although they can handle those transactions, it still takes 13 seconds plus to validate them. So it's still slow compared to a lot of other projects. And it's encouraging for the ecosystem to see that they are continually developing, they're continually building, they're continually upgrading. It is encouraging to know, you know, and they'll probably keep their perch longer because of it. I do believe at some point you're going to run out of options to patch and modify and add on. You know, they got other forks happening. So the 𝗂𝗏𝗏𝗏, or however you pronounce it, fork is scheduled for March, end of Q1 this year. That'll be another interesting one if you do a bit of a dive into the ecosystem. It will be interesting, but again, will the fees eventually kill ETH? I've stopped using it. How long before other people stop using it? And how long between we're talking about the new people onboarding, the new active wallets, the new people coming into the system who don't know how to use DeFi or how to use those other systems. You know, they have no option other than to use it at this stage. The first wallet most people get introduced to is MetaMask. And it's initially Ethereum based. It's got other chains on it now, but it is massive. Okay. You look at projects like I love Cosmos. I really love the Cosmos hub, Cosmos I'm so bullish on this ecosystem. I think it's really undervalued as the interchain operability there. And this is a great example, number 2 on that list after Injective. DYDX actually recently moved from the Ethereum chain into their own blockchain, and they built it on the Cosmos network. Okay, you got some huge ones. Celestia tier is data availability. They had another massive airdrop. You have chains. I think it's Injective is actually built as a finance chain. It's built to replace essentially the old SWIFT network, the Visa transfer network, the previous banking system that took weeks to transfer money from one place to one country to another, or days to transfer money from one bank to another, or even sometimes days to transfer between two different accounts in the same bank. You know, they're getting a lot better. And even, well, sending through a certain protocol in the banking system here in Australia, I was sending money through a pay ID system, paying to an email, to a local exchange to onboard fiat Australian dollars into crypto. And for a while, they would happen instantaneous, within 2 or 3 minutes, you know. And the last few transactions, all of a sudden, with the fiat system clamping down and getting worried on crypto, the last few transactions have taken more than 24 hours to happen. You know, it's crazy. It's absolutely crazy. You know, and there's a lot of these new ones coming up, Stride and Nomic. Kujira, most of you would have heard of. Akash is one of the AI type narrative tokens. These are all built on the Cosmos ecosystem. Now, these rabbit holes I've been going down onto, you just took up so much time, and I really wanted to expand on these other systems. You know, the Polkadot, essentially, it's super fast, and we haven't heard a lot. I think the last major news that I ever really remember about Polkadot was their parachain auctions, and some of us took part. I locked up a whole lot of DOT in the auctions on different projects like Moonriver, and they locked for 2 to 3 years, you know, and they're there. And Polkadot's not, it's worth less than half of what it was when we locked them up. And hopefully they come up, but you don't hear of it. But they have a fantastic team. They have the method they use of essentially being a relay. Makes it really easy, similar to the Cosmos ecosystem, where their IBC interoperability technology allows, you know, the D1EX to talk to Pith, to talk to Celestia, to talk to all of those. It makes it really easy. Polkadot are doing a very similar thing from a slightly different perspective, where they've got the central hub and these little spider chains that kind of dash off the side, you know, and they become a relay and an interpreter almost from one blockchain to another, and it makes those interchain operability really easy and fast. Solana's been so hyped up; it's so up there. It is incredible. The recovery after FTX, when we saw Solana at $8, it's just dropped below 100 today, but getting up to $120 after being at $8 less than a year ago, or just over a year ago, is incredible. And they were singled out by a couple companies like Visa when they were investigating options for their payment networks and stuff. They currently offer up to 24,000 transactions a second. The theoretical side of it, I believe, they can get up to 710,000 transactions per second. It's not proved yet. It's not able to do it yet. But in theory, that's what they can upscale to. And the closest blockchain, I think, at the moment, and just from a brief search to Solana, I've got a couple notes here. What have we got? We've got Ethereum 2.0 is essentially 100,000, but their validation takes a lot longer. You've got relays or chains like Cardano at 1,000 per second. you've got quite a few, like Atom, Cosmos Atom, 10,000 transactions in 1 second. When you start comparing these chains to Big Daddy Bitcoin, I think, is about 7 transactions per second that it can run. Okay, to jump from 7 transactions a second to 10,000 or 24,000 in the case of Solana, 15,000 in the case of some of the other projects, like I think Tron can do up there, 𝗓 and 𝗪𝗏 are up there, BSC, Binance Smart Chain, is up there, and there's a lot to assess with these chains. And I think every one of these projects that have been on any one of these slides, as well as some that are so new we haven't heard of them yet, they all have a shot. When you look at the bigger picture, the long term, they all have a shot. You get certain chains, like Binance at the moment has more daily active users on their chain than any other chain. It's cheap. A lot of people, I've even mentioned it when I was talking about sending tokens from one to the other, or from one exchange to a wallet, or from one wallet to a different wallet, or to a friend. You know, they have the largest amount. AVAX, gotta love AVAX, huge gaming ecosystem, and it's only growing. You know, there's so many projects on here that I couldn't even mention that yet. And you know, Immutable X, there's a lot of blockchains that are built for specific use cases. You know, the Injective is, like I mentioned earlier, is built for finance. They are built to essentially move the fiat finance system onto the Injective protocol. It's one of their main aims. You know, TRX, Tron. I hadn't thought of Tron other than using it as a network to send funds. I hadn't really thought of it for ages, you know. And to see that it's the second highest total value locked out of any token aside from Ethereum was quite. I always thought that Ripple, the Ripple Ledger, Ripple Labs, was going to be the one. Is it possible Tron could be their biggest challenger, or is there something new coming? It'll be very interesting to see as we progress along, you know. And yeah, I'd love to see in the chats. I've got 𝗟𝗟𝗏𝗏 says they love Binance too. I saw somebody earlier said they love the Cosmos ecosystem. Absolutely, they're doing huge things. Absolutely huge things on Cosmos with airdrops and new projects launching and that sort of thing. I'm going to scroll through here quickly, see if there's any other questions I missed while I was chatting away to the camera. Scott actually said he's new. He agrees on both Cosmos and Injective. Yes, Injective is part of the Cosmos Hub. You know, if you guys haven't gone it, check out 𝗘𝗘𝗄𝗏 wallet. You can stake from your own self-custody staking. You can have your tokens in your wallet. You lock them up for 21 days, but they actually stay in your wallet. It's not like some of these projects like in the past, like Genesis or Voyager or these that have failed and people have lost all their money, or waiting on a few cents on the dollar payback once all the lawyers and all that stuff has gone through it. You know, just having a look. I think that was my last slide. So it's yeah, Rialto says they should avoid coins, Ethereum coins as well. Absolutely. You know, it's a trap to some. Yes. Integrity Design said, yeah, 29 Guai right now. They are nuts, but that's half the price they were 6 hours ago. Yeah, it was half. 29 Guai is half what it was about 6 or 8 hours ago. Okay. Cool. Waz is in here. So that's pretty much the end. Manta is very hot. We saw Manta on one of those lists I went through, guys. I'm going to stop sharing my screen here. Well, what I may do, I'll tell you what I'm going to do quickly, is I'm going to show you guys. So a lot of this research I did was done on 𝗤𝗙. If it loads, we'll see. Okay, you can get a lot of this stuff. All these 𝗤𝗙 is a great tool to use, and you can even look at sort of Bitcoin side chains. Okay, and you can isolate that, and you can look at, okay, let's look at what we're going on here. We've got rootstock stacks has been around a bit. Map protocol, interlay, core, nos, Rolex. There's a few around there. You can actually isolate it. Look at the parachains will be your parachains are going to be basically your Polkadot stuff and those sort of side chains. EVM is Ethereum virtual machine. It's going to be your layer 2s on Ethereum. I see Matt and Beth have joined me. Hello.
Hi.
Hello. How are you, mate?
Hello.
I'm good, thanks, and you, Matt. Your roll-ups, ZK, your roll-up type stuff. We've got Manta. Look, somebody just mentioned Manta in the chats there. But your Arbitrum, Optimism, these roll-up type solutions, and ZK, another massive one. So this guy's 𝗤𝗙, if you haven't heard of it or used it, I don't have an account. I'm just logged in. I don't, but there is so much stuff. If you really want to dive into these and research projects and that sort of thing, it's a fantastic tool. There are so many free tools all around there that you can use to dive down a rabbit hole, get lost, So, yeah. Awesome. Matt, Beth, what do you guys got for us? Oh,
awesome stuff. How about
you got a sniper? You got a sniper shirt.
I do.
Dude,
because I'm a sniper.
And a banter shirt from.
Yes.
You know what? I'm feeling neglected now. I'm one of the OGs, and I've never got a
You're
shirt.
the OG. I got this at the Bitcoin conference. That's how I got this last year in Miami.
Yeah. You know what? Me getting a shirt is just like we're running on the Ethereum network. The cost of getting it from Ethereum to here is worth more than the shirt. I'll wait until Ozpost, scoot across to Tron or to XRP or something.
You are so funny. It's 3 o'clock in the morning here, so yeah.
Nice.
Mm-hmm.
Nice. So anyway, what do you got for us, Matt? Beth, what are you guys going to do?
Amazing things.
We are doing a thing on dexes and screeners, so
oh wow,
yeah, it should be pretty cool.
Mm-hmm.
Hopefully, we haven't done it before, so
this this one should be a nice lead up into that dexes and screeners, I think. And
yeah, absolutely, mate.
This is the first time I've done this presentation that I just did, and we'll refine it over time. But
amazing.
Yeah, I'm looking forward.
I missed the beginning. I have to go back and watch the beginning because I slept for like 45 minutes.
You missed all the technical difficulties.
Actually, didn't have it this time. It was funny because earlier I had like 3 different StreamYard links open from being on so many shows, like bringing helping other people. But yeah, team player.
Yeah, fantastic. Awesome. Well, I might leave the stage, leave you to it. I'm going to go run to the bathroom and let you get your introduction started. And I'm going to come sit and watch. Definitely, it's something. Yeah, looking forward to it, guys. You guys are such rock stars.
Thank you.
I'll leave you guys to it. Thank you.
Yes.
Cheers, Matt.
Thank
Cheers,
you, sir.
Beth.
Thank you. All right, guys. What I'm trying to do. Again, those of you that tuned into my my thing on Wednesday, my AMA, I've got a new laptop. And of course, this is a different piece of streaming software, and now I'm having issues sharing my screen. So just bear with me. I've even got my nerd glasses on just so that I can get it sorted correctly, you know.
Do you see the present button right next to Leave Studio? You just click that.
Yeah. No, that's not the issue. It's getting PowerPoint to share. So
no worries.
Yep.
So how's everybody doing out there? I think people want t-shirts. Everyone wants the t-shirt. So yeah, again, I got this t-shirt last year at the Bitcoin conference in Miami. And since then I have probably gotten infinitely better in trading. I think when I saw Dylan and Craig taught me how, and at first I was looking at charts, they looked like Chinese to me. I had no idea. But now I do. Very excited. So
okay, this is terrible because no matter what I do, it doesn't let me share my screen. It keeps giving me a warning. So
the only thing I can think of is if you wanted to email it to me and I can try and do that. I don't care if everybody gets my email. It's 𝗓𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏 Okay. That'd be great. Let me go to what's up. I'm gonna minimize the screen for a moment. It might be too large of a file to what's up. I'm just saying.
Sorry, guys. This is so like unprofessional. It's ridiculous.
We apologize. It's a pretty big file, but the information we have is priceless. The worst case scenario, you can just open the PowerPoint, maybe on another device, and just talk. We'll talk from it. It's a pretty big file, so we're going to cover DEXs. We have different explanation of wallets. How do you move from one wallet to another? What the different wallets are. So worst case scenario, I'll just I have my part of the presentation on the screen as well, and I can put it on another computer.
All right, Beth. I've just sent it to your personal WhatsApp. Okay.
Yep. I'm going to see if I can get it right now. Let me see if I can go share my screen, and I'll be right back to you guys. Let's see.
Anyway, guys, what we're going to talk about is DEXs and screeners, and we thought that it would be an interesting topic to cover because now that the bull run has started, you may want to get your crypto, off of those centralized exchanges like Bybit and Binance and MEXC and Coinbase and things like that. Those ones that are run by a company essentially, and be able to put them onto a decentralized exchange, which is what the term DEX stands for, and it gives you the ability to also store then your your crypto in an external wallet as well. So you have the keys to your wallet. You've heard the saying, not your keys, not your crypto sort of thing.
Mm-hmm.
So that's the aim of the game today. There are a lot of advantages to being on these DEXs, and that is A, that added security of having an external wallet, and B, you can also still trade on them. You can swap in and out of certain tokens and things like that. Have you got it sorted out?
I'm just downloading it. Give me one moment. It's a pretty big file, so it's taking me a bit to download it. So give me a second. I'm so sorry. It's taking me a little bit to download it. Okay, let me minimize this. No, I can't see you guys. Can't see you guys at all. Oh, for God's sake. Apologies. I may have to go back out. I can't see. You guys can hear me, right?
Yep.
I just can't
see
it. I can't. I apologize. I can't get it over. I'm trying.
It's allowing me to share my browser window. It's just not allowing me to share the actual.
Same. That's
it's
just
just not allowing me to share the PowerPoint presentation. But anyway, let's just crack on anyway. So basically, yeah, what we're going to talk about is we're going to talk about what is a DEX. You know, how is it different to normal exchange that you use? We're going to go through what is a screener. We're going to talk about examples of decentralized exchanges. We're going to go through examples of the screeners. We're going to go through, you know, why you would use it. We're going to talk a bit about the wallets associated with them. And then the idea is, again, if we can get our screen to share properly, we'll show, you know, how easy it is to transfer funds and actually do transactions. You know, if you want to swap tokens on these decentralized exchanges, Beth's created a couple of burner wallets that have just a couple of dollars in them, and we'll actually go on to one of these decentralized exchanges and actually show you guys how easy it is to actually do it, and it's not as, you know, potentially as daunting as you guys might think. And then if we've got some time left over, we'll go through, you know, some questions for you as well. So maybe Beth, if you've got the presentation at least in front of you, at least you can sort of follow along as well.
I do. I'm trying one more time as we go along, but go for it. Yeah, I've got it with me. I'm seeing if I can find it.
Cool. So anyway, guys, like I mentioned, a decentralized exchange is it's a blockchain-based app, you know, that coordinates trading of crypto between, you know, coordinates like, you know, swapping and trading of assets on a large scale, you know, with many users on it. So it's kind of like it's like the normal Binance and those sorts of things, except it's now done through automated algorithms instead of the conventional approach where it has, you know, an intermediary between buyers and sellers. So the DEX follows an algorithm. So basically these are called smart contracts, all right? So they're pieces of code written on top of the blockchain network. So for example, there's Ethereum-based decentralized exchanges, there's Solana ones, there's Phantom, there's, you know, Shauno talked about it just before with Cosmos, you know, all that sort of thing. So there's these different apps that you can use that run with smart contracts. So basically, the idea is that if certain parameters within the code are met, a transaction is made, okay? So it makes it more secure. There's no middleman and that sort of thing. So that's the beauty of it and the advantage behind it, okay? So the idea is that it's about decentralization, which is removing the middleman from it, okay? You're just dealing with code and therefore it'll occur the same every time, okay? Now, the other thing is that the DEXs don't offer the custody of the assets like a centralized exchange does. You actually hold your assets in your own wallet. So you have your own wallet, which we'll go through as well. And that is directly connected to the decentralized exchange. And you take your wallet, which has, you know, your bag of money in it, basically, your bag of crypto, and you can do stuff on it. DEX is also open up to the world of what you would have heard is DeFi, which is decentralized finance. So it offers a whole lot of other options to you as well, like staking for rewards, qualifying for airdrops, and all that sort of thing. We're not going to get into that today. The idea behind today is to keep it simple and just kind of tell you guys a bit about it. And then if we get some nice feedback about it, other than the shitty effort of not getting this presentation to show, but you know, basically if the content's if the content's what you like, perhaps we will, you know, expand on it, you know, on the next 24-hour or something like that. Okay. So that's sort of a brief overview of what a decentralized exchange is, you know, in a nutshell. Now, a screener. So sorry, let me just, before I go on to a screener. Now, DEXs are essentially, you can find where the decentralized exchanges are. I've got this screen here of CoinMarketCap, okay? Now, I've just gone into a section called products. Was it products? No, it's exchanges. And then I went into DEX. Okay. Now on there, it's listed all the DEXs that are out there. You see, I'm scrolling down here. There's just an endless number of them. If, for example, you are interested in one for Solana, Sean mentioned the popularity of Solana, how well it has survived over the last 12 months from all of the FTX issues. You can search for them by chain as well. So you can click on Solana, and now all of a sudden there's 4 Solana ones listed here. You've got Orca, Jupiter, Radium, and Lifinity. Okay, now you can also look at them and go, okay, what's the trading volume? That gives you a bit more of an idea on the level of liquidity on each of these exchanges, and therefore, you know, the stability of them and things like that. Okay, so that's sort of what the DEXs are, how you can find them, and then when we have a bit of time at the end, we'll actually go, like I said, we'll go into these. So Beth will go into them on her screen, into a DEX, like maybe Radium or something like that, and actually show you how to get around them and then do some transactions on there using the wallets that she set up. All right. Now, again, Arbitrum has their own, you know, Arbitrum's got a lot more and so on. So it's worth something that you can explore. You don't have to go into them and play around with them in detail. You can go into the interface and open up these apps and see, you know, see how they feel and pick one that you like the feel of as well. All right. Now, the next thing that we're going to move on to, and I am rushing a little bit, and I do apologize because I want us to have time at the end to show you guys how this works as well, because that's really when it's going to cement in your brain about the benefits of it and like how easy it is actually to use, and it's not as potentially intimidating as it may seem. Like I personally was intimidated the first time because it's like, wow, I'm now starting to use crypto in its more of its pure form. You know, I'm not just on an exchange. I'm now taking it away, putting it in a wallet, and I'm swapping stuff on the blockchain. And it's like, man, I'm just nerding out over this stuff now all of a sudden. So yeah, we're going to move on to screeners. Now, screeners are basically tools that can give you analytics on a lot of it, on all, I don't want to use the word all because there's a lot of crypto out there, but on many, a high percentage of crypto out there, it gives you statistics on the projects and all sorts of data. Okay, so a screener gives you lots and lots of information. It gives you the ability to connect your wallet to. You can then enter into one of the DEXs through the screener, and you can make transactions directly through that once you've done some research. The other advantage of you know, screeners also is that you can chart on them. So for example, if it's a micro cap token, so let's say it's something with a $10-15 million market cap at the currently, it's something you want to look at getting into early. You have no idea about what it's looked like since it's come out. A lot of these screeners will show you a chart that may not be available on TradingView, and you can actually do some charting. You can look at the history of the project and all that sort of stuff. And you can look at the 24-hour trading volume, the 1-hour trading volume, the 5-minute trading volume, all that sort of stuff. Now, there's again, when it comes to screeners, there is a lot out there. We're going to mention 3 today, again, just to keep it simple. And these are the 3 that we like the most. Now, there's one of them that I use 95% of the time, and it's the same one that Beth uses 95, well, 100%, I don't know, a lot. So we're going to go through them one by one. So the first one is DEX Screener. Now I'm going to flick my tab over to that. Can you guys see that? Hopefully, no. I'm going to have to reshare my screen. Sorry. Let me stop share, and then I'll go back into the next tab. Sorry.
No worries. I have the presentation on another computer, so we are good.
That's all right. I've DEX Screener. There we go. Share that one. Sweet. All right. So this is DEX Screener, okay? So the website is dexscreener.com, all right? So that is what it looks like on the landing page. Now, as you can see as well, there are lots and lots of information down the side here. The landing page takes you into different trading pairs. You can sort through them based on whatever metric you want, like liquidity, fully diluted value, their trading volume for 24 hours, 1 hour, whatever you want to do. Now, there's a ridiculous one here called BitBoy/Soul. So that one's probably tanking up his fight today. Anyway, but then you can, there's all sorts of things. You can set up watch lists. You can search on projects by chain. So again, if we're going to talk about, Solana, I can click here on this Solana tab. And now it lists a whole heap of pairs, trading pairs that are available on Solana, okay? There's even a Donald Trump / Solana trading pair as well. So yeah, it's nuts. So if you're into Pulse Chain, same thing. You can search for projects on Pulse Chain. So if you have a whole lot of Pulse, you can go onto their DEX, which is Pulse X, and then you can start, trading in and out of different projects. One of the things that we love to do on it is you can create watch lists. So what we have done here is we have created a watch list. Now in this watch list, this is mostly gaming stuff because a lot of these ones here are low cap gaming tokens. And as you can see, I've created a watch list. I've got some charts. I've drawn up on these charts. So I'm charting it just like I do in TradingView. I've even got indicators, stock RSI, volume. I've got, Fibonacci here. I've got the long position tool for the trade that I'm in and all that sort of stuff. And then on the right-hand side, it actually gives us information about the project. It gives you the contract address for this project. This project is Honeyland. It's a game. Apparently just got released on the iTunes or the iPhone app and stuff like that in the last few days. So it's got all the information you want, even gives you information about the project itself, just written out, nice and easy to understand, takes you to their website, stuff like that, their Twitter, their Discord, anything you like to know, all right? So it's really, really cool. If you do want to trade on it as well through DEX Screener, it says trade on Radium, which is a DEX for Solana. So if we went back to look at those DEXs again, Solana DEXs, Radium is one of them. So you can actually go in now and you can swap out your Solana and buy some Honeyland, which is something that Beth will do later. So yeah, it's very powerful. You can see a lot of what's happening and you can get access to stuff that you can't buy on an exchange. So if you look at Honeyland, for example, on CoinGecko, perhaps, Beth, can you have a look at that and tell me, is it listed on any centralized exchanges, Honeyland?
Which coin, Honeyland? I will go right now and look.
HXD.
Yep. Oh, I know. I already had it charted. You stole my thunder. I'm just kidding. Give me one moment. I'm going to go there right now. Yeah, I'm going to go there right now.
Yeah, I just want to know if it's available on a centralized exchange because I know that you have it. I have it. And I've only bought it through.
I'm not seeing any.
I bought it through, like my Phantom wallet, which is a Solana-based wallet, and I've swapped Solana for this. And then when you want to sell it, it's trading pairs, basically. Okay, so I heard someone talking about it earlier this morning as well. I think maybe it was Shauno on his first session, maybe mentioned about trading pairs, if I'm not mistaken. And he talked about all you're essentially doing, even if you're trading with USDT, is you're swapping from a token to another token. So in this case, we're swapping our Solana into Honeyland. And then
I'm not seeing any centralized exchange. This is completely DEX. And Honeyland is up 19.2% in the last 24 hours.
Yeah, well, this trade's killing it. This trade's going extremely well right now.
It really is.
So the I guess one of the downsides of decentralized exchanges as well is that you can't put in stop losses and take profit points. I mean, I have no doubt there are some decentralized perp ones that potentially do it, but we're not talking about that today. We're talking about just straight up decentralized exchanges. We're not talking about perp trading or anything. So if, you know, what you have to do is you do have to watch it on this particular screener. We can have alerts set up. So I can go into here and set an alert. I click on the alert button. I can say enable notifications on my browser. And then I can go in and I can say, alert me when the price is in US dollars, if it goes over or under a certain price. So let's say if it goes under 0.1812, I can create an alert. Okay. What also happens is it'll alert you on your computer. If you have the DEX Screener app on your phone, which I have, it also then pops up a notification on my phone and tells me. So I set it up sort of where my stop loss is or where my take. So my stop loss, I'll say if it goes under, it'll alert me. I'll go in there and I'll swap myself out of that project back into the native currency or into, you know, something else like USDC if I want. If the price goes above my take profit point, I then go in there and obviously swap out as well. So you can still manage it. It's just not automated in the fact that it automatically sells you out like a stop loss does or a take profit does.
And Matt,
but you can.
Go ahead. Sorry. Go ahead. I was just going to say, there's questions in the chat on, is it the same as TradingView? So it really is similar, but it doesn't have things like Market Cipher for those that are, you know, a little more advanced. It doesn't, you can't use like microcipher indicators or a Relux algo. It has everything else that TradingView has. Yes.
Correct. Yeah. So the free stuff that you get with TradingView, you have on this. If you have any paid packages, like Beth said, you can't use your paid packages on this, but you can do everything else. You know, you can still got the normal RSI, you've got the stochastic RSI, any of those things you can put up on here, no problem. If you notice, it looks exactly the same as TradingView across the top here. I can go into indicators. I can say, I can favorite stuff. You know, I favorited the stochastic RSI. You know, I can do, you know, I can favorite Bollinger Bands if I want, can turn them on.
Absolutely.
You know, everything's there. You
have to create an account with them. Like they're not going to share your data. I mean, this is decentralized. So once you save an account, you can actually save your charts. Like I have like 20 different charts saved. This is what I use, DEX Screener. Yeah, I find this the most simplest.
Yeah, so on the watch list down the side here, you can see we've got various ones that are, you know, in here. There's Radium. You know, Radium's in here as well. That's been charted before. Shrapnel's another game. You know, there's those sorts of things. So these are all small market cap things. This is a market cap of 112.2 million at the moment. You know, so it's not very big at all. Yeah, so that's what this is like. As I said, you can trade it. This is an Avalanche one. You can see up on the top right here, it says Avalanche, where my cursor is. So that's an Avalanche token. So then it references one of the DEXs. So it's Trader Joe is one of the Avalanche DEXs. So if you click on this button, it'll take you to a portal that'll send you through to the Trader Joe DEX. You connect your wallet and away you go. All right.
You want to show them one
so
more
that's
chart?
That one.
Can you show them one more chart? Oh, you can go on. You can show another chart on a different one. Go ahead.
And then what I'm going to do now is the next one is DEX tools. Now, this is the same sort of thing. It's a screener. It allows you to explore tokens, trading pairs across various decentralized exchanges. It's just different in the way that it's laid out. You can still do a pair explorer, you know, where it gives you the same sort of information. You can search for different projects. It still has a charting option on there. Same thing, you know, you can still do, you know, you can still pull fibs, all that sort of stuff. Everything like that. It's very, very similar to DEX Screener. It's just, for me, I like the interface of DEX Screener. So it comes down to that personal touch as well. I like it. You know, it's still got all of those different stats on there. You can do swaps where you can do multiple swaps on multiple things at a time. You can set it, customize it up. This one actually does have a cool feature where you can have a multi-chart feature. You can have up to 10 different charts showing at one time. If you've got a monitor, 100-inch TV maybe on your wall, that'd be pretty cool. But, you know, it has, you know, what are some live new trading pairs that are out there. So this is some new ones that have just been released. All sorts of information, you know, but we're not going to go into the details of that stuff. That's something that would, you know, we could do hours and hours and hours about the power of all these. But this is the gateway for you guys into decentralized finance. You hear the guys at Banter and within the school talking about DeFi. This is the gateway into that stuff. These are the things that can offer you with when you're staking your tokens and stuff that you can really make some good gains. Now, the third one is DeFi Llama. Now, DeFi Llama was something that 𝗠𝗀 also talked about just recently. This is one of the best ones if you want a comprehensive overview of the landscape of sort of crypto. Okay, so it talks about a lot about, you can really measure and see how the different DeFi ecosystems are growing. You can see it by chain. So if I click on the chains tab here, it now gives you a beautiful pie graph of the different pie chart of the different chains and how big they are. I think 𝗠𝗀 might have even had this one up on the screen. It gives you a beautiful water.
I think you're stuck on. It's stuck on. I think it's still stuck on.
I am sorry. I didn't do that bloody reshare thing again. Sorry, guys.
No worries. I just wanted to let you know.
Maybe if I share like this, it'll work out better.
There you go. Perfect.
Yeah. Oh, yeah, that's better. There we go. Now I've sorted it out. Okay, yep. Sorry, guys. So this is DeFi Llama. It'll show you, you know, all of the chains and the size of each chain and things like that. So this is, I think, the graph that 𝗠𝗀 might have shown. And then it shows you a beautiful waterfall chart as well, if that's something that tickles your fancy. It breaks it down, same information, just presented differently. And then you've got all of the chains here. So this is really gives you more information about the ecosystems. You can see how they're growing. You can see the total value locked on each chain and all that sort of stuff. So essentially what these screeners is just a very powerful tool of information. So what we like to do is we like to look at DEX Screener for some of those projects that we want to get into that aren't, you know, easily accessible on centralized exchanges. Also, it's a great way to get into it where you're in control of your crypto and your keys. Like I've spent a lot of time, I know actually we both have spent a lot of time over the last month or so getting our stuff off of centralized exchanges and into wallets, where essentially the only thing on centralized exchanges at the moment is pretty much just the money for trading, doing spot trades where you're in short, medium-term trades or doing leverage trades. All of the actual portfolio stuff that's being held is held in other wallets, so external wallets or some of the wallets you use that you connect with these pieces of software. And then DeFi Llama is a great one to look at if you're researching certain narratives and things like that, because the amount of information on this is endless. This is something that Miles, you know, has talked about endlessly as well. I know he lives on this thing, and it is really, really good for giving you detailed information.
Hey Matt, you're forgetting one more. I want to see if you can guess. You're forgetting one more that is was his favorite. Can you guess which one he's talking about? One more. I'll just say 𝗪hale. So I've been on there once or twice. I've heard good things about it. 𝗪hale.so is also another one. So yes. Oh, we're going to talk about the wallets next. Hold on, pull in mind.
Yep.
Central Exchange best wallet. Yeah, we'll go ahead and show you. I mean, the central exchanges actually are different from Scott, are different
Yep.
from this. These are DEXs, but there are a lot of hot storage wallets, like 𝗓𝗄𝗄, that I'm going to talk about. 𝗓𝗄𝗄, Phantom, Soulflare, so Axis. We'll talk about the wallets in a minute, but they're different. It's what I'm pointing out for Scott.
So that's really where we're at with DEXs and screeners. Okay, so that's sort of a brief description in it. I'd like you guys, if you do have the time, to go in there and actually, call up some of these websites, have a bit of a play around, click on the buttons and stuff. You can't break it. You haven't connected a wallet to it. You can't break it, but it just gives you lots of information, and you might find something that really interests you that you can then learn from. And it's literally what we have done. I just got on these things. I heard someone talk about it. I got on there. I played around with it, and I was like, "Ooh, this is actually interesting." Now I've got all of a sudden they talk about these low market cap projects that I can now get into, and I can throw $50 at it, and then hopefully one day it becomes 1,000 or whatever. Whereas I can't get that on a centralized exchange until the hype. A lot of these centralized exchanges don't hit them until the hype basically comes to an end, and then all of the people that have made tons of money get out of them. And often you see that. You hear people talking about something lately, like there was that meme coin on Solana that went absolutely nuts, and the moment it was listed on the centralized exchanges, it just died because no one was interested in it anymore. So
there's several of them.
This now gives you the ability to get into some of these things early, and make some decent profit on. Beth, have you got the PowerPoint in front of you?
I have mine. So for the types of cold storage wallets, I have that up now. But do you want
to go through the wallet? Because I did create a tab on each different wallet, so you can kind of look at that and go through it.
I just have my presentation on the other side, because pulling up yours I was having difficulties on this computer. So I can go through the wallets and what they are, and I will make sure you guys that I'll put up this presentation in Discord. It took me a long time to make it. I even have the Crypto Banter School logo. I'm so upset that you guys can't see this. But let's talk a little bit about the wallets. The first one that I love is Soulflare. Soulflare is one of my favorites. We're going to talk about Soulflare. We're going to talk about 𝗓𝗄𝗄. We're going to talk about Phantom. I can actually show you Phantom and Exodus, which I used to have. I don't use that anymore. But let's talk about Soulflare first. So I apologize, I have to look this way because my computer's I'm using the other computer now, but what is Soulflare, right? It's safe. It's a powerful crypto wallet. It brings all the benefits of Solana, and this is a Solana-based wallet, right to you. You can buy, you can send, you can swap, you can stake, you can trade your tokens right from your phone or your computer, and you can also link them to your hardware like Ledger. Collect the Solana DApps. It's really, really interesting. You can get blockchain notifications. You experience a whole new internet directly from your phone. And remember, this is a hot storage. So not your keys, not your crypto, right? Only you, and you can get into it. So, what type of wallet? How would you describe what Soulflare is? It's a non-custodial digital wallet. So Soulflare, being a non-custodial digital wallet for Solana, it's available as a web application too. So you can, again, use it on your browser. You can open like a browser extension, which I have on every day. You can work on mobile app. It has a mobile app. You can do it on your phone, Android or iOS. And it supports tokens to the Solana platform. So it's really, really beneficial to have one of these. Every wallet that I can have that the exchanges are not part of, I think makes my day better. How do you use it? It's very simple. You would just go into Soulflare, and it's going to ask you you can do it on your desktop or you can do it on a mobile. It's going to either ask you to create a new wallet or import the current one that you have. If you are creating a new wallet, it's just like any other thing, right? You are going to get a seed phrase with this. So highly, highly important. You write down your seed phrases. And you store them separately, and then you just create a password. And every time you want to get into it,
it's on the screen now.
Oh, you got it. Okay. I can't see it. Give it 1 second. It's coming, guys.
So I just pulled up I've just pulled up a Soulflare wallet just so you guys can see what the interface looks like. It's just a burner wallet that I've created for my AMAs. So you can just see, literally see what the interface is while Beth talks about that.
Is it we can't see it, by the way. If you pulled it up, we can't see it, but I'll keep going on. So you can connect your Ledger device, which I really, really like how you would do that. If you already have a Soulflare wallet, once you created this wallet, you plug in your Ledger, unlock it, you navigate to the Solana app within the actual Ledger. You just navigate to soulflare.com and select create a wallet. Now, you don't need a Ledger, you guys. You don't have to have a Ledger for this because this is also a cold wallet. Just in case you want that backup, I know Matt uses that too. And then you're going to, there's several times and get started menus. There's tutorials up there. So if you are doing that, you would select, either your Nano S or X. So that is pretty much going over what Soulflare is. The Phantom one, I do have a Phantom wallet right on this desktop. So hopefully I'll be able to show you that. Now, what is Phantom used for? So Phantom is a crypto wallet that can be used to manage digital assets and access decentralized applications like Solana, Bitcoin, Ethereum, Polygon. So again, Phantom, you can just multi-chain, multi different chains, multi different networks. It's also currently available as a browser extension, and you can do it for iOS or Android on your phone or your computer. I actually have both. I'm going to pull up my Phantom wallet and see if I can present it to you guys. I'm going to try. Okay, I'm going to just enter my path. Let me share my screen and see if it'll let me.
It's funny because at my end it says it's sharing the screen, but it's clearly not sharing the screen.
That's the wrong one. Hold on a second. That's the wrong Phantom wallet. Can you guys see where it says enter your password? Can you see that? Can you see where it says enter your password? Matt?
It's showing my screen now. So let me just unscrew. There you go. I think yours is coming up now. There you go. Yeah, it says create a new wallet.
Enter your password. It says create new wallet?
Yep.
No, that's not the one we want. We don't want that one. Give me 1 second. I'm going to pull up this one. Now it says enter your password. As behind, you can see all my airdrops that I'm doing. And can you see my screen now where it says enter your password?
No. That still really says weird. The same. Yeah.
All right, let me get out of that. How about now? Now it should be saying enter your password.
No.
What is it showing now? What is it showing now?
Nothing.
It's not showing that. Oh, for God's sake. Let me try again. Give me 1 second. I'm trying again, guys. Okay, now do you see a screen that says it says a bunch of things? Hold on, give me a second. I'm gonna go to share this with the Honeyland, and then I'm gonna try and share. Now you should see my HXD chart that you showed. I'm pulling up the Phantom wallet now.
Yeah, we got that.
Now, okay, can you see the enter your password? Yeah. Okay, so I'm gonna enter my password.
All we see is the Honeyland chart.
Oh my goodness. Then I really don't know what to do. Because I did unlock it. I'll try one more time. I'm gonna just get into it, and then so you guys don't see my password, and then try again. Give me 1 second. I apologize. It's 3 o'clock in the morning for me. I have been stuff for 45 minutes, but we're gonna get this working. We are. Okay. Let me get into my wallet. Right now, it's not even letting me in the wallet. Give me 1 more second. If not, we'll just do this another time. It's very, very simple. I have the Chrome extension on here. I don't understand why this is not working. No, it's not working. I don't understand why it's not working. I feel bad, so I don't want to keep like wasting time. But again, the fellow wallet, all you need to do is actually download the Phantom app, and it's very simply to do. You can find it anywhere and download the Chrome extension. And this is what we use. For example, like this is my Honeyland chart, and I use this one. I use a lot of different. You can actually like swap Solana onto or put Solfil on your Phantom wallet and all that great stuff. Let's talk about 𝗏𝗄𝗧 really quickly. 𝗏𝗄𝗧 is actually one of my favorites. So 𝗏𝗄𝗧 is a non-open source wallet. It's a mobile application and browser extension wallet that supports Cosmos interchain, right? So not Cosmos ecosystem. It provides functionalities for account and wallet management for all Cosmos-based blockchains. 𝗏𝗄𝗧 is the first supported wallet for the Kudos network also, with a native integration coming very soon. The 𝗏𝗄𝗧 extension is supported. This is pretty important, you guys, because the 𝗏𝗏𝗧 extension is supported on only Chromium, like Chrome-based browsers. So if you try and use this with Safari, it won't work. And again, I know we're going to have problems if I show you this 𝗏𝗏𝗧 wallet on here too.
I've got my sorry, I just shared my screen with my 𝗏𝗏𝗧 dashboard on it, which is another burner
okay,
wallet.
Great. So I just hit stop. I just hit stop sharing.
Yeah. So now on the screen they can see the 𝗏𝗏𝗧.
Yep.
Yep.
Absolutely perfect. Okay. So that's amazing. So make sure you can obviously use this on your mobile phone and or your computer. Please note that with your seed phrase, if you don't have it, your assets are gone. So please write down. You cannot recover any lost seed phrases. Keep it safe. Recommend people write it down in several different places. Because if you lose it, it's kind of like not your keys, not your crypto, but you lose your keys, you lose your crypto. But you can do that very safely. It's a very safe and secure wallet. But you may not be able to, actually get your funds. So installing 𝗏𝗏𝗧 is very easy. We're going to actually get you guys all these slides. I promise you we're going to get you these slides. You actually just install 𝗏𝗏𝗧, the extension. You insert the 𝗏𝗏𝗧 extension on your this is on a computer, obviously, on a Mac or a PC. And then you go ahead and click the 𝗏𝗏𝗧 extension on your browser. God, I wish you could see this because you can't really see this. But it's going to give you options, right? It's going to say sign in with Google, create a new wallet, import an old one, or import again. They are compatible with Ledger, which I find, you can choose it's simple, it's easy, it's quick, and it's very, very, very safe. The next steps, if you're creating an account, again, you create or you import your wallet. Again, I don't have to go over the phrases. We've already talked about that. I did have a link to the Kudos dashboard in this presentation, so I will make sure you guys get this. I promise. You just connect 𝗏𝗏𝗧 wallet button and the login screen appears. And I had pictures of all that too. So it's going to come up with if you're doing it for the first time, adding the extension, it's going to say add chain request. You just hit approve. It's very simple every time you're doing transactions like that. Very similar thing. So that is all I had on 𝗏𝗏𝗧. I think I'm going to have the same issue if I try and go ahead.
𝗏𝗏𝗧's also very good because it is multi-chain. So if you look here, guys, you can see all these different chains on here down the left-hand side. It's Injective, 𝗘𝗅, Juno, Neutron, Sentinel. There's 𝗪𝗏𝗃, even 𝗪𝗏𝗃, those bastards. Cosmos, Osmosis, Akash. So yeah, it's really good. It's really powerful for staking as well.
Staking. Yeah, I can tell you guys right now that I am staking Atom. I am staking Osmosis. I am staking TIA and actually waiting for a TIA airdrop. So very stoked for that.
So within
13 days.
It's very, very good for that. It's very good for staking stuff. And it is a nice wallet. It has a really nice interface as far as I'm concerned. And the fact that it is multi-chain, because it's easy for us also when you get into this space where you're looking at DEXs and screeners and you're doing swaps and you're having these external wallets, it's very easy to end up with 6, 7, 8, 9 wallets. which is not necessarily a bad thing in the way that it now divides your portfolio up. So, you know, if you were to get hacked, you'd have to get hacked on every single wallet for it to be an issue. However, it's also can be complicated because then you've got, you know, 9 or 10 different seed phrases that you have to store safely and look after and that sort of stuff. So you have to sort of having these multi-chain ones can be nice because you can limit, you know, you don't have to have so many wallets. And I think that brings you to the next one, which is Exodus. I think maybe that has
Exodus. So Exodus, the Exodus wallet. I'll tell you a little bit about the Exodus wallet. The Exodus wallet stands out as a versatile cryptocurrency wallet available for both desktop and also multiple platforms. It does offer users seamless integration. I do have one. I'm not using it privately right now. It does seamless integration, interfacing for multiple cryptocurrencies, exchanging digital assets, obviously, and tracking portfolio performance. I can give you guys a little bit of what it does support. Multi-currency has a wide range of cryptocurrencies, including obviously Bitcoin, ETH, Litecoin. A really, really good built-in user interface feature. One of the standard features is the built-in exchange functionality, allowing you guys to swap between different currencies directly within the wallet as well. It's designed with a user-friendly interface. It caters to both beginners and really, really, you know, crypto enthusiasts like myself that have been doing this for a while, that like to, you know, do cross-chain, multi-chain. The design is very smooth, very, very easy to use. Both obviously has your you can track your portfolio, multi features and functionalities, and it does have like analysis tools too and data. You can also, you know, stake things like I used to stake my Cardano a long time ago on Exodus. So the graphic representation and comprehensive insights provide really, really good details for making investment decisions. They actually have all that information on there. It's very, 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 very unique. So obviously you want it, again, security and privacy, not your keys, not your crypto. And the last thing is it does prioritize security, privacy. It does implement industry standard encryption protocols to measure your safeguard user funds and personal information. I don't know anybody that's been hacked on Exodus myself, and I've been hacked a lot of times. So, you know, you just have full control. Again, not your keys, not your crypto. And they have new biometrical authentication. And so it's pretty cool. Great for your, your great new, hardware wallet integration.
Exodus is a great one, again, because it is multi-chain. So I've got their website up right here now, and, you know, as you can see, it says connect 15 plus networks. Okay, so it's really good. It runs on a Chrome browser extension. I can't get the extension up here working for you, obviously with the screen share stuff. On the presentation that we'll get out to you guys after I finish this,
on Discord,
I'll see if I can post it onto the school Discord. All right, so keep an eye out for something from me in the general chat area or something. And you guys can have a copy of it, because there is screenshots of what the wallet looks like, all of these things we've talked about.
Everything we talked about. So I'm so upset. I built this presentation for an hour. It's okay. We're gonna make sure you guys get it. We're gonna make sure. I know because this huge file. I couldn't even like send the whole WhatsApp file. I had to send it multiple times. But we're gonna make sure you guys get this.
While we've still got a little bit of time left, let's maybe jump onto one of the dexes like Raydium. Okay, so let's maybe jump onto Raydium.io and show these guys, you know, how to swap something.
I'll gladly give you my Solana address. I'm just kidding. Go for it. You do it yourself.
All right. So what you do is, let me just disconnect my wallet here. Okay. So when you land on the Raydium page, so it's Raydium.io. Okay. So when you land on the page, you'll have this launch app. Click on the launch app, and it automatically takes you into their swap interface. Now on there's a number of different things you can do. You can look at, you know, creating liquidity pools. You can actually join pools. So you can do different staking. You can join into these different staking pools with certain token pairs. You can do farming, things like that. But that's, again, another subject for another day. What we're talking about using these DEXs for today is for basically buying stuff that you can't buy on a centralized exchange. Okay. So the first thing you need to do is, when you've got your wallet, is you want to go into your 𝗪𝗟𝗡 wallet here. Now, when you first create it, obviously there's going to be nothing in it. So you need to go into your centralized exchange. Okay. You're going to withdraw one of the projects for that wallet. So in this case, we're talking about 𝗪𝗡, and that is a Solana-based wallet. So you will withdraw your Solana or your Radium tokens, because they're Solana projects, and you will send them to your wallet. Now, your wallet address is very easy because it has your address here. You can create a QR code. So that's my wallet address. If anyone wants to send me any Solana, feel free. That's the address.
I know, that's what I was going to say. Hey.
You know, so that's your wallet address. So, you know, you guys, you can use the QR code. You can copy your address and paste it into your centralized exchange, and you can withdraw your tokens. Always do a test run first, you know, of the minimum transferable amount. That's what I always do. I make sure it arrives, then I follow it up. You know, when Beth was in Australia recently, she transferred some CAS, a shit ton of CAS. And
I was worried about that.
15 minutes to get to the Tangent wallet. And I'll tell you what,
it took me
there
10
was some
seconds.
pacing.
10 seconds.
There was pacing to going on up and down
around.
while she
I was
waited
a little
for
bit
it to
worried.
arrive.
Trading
So,
Caspa. Yeah.
Anyway, so then once you've got the funds on your wallet here, you'll see here it says portfolio value. Hopefully you guys can see that on the top left. So currently I have $10.30 worth of something. Okay. Now down here it's got my list of assets. You can see there that I have Solana. I have 0.1 of a Solana in my wallet, valued at $10.30. And the current price of Solana is $101.73. Now you can see previously I've swapped it for Honeyland, because Honeyland is listed here. So with that in mind, what I'm going to do is I'm going to go into Radium here. I'm going to connect my wallet. Hang on, let me just check what my wallet address actually is.
Yeah, because remember, guys, when you're doing this, check the wallet address 2 or 3 times and verify that you're using the right address. It's very, very important.
So I'm going to go into Radium, connect my wallet. So you can go into 𝗪𝗡. You can connect the wallet. You can pick which wallet you want to connect, which is not that one for some reason. I don't know what's going on here now.
And sometimes, you guys, the swaps will fail. Don't freak out if that happens. Sometimes the networks just are so busy. So if you're swapping and it does fail, just go do it again. You're not going to get charged more Solana. Nothing will be taken from your wallet if it doesn't go through the first time. Like I'll be swapping, like Matt's doing, I'll be swapping for Honeyland or 𝗪𝗏𝗀. You know, and sometimes it'll say swap failed, or even for Radium, right? Swapping Solana for Radium, and it'll say swap failed. Sometimes it's just because the network gets jammed up, or you're not moving enough at a time, right? So sometimes, like if it's under, like, you know, if it's like $5 or $10, it'll fail a couple times, but eventually it will go through. Because you always want to do a test run, right, when you're swapping to the wallets for the first time. So don't freak out. I just wanted to make that very clear.
Okay, so you know, we're having a great time with our tech here today, because it's actually not connecting my wallet. It's connecting up a different one that's got 0 balance, and I can't get it to connect up the right one. So what you do in any case is you want to go into your DEX screener, and you want to look at, let's say, for example, where we're looking at, you know, we're looking at Honeyland here. We really like the look of that. We want to buy some while it's moving up. You want to make sure you check what the trading pair, what the actual contract address is. So as you can see here, it tells me the start of the address and the end of the address. Okay. Then I'm going to go into Radium. I'm going to have my base currency is Solana because that's what I have in my wallet.
Mm-hmm.
I'm then going to search for a token. So now what I can do is I can enter in that address, or I can type in the name of the project that I want to trade.
And when you're done that, we do have some questions, so I'll read them off to you as soon as we're done. But this is a great tool, you guys. I highly, highly recommend it. And I'm going to start doing an AMA on how to move your crypto.
So,
obviously, hopefully Matt will help me. We can do it together.
Yeah, for sure. So you see here, it's come up with Honeyland. The ticker's HXD. And if you notice there, the address is the same address as what I was looking at on Dex Screener. So I know that I'm about to trade or swap the legit token. Okay. So now what it's going to do is
please stress that importance, because sometimes the first time you use this, you probably want to verify that go to CoinGecko and verify that that really is the HXD contract, because there's so many scams out there, you guys. So I would definitely validate that this is the true Honeyland.
Yeah. So then in this case, the Honeyland, it's the right one. What I would do is, if this actually did connect to the correct wallet that I wanted, I just don't want to just go stuffing around with it now and then end up connecting my big wallet to you guys. So you would hit in the token amount that you want to swap. Okay, so however much Solana, it'll give you the balance, the actual total of what it's worth, and then you can you'll hit swap, and then the transaction will run through. Let me just give it one more attempt at connecting.
While I was just saying, it looked like it was connecting. I'm gonna shut my window because it's raining now. I'll be right back. And once you guys get the hang of this, it's like rock. It's so simple. I use these every day, literally every single day, and we will do AMAs on this. I have one, how to move your crypto, because that was another topic. This is part of that. Yeah, and Matt does them on his as well.
Yeah, it's not coming up correctly for me, so I'm not really sure what's happening.
Yeah, the wallet. Go ahead.
In any case, that's sort of how it's run. You end up swapping into the token you want, and then you're actually holding that position. So you might have, one Solana's worth of Honeyland. So now all of a sudden you're holding $101 worth of Honeyland, which will work out to be however many. It's worth 17.78 cents. So you're going to end up with, thousands and thousands of Honeyland that you can then hold. You can either choose to hold it, for the bull run, or you can just trade in and out of it. And it's a really nice way to get into these projects that you can't get into, on centralized exchanges. Okay. So what you would do is you go back into your Solflare wallet, and you would see that you then are holding Honeyland. It would have in the amount you're holding, and you would have like a nice little asset overview, shows you what your total portfolio is worth, and a list of all the assets that you're holding there. So that's it, guys, in a nutshell. I'm really, really sorry that we had so many technical issues. It's really, really frustrating, obviously, at our end as well, because you put in the effort on the slideshows and everything like that. And then
we'll make sure you get it. There is one question. So Dexter's Lab wants to know, would you take crypto for staking away from central exchanges for this, like split 50-50, to use as collateral for staking? And what would be your approach, and how much to keep and where?
So what I've done, and again, I talk about Beth and I, because we spend a lot of time doing similar stuff, and that. So with Pith, for example, a new project, we have some of it staked for those rewards, the airdrop rewards on new projects that you're getting. But then there's also some of it that you have sitting off to the side that's unstaked. but still sitting in your wallet, but it's not staked. That way.
And I put the address up there, Matt, for them. So the PIF staking, the staking.pif.network is in the chat. So if you guys want to write that down, and I already have my wallet connected. I can't, because right now I'm staking 1490.88. I'll just be honest with you. I love that token, and I want their airdrops that are coming. So yes.
Yeah, and so we you know, a strategy that we both employ is we stake a portion of what we actually have to get the benefits of the airdrops, and actually also the validator rewards that you might get when you're staking stuff. And then you have half of it or a portion of it sitting off in your wallet somewhere, because if you've got it staked somewhere, there's usually always an unlock period. It might be 7 days, 14 days, 21 days. If the project goes to shit and you need to get out of it, if it's all locked up, often it can go to 0 before you can get out of it. On the flip side, if it starts to moon and you want to take profits, you can then also shave profits off of that other bag that you have on your wallet. Okay, so you can start taking profits away. There's a pullback, you can buy back in, and you can actually also then start to farm and accumulate more of it. Okay, I've been doing that with a project called 𝗪𝗪𝗪𝗪, where I have some of it sitting in my MetaMask wallet. I have some of it staked, and I've actually accumulated more through the validator rewards than what I actually originally paid to buy my bag of 𝗪𝗪𝗪𝗪 in the first place. So it can be very, very powerful. So it's a good thing to get into, and that's where the whole point of why we wanted to talk about decentralized exchanges, wallets, the screeners, stuff like that. Yeah, it's just been a pity that we couldn't show you everything the way we wanted, but that's how it goes sometimes with technology. Seth,
yeah, I think
what's up, mate?
Was too good. Hey,
how's it going, guys? How you doing?
Hi.
Good. You're on again, mate.
But hey, good.
Yeah, I'm on again. Round 2.
Nice. Well, I'm on again after you, mate. So
cool. We're gonna tag team then.
That's it.
Yeah,
I'm gonna go away and try and.
I'm awake now, so I'll just watch this and I'll come back and be on again, man. It's fine. I'll come on at 5 a.m. So you guys, it's really a true 24-hour marathon for me. I've been up since 4 a.m. yesterday.
Wow.
Dedication. You guys think the students need to learn.
I've got another presentation to show on my next one, so I'm going to go away and try and work out this technical issue, because I'll be spewing if I can't get it to work on the next one as well.
We'll get it to work.
All right. Hey, guys, thanks for tuning in. We will share our presentation on the school somewhere, and we'll leave you in Seth's capable hands. And Seth, I'll see you in an hour, mate. All right?
Yeah, see you soon. Enjoy.
Yeah, I'm just going to stay back. I'll stay back.
Thanks, guys.
Thank you guys so much for watching. I hope that was beneficial. Thank you.
Welcome, everybody. Hope you're doing fantastic today. My name is Seth, and I am the creator of Easy Algo Indicators, which I will show you now. Great, you can see my screen. Cool, I am the creator of Easy Algo Indicators. These are a set of 3 premium indicators, one being TrendX, Indicator X, and the TDIX. And in this training today, this little mini session, I'm going to introduce you to these indicators, and I'm going to show you how they can help you improve your trading, alongside with some methodologies of how I put them all together, how I actually figured this out. So even if you don't get the indicator, I can show you how to manually work out these key principles. I'm basically working with price action, guys. These are price action indicators. They are leading indicators. The indicator X and trend X are leading indicators, which means they show you information before it actually happens. So I will just take you on the chart, and I'll show you, for instance, in this little session today, I'm going to introduce you to the first one, which is indicator X, and then I'm going to go through some methodologies about how it works, and then I'll go through TDIX and then trend X. So on the chart here, I've got indicator X. And indicator X is a price action indicator that helps you understand the 3 phases of a market cycle. So as you can see over here, we've got contraction boxes. And these contraction boxes basically just show you when contraction is happening in the market. And it's very important to understand contraction because it's giving you clues, it's giving you hints as to when institutions are getting involved, or the big money, the smart money, the market makers. This is the signal that they're getting into the market. And I'll go into some dynamics about how that works now. Then these over here are liquidity lines. And the liquidity lines are also super important because they show you where other people keep their stop loss levels. And the market makers, they hunt these levels. As you can see, look, price came, it hit the liquidity, and it reversed on the liquidity line there. So you'll see as we go in, I'll show you this training, I'll show you why the liquidity lines are so important. And then we've got these value lines down here. And these value lines basically show you where there's fair market value within the assets. And fair market value is just basically showing you where there's this 0 points where the market maker balances their book of business, where they're starting their progression from, where they're starting to initiate their trading agenda, which is basically, trading is a business. And a lot of these big firms and big players, market makers, they trade it like a business. Trading is a business, so they manage it like a business. So this whole sequence over here is showing you a 3-phase sequence. We've got contraction phase with the boxes. We got expansion phase where we get these whipsawing out of the box. You can see price expands around the box. And then we get the trend phase where price goes up into higher or lower prices. So I'll show you now exactly how this all works in a bit more of a presentation form. So I'm going to cover indicator X first, just going into some details about how it works. So I want to reveal to you the most important pattern in the financial markets. This is something you need to know if you are a trader. It will definitely help your trading quite a lot. It's called the master pattern. Basically reveals to you these 3 phases that the market is moving in. First of all, we get this contraction phase, where phase goes into contraction. And it's basically where the buyers and the sellers are equalizing. It's showing this low volume occurring in the market. And this is a strong sign that we really want to become aware of, because the contraction phase tells us what is going to happen next. And what is going to happen next is the expansion phase. So the contraction phase, my indicator software, when contraction occurs, it marks a box around the contraction phase. And we call this a leading incoming volatility indicator. It lets us know before volatility is going to enter into the markets. So when we see these boxes, we know we're in contraction phase and we know that the second phase is going to come next. So then as soon as price breaks out of the box, that is confirming to us now that we've entered into the expansion phase. And then when we're in expansion, price will oscillate and it will whipsaw around this value line multiple times, sometimes 3 up to 7 times before it goes into the 3rd phase, which is the profit-taking phase, the trend phase. So we have this 3-phase market cycle that's happening in every asset, whether it's crypto, forex, stocks, indices. It's happening on every asset and it's happening on every time frame. So what happens in the macro happens in the micro. So these 3 phases are the most consistent form of technical analysis, which works on every time frame, on every market. Like I just said, it is the footprint of the market makers. And this is basically how it works. First, we go into the contraction, which is a tightening of price. It's a lowering of institutional volume. And then we get expansion, which is a widening of price and an increase in institutional volume. So expansion lets us know that money is entering into this asset. And then we get the trend phase, which is the move to higher or lower prices. As you can see again, we get contraction phase, expansion, and the trend phase. Now, after I show you guys this pattern, I want you to notice on your charts how you see this everywhere. I'm going to go into a lot more details. Just now, I'm going to jump onto my charts and actually show you how it plays out all over the place. So the first phase in the market cycle is this contraction phase. You want to pay attention when you see a simultaneous higher low or lower high. Whether or not you have this software or use this software, it doesn't matter. What's important is you pay attention to when you get a higher low and a lower high. And I can show you on the charts as well how to do this manually if you want to, so just do it by hand. As soon as price goes into a high low and a low high, the software marks a box around it. Now this is the contraction phase we're entering. And you'll notice it's the squeezing of price. There's other ways to work it out. This is where price resets. It's a reset point. So it's showing you the buyers and the sellers, the demand and the supply is becoming equal. It's becoming zero. This is the contraction phase over here. So you see it goes into contraction. We get this low institutional volume. And then what comes next is this expansion out of the box. And you'll notice, the more you notice this on your chart, the more you're going to see how price respects these levels. So you'll see contraction occurs here. And then we draw a value line out of the center of the box, which I'll get into more detail in a moment. And this value line, we stretch across the chart, and you can see price respects these levels. These value lines become very important levels, which I'll go into detail now. So these contraction boxes help you define expectations of upcoming market behavior. It's a leading volatility signal. So it gives us information into the future of what's going to happen. It also provides us with the banks or the market makers or the big money with their starting accumulation point for their book of business. These boxes are the basic building blocks of the market framework that dictates future price movement. So contraction phase is the start of the market cycles, and it's one of the most important phases you really want to understand and be able to notice on your charts. So you'll see we got contraction, and then after contraction, we get this expansion. And price will shoot out the top and shoot out the bottom, and it'll oscillate around this value line. And I'll tell you why this happens in a moment. This is all part of a plan, guys. This is all part of a manipulation. This second phase here is the manipulation phase. So the contraction lines, you'll see, become extremely strong friction levels. So not only do these lines tell you where the fair market value is, but they also become strong support and resistance, and price often respects these lines. I'll show you on the charts just now. Here's an example. So you'll see price will hit, and it will completely respect this line. Hit again, completely respect this line. It acts as these strong resistance points, but notice price keeps coming back to this line. Breaks below, comes back, breaks above, comes back. These are magnetic levels that price likes to keep returning back to. And then we've got phase number 2, which is the expansion phase or the manipulation phase. This is where most traders lose their money in the market. And the great thing about this indicator, about understanding this strategy, is that if you know you're in the second phase over here, you will trade according to the phase you're in, which will give you a massive edge because you'll know, okay, you're in phase 2, and you know you need to be careful because this is the manipulation phase, and this is where people are going to lose their money. This phase is designed for the big players, the market makers, whatever you want to call them, to take your money to fill their massive positions. So you'll see price comes out of contraction, it expands above and below, and then once this whipsawing occurs, it manipulates you and it makes you make the wrong decision, which means that it actually will liquidate your positions, and these big market players will fill their orders before they go into the trend phase to take profit on those orders. I'll go into more details, so I'll make it as clear as possible to understand. So you see a contraction, then we got expansion, this whipsaw, which is designed to liquidate the masses, fill their orders with their large liquidity. You see, market makers have big problems. They can't enter the market anywhere like we can. They can only enter where there is sufficient liquidity. So they target your stop losses, and they create this scenario to do that. The expansion lines are the dividing point between market taker buying and selling pressure relevant to the time frame being observed. I'll explain in simpler terms in a moment. Above expansion is increased buying, and below expansion is increased selling. This provides predictable information. So it gives us a framework showing us exactly what is happening and how these big players are operating. This indicator is designed to emulate the market maker's strategy, because if you want to be consistent as a trader, you need to learn how to trade like the big money. You need to learn how to emulate the smart money strategy, because they are the ones driving the market. They are the liquidity in the market. And if you want to win in the market, you have to hop on their back and ride the wave with them. So you can see here, we've got a point of origin box, which is a contraction. And then we get this whipsawing. The further away this whipsaw happens from the box, the wider the swings become, until eventually it will go into another cycle or shoot off into a trend phase. So let me just go on the chart and show you an example of this. This is Bitcoin. I'm on the daily chart over here, and I'm just showing you how precise it responds, guys. This responds so perfectly to any market that you're in. I just want to grab my tool here. So you can see we've got contraction over here. This contraction phase. Oops. If the contraction phase happens, which the software marks the boxes around, and you can see we've also got two different colored boxes. The green box means price has oscillated around this value line more than 3 times, and the red boxes mean price has only crossed the value line twice. So it can give you values of which boxes are more valid and which value lines. And as you can see, these value lines are actually in the exact same place. So this is saying that this level is a very valuable level. So we've got contraction, and then what happens next is we got this whipsaw. Price breaks below, above, above, and then it shoots off into this trend phase, which is this. This is a mini trend that's actually happening on a higher time frame. So let me show you and tell you why this occurs and why it's so important for you to understand this process. So what happens over here? We get contraction. Then price usually expands out of the contraction. Can you see this big candle over here? These candles are designed to trick you. People who don't understand this would see this big candle and they would enter their long position right over here. They'd be like, oh, you know, there's volatility, price is going up, let me enter my long. And they'll put their stop loss below the swing low, which is over here, the swing low. This is what this is. And you guys will probably relate to me. This has probably happened to a lot of you all the time. So you get into this position, you see this big candle, you think price is going up, you get in over here, and then what happens? It hits this liquidity and it reverses, and then it liquidates you. And this is all a planned strategy, guys. This is designed to take your money. And then the same thing happens again over here. You can see we got another big candle. And then what happens is the retailer will think it's going up, so they'll get in here, and their stop loss will be under the swing low. And the same thing will happen again. It'll hit this liquidity line. Can you see this liquidity line over here? It'll hit the liquidity line, take you out, reverse, and eventually hit your stop loss level, which will be located down here. So it's like you'll enter, you know, you'll get into a long here, you'll be liquidated. And then the opposite happens over here. Price breaks below the value line. Can you see we've got these big candles? These candles, guys, are designed to cause FOMO. They're designed to make you think the market is doing something other than what it's doing. So you'll see this candle over here and you'll think the market's going down. You'll enter your short position. You'll put your stop loss above the swing high and you will get liquidated again. So I don't know if you've ever been in that situation where you go long and you get liquidated, you go short and you get liquidated, and you're just so confused. Well, this is why you're probably getting caught in the second phase, this expansion phase. So how do we trade this expansion phase? This is the key. And how do we work with these valuable value lines? So the value lines show us where we should be entering our long positions and where we should be entering our short positions. You only want to enter long positions when you're underneath the value line. So these value lines keep you on the right side of the market. Most of the smart money are entering all of their positions under the value line, whereas the dumb money are entering their long positions above the value line. You see, guys, the smart money and the dumb money are always doing the opposite. When the smart money is buying, the dumb money is selling. When the dumb money is buying, the smart money is selling. They're always doing the opposite thing. So we need to learn to do what the smart money is doing if you want to become a consistently profitable trader. And that is why this indicator is so valuable, because first of all, it's a price action indicator. It does not reprint. Everything you're seeing is pure price action based. These boxes will not change. You know, this is the advantage of using price action indicators, because they do not repaint. They're not lagging indicators. Most other indicators out there are lagging and they're repaints, and they're not accurate. They almost show you the information when it's too late. So this software marks out these liquidity lines, and you can see as price hits liquidity, this would be where you would sell the market. So we sell above the value line, and then we buy below the value line. But remember, we must also keep this in context of the trend that the market is going in. So we always want to look at a higher time frame. You can see Bitcoin is in an uptrend over here. And when an asset is in an uptrend, we're only looking for buys underneath this value line. So in this example, we would have entered any place over here. We could have gotten a position over here, or we could have gotten a position here, or you can get multiple positions. If you know we're on an uptrend, you can build your positions by getting positions underneath these value lines. And then inevitably, we've got here. So I'll show you how these three phases actually work. We've got phase one over here. I'll just mark this out nicely for you. Phase one occurs. That's contraction phase. So when we see this phase happening, we know we're in phase one. We do not trade in phase one. We wait for the expansion phase to start. Then we get this whipsaw out of the box. This is the start of phase number two. In phase two, what happens is we're in this expansion phase. Price will oscillate around the value line multiple times. So these big players can accumulate. Guys, these market makers, they enter with massive positions. They can't enter into one position. They have to enter in multiple positions. So they'll enter over here, they'll enter over here. And once their positions are filled, then they will decide to take the market into the trend phase, which is this here. You can see where price shoots off away from the value line. This is what we call the trend phase. And this is basically where you make your money. This is where the market makers take profits. So they accumulate their inventory over here. And the trend phase when they're actually taking profits off their accumulated inventory. So this three-phase cycle is occurring all the time on every time frame in every market. And indicator X helps you understand how this is working. I'll give you some more key information about this. So these are key components that indicator X contains. It contains these contraction levels, expansion, and liquidity. And these are very important levels. It works on three types of contraction. So we got a 2-bar contraction, also known as inside bars. We've got a 3-bar contraction, which is a double inside bar. And then we've got a multi-bar contraction. And the indicator marks out you can choose between 2-bar, inside bar, 3-bar, or multi-bar. The example I'm showing you today is a multi-bar contraction. And contraction works all the same. Here's the 2-bar contraction. So the software, what it does is mark out any inside bars and then draw lines across it. And these value lines become this dividing factor. So when price is above the higher time frame value, we're looking for buys. When it's below it, we're looking for sells. Here's a 3-bar contraction. It operates the same, except 3-bar is just giving you more accurate data because it's operating with 3 inside bars. We've got a mother bar over here, and then an inside bar, and then another inside bar. And if you guys don't know about inside bar trading, definitely check it out. It's a very valuable tool to understand, just to add to your price action. You know, we want to understand price action trading alongside with understanding indicators, because, you know, understanding the indicator alone is great, but if we understand the price action, it just helps us. This is a multi-bar contraction, which is the example I'm showing you. So we can see we've got the green here, which is the origin. These are the main ones. And then we've got the minor and the major, which is the gray and red. So the gray and the red are part of the same cycle. This green represents the start of a cycle. And then the green and the red and the gray are showing you these are attributes part of this cycle. It's a little bit detailed first, but once you understand it, it really opens your eyes to how the market works. So we got this contraction boxes forms, and then we go into expansion. These are the expansion lines, also known as these value lines that are created. And then we've got the liquidity lines. we've got the sell liquidity on top, and we've got the buy liquidity on the bottom. So we can use these liquidity lines as a standalone indicator to enter our positions or to exit our positions, because price is always going from liquidity to liquidity, because this is how the market makers trade. So the market structure from market makers' perspective is using these contraction, expansion, and liquidity lines. Here is the whole master pattern concepts methodology all summed up. So you can see we've got the phase 1 contraction, we got the whipsaw, and we can actually count these whipsaws. Sometimes it's 3 up to 7 times. 1, 2, 3, and then it shoots off into the trend phase, which is the profit-taking phase. So let me show you some more examples on the chart, how this works and how you would enter these trades. So here you go. Here's another example. Guys, this is just Bitcoin, but if you open up any asset, it'll show you the same kinds of information. So in this example, if we were going to trade, we would be entering our long positions when price is above these value lines here. This is where we would focus. We would not want to enter above the lines because the risk becomes too high. And I'll show you exactly how these software works. I also use one of my other indicators in combination with this, guys. This is one of my favorite tools. It's called the TDIX. And I'm going to show you how you use them in combination. The TDIX works hand in hand with the indicator X to create more precision, because when you get price under these value lines, where's the best time to actually enter? And I'll show you the first best time to enter under the value line is when price hits a liquidity line. You can see over here if I zoom in. See, price hits this liquidity, and as it hits it, you see it triggers all these stop loss levels, and it's under the value line. So the first places we're looking to enter is on these liquidity lines underneath the value line for our long positions. Alternatively, we can look at the TDIX over here, and I'll go into more details about how this works. We can wait for these, what I call, these are shark fins. Shark fin is when we get price breaking. Can you see this white breaks out of this band over here and it produces a dot? This is showing us a high chance of reversal is going to occur. And it did occur directly underneath the value line. So we're looking for these reversal points underneath the value line to get our precise entries into these long positions. Or we look for divergences. So the TDIX marks out divergences and reversal points. So we could have taken another entry here, which is underneath this value line. So you can see we've got an origin box over here. The green are the major value lines, and the red is the minor. So you can see we've got this value line over here, and then we've got we're under the origin value line, and now we're under this value line, and we've got a divergence. So these would have been two very easy entries you could have taken into this uptrend. Let me just take you into the indicator X, TDIX for a moment, just to explain it before I go into more details. So the TDIX is designed to help you get perfect entries, to spot reversals, and to understand the flow of money. This is how it works. So we've got a few different things. We've got these money flow, which is this red and blue waves in the background. This is showing us when there's money coming in and out of the market. So it's showing us when there's more buyers, we have bigger money flow. And then when we've got more sells, a bigger money flow, it's more red. And if there's less, it becomes less. So this is helping us understand the flow of money in the market. If you understand the flow of money, it can help you trade according to that asset. Then we've got these Bollinger Bands, which are these blue lines. And these Bollinger Bands are helping us detect volatility in the market. So we've got these shark fins. A shark fin is just when we get this white RSI that breaks out of the Bollinger Band. This is showing us a very strong reversal point in the market. And then we've got the super shark fin over here, where we get these breaks of the Bollinger Band in oversold or overbought regions. So the dots become very strong information that shows you when price is hitting a bottom or when there's chance of a reversal occurring. This indicator is made up of EMAs, RSIs, Bollinger Bands, and money flow. So it's an ultimate tool just helping you navigate the market. And I like to use it in combination with the indicator X. You can see here, these are the super shark fins where we get this the RSI breaking out of the band, and it's in this overbought, oversold regions. So it's showing us when price is hitting a topping point, especially when we're looking on the higher time frame. And these shark fins are just when price breaks out of this band, the indicator software marks it as red or green, just indicating to you that, hey, a reversal could be coming. And then we've got the money flow. You can see when we've got decreased demand, so we've got the buyers are getting less and less in the market, we know that the sellers are going to take over, and these actually become divergences as well. So we can use money flow divergences, and we can use the RSI divergences. And you can see over here, the sellers are getting less and less. So we know price is going to suddenly shoot up after this, or it's going to shoot down after this. It gives us very important information you can see here. So you can see we got big money flow. Then we get a sell, which is a divergence at this peak, and then suddenly price drops. And then the same thing, the price comes all the way down, and we get a divergence. You see, first we get a dot, and the dot's letting us know that a bottoming out is happening. Sometimes it doesn't happen right away, but then we get a divergence which confirms it, and then you can see the money flow. The sell is getting less and less and less sells in the market, and then suddenly get this massive movement. I also have this candle color signals. You can turn it on and off, which will actually color your candles with this methodology, showing you when the buyers and the sellers according to the chart. So it's just an extra confluence you can use. And here you go. It works in these oversold and overbought regions as well. So this is quite an ultimate tool. I'm going to take you on the charts now and just show you, now that you've got a basic understanding of how the TDIX works and how we can combine it. So you can see over here, we've got this divergence occurring in the market. And we got to use these tools in context. We can't just enter when we get a signal. We have to understand where the price is located. And that is why these value lines are super helpful, because once price is under the value line over here, this is where we're looking for our long positions. But first, before all of this, we want to understand the market bias. So it's a super easy indicator to use. First step is we go into a higher time frame. We're on a daily now, and we can see we're in an uptrend. We can see we're in an uptrend. So when we're in an uptrend, we want to look to enter when price is underneath these value lines. And you can see, guys, it doesn't get more accurate than this. Every time price is underneath these value lines, it becomes the ultimate position to enter. Okay, over here, price might have gone a little bit down, but then we can also use other concepts, like we can wait for trend line breaks. We can see a trend is forming over here. But look at this. Okay, so here's a perfect example. We're on an uptrend over here. Then if I turn on the TDIX, look at this. So first of all, we can see here, we can see the Bollinger Bands are getting real tight. So we can tell there's incoming volatility about to happen. And it does. As soon as price breaks above this value line, there's many different strategies I teach in my group. I have a full-on training course for this when you join, with plenty of rooms of videos of how to use it. There's multiple ways to use it, and it's one of the most flexible indicators working with any strategy. So you can also enter on these breaks of the value lines, which is another strategy on the higher time frame. And we can see over here, we've got this white RSI line that's broken above the middle line and the 50-point line. So this point over here shows us we're looking for buyers in the market, especially on the daily. And then it just confirms it for us here. Price breaks above this value line, and then suddenly it just bursts up, hits liquidity, and then it bursts up some more. So sometimes we won't get these reversals in these upper liquidity lines if we're on an uptrend. And then you can see we get price goes into contraction. As soon as price goes into contraction, that's when we want to pay attention, because we know expansion is happening next. And then here, guys, this is a perfect example. We go, price expands out of the box, and we get our confirmation on the TDIX over here, which is a shark fin, a super shark fin, which is where we get the dot. This is showing us that there's going to be a reversal, because, guys, remember, this is how they trick the market makers. This is how they trick you. Price goes down over here. You can see we get these big sell candles. This is where the retailers are selling the market. But this is where the smart money is buying up all those sells from the retailers and inevitably turning around. So at this point, we're not looking for sells, we're looking for buys. And if you understand this market maker concept, you will end up on the right side of the market and you will get the most precise entries. If you'd entered over here, I mean, you would have got the best entry, guys. What this indicator does, it keeps you in a position where you get the lowest drawdown and where it will affect your pain and pleasure threshold the least amount. So trading is all about psychology. It's all about behavior of people. You're not actually trading against lines and candles. You're trading against people, and you're trading against people's emotions. So it is designed to put you in an emotional state to make the wrong decision. This is what the market's designed to do. And if you understand that, if you understand this pain and pleasure threshold, you know, over here, a person is in pain. You know, if you're entering a short position here and then it turns around, you're in pain. As soon as you go underwater, you're in pain until it triggers your stop loss. So what this is doing, it's just helping you stay in alignment with the market makers, because they are the liquidity in the market, and we want to trade in alignment with them. And you can see over here, we're still in that uptrend, and here would have been our next entries, would have been at this other super shark fin, or over here at this divergence, second entry. But remember, we're on a very high time frame now. If I had to go into a lower time frame, like a 1 hour, you'll see it's the same thing playing over and over again. So here we go. At this point over here, you can see we get contraction forming. We know we're in an uptrend over here because prices hasn't broken these lows. And then if we look at the indicator, we can see price breaks below the value line over here, and we get a super shark fin on the oscillator. And what we can do, guys, you know, once we enter these trades, there's multiple ways to take profits. If we'd entered over here at this position, we can set our stop loss, you know, just below the swing low, and we can target the value line. The value line is the safest place to target because price oscillates back to this level. You'll see over here, price comes below value, back to value, comes above value, back to value, back to value. Can you see price keeps coming back to this value line? So these value lines become these magnetic levels that price loves to keep coming back to. So if we enter a position over here, the probability of coming back to the value line is very high, or we target these liquidity lines to the upside. And you can see price came up, took out all three of these liquidity lines over here with a big reversal candle. And then from this point, it actually reversed. And if we decided to take a reversal, you know, over here, you can see we got a divergence print on the oscillator. And remember, we look for sells above the value line. So I just want to emphasize that we're looking for buys underneath the value line over here, and we're looking for sells above the value line. So the value line is just keeping us in alignment with where's the best time to buy, where's the best time to sell the market. And you can see, I mean, we would have sold over here, and we could have done the same thing. We could have entered our sell at the liquidity, because these liquidity lines become these reversals. We can see price hits liquidity, and we get a divergence on the oscillator. So you can see we could have targeted the value line number one, or we can target liquidity lines below, and you can see price played out perfectly in this example. From liquidity to liquidity, guys, this is how the market moves from the liquidity to the liquidity. So it takes out liquidity on the one end and takes profit at the other liquidity. Because like I said before, these market makers, they trade with big position sizes. They need your liquidity to enter their positions. So the best psychology I can share with you in getting ultimate entries is you want to enter the market where the masses are going to make a mistake in the market. And these stop loss levels are showing you where the retailers or the masses make mistakes. So these become amazing entry points. And you can see it comes down here. Show you more detail. Price hits this liquidity line over here, and it reverses again back to value. So look how many times it keeps coming back to this value line. These lines are magnetic levels. Price keeps coming back to them. All right, so I've gone through the TDIX, which is the oscillator, which we use in combination. So this is just a volatility oscillator where indicator X is a price action tool. Now I'm going to take you into my next indicator, because it's a set of 3 premium indicators. which is the Trendex, which is one of my favorite tools to use. What it does for you, it marks out your key levels instantly. So if you don't understand key level trading, this is going to show you the best places to enter. This is also a price action indicator, and it is also a leading indicator. So it will show you something that happens before it actually happens. So let me just go and show you a bit of details about the indicator before I go into the charts and go into more details. So Trendex is designed to help you identify directional movement. Guys, if you want to understand the movement of the trend, the direction of the trend, this indicator shows you immediately whether it's good for buyers or sells. It will clarify your directional bias very fast. It's a price action leading indicator, which helps you predict the future. It will show you something before it's going to happen. And I'll show you in a moment how that works. It also helps you get perfect entry and exit points. What it does, it plots everything out for you extremely easy. So it works with pivot points, and pivot points is a very price action, a very popular price action tool. A lot of institutional traders use it. And in this indicator, it's going to work with daily pivots, weekly pivots, and monthly pivots. It also marks out all your prime support and resistance levels and previous day high and low levels, which are all key levels that you really want to understand. If you are a trader, you really need to know these levels. Whether you work them out by hand or whether you use my indicator, it doesn't matter. Just understanding these levels is important. So what the indicator software does, it immediately automatically creates for you these pivot ranges. So it measures the high of the range. See these blue lines, it's resistance 1 and the previous day high. And the bottom is support 1 and previous day low. And then it shows you all these key support levels and resistance levels. And it works out the pivot range in the center. The pivot range is known as the central pivot range. So it creates a range out of these 3 lines. And I'll show you why that is so important. The pivot is our leading indicator in this scenario. So what the pivots tell us, if we have the next day's pivot lower than the previous, we know it's a descending pivot, which is showing us it's a downtrend. If we have our pivots increasing, which shows us an uptrend. So we get an uptrend and a downtrend, and our pivots can show us this. We get long pivot reversals. So for instance, these pivots will show us whether price is bearish or bullish. If the market opens and price gets underneath the pivot, we know that it's a bearish market. And you see it stays under here. Then it breaks above the pivot, which means we're going into a bullish market. And you see the same thing here. We got a bullish market, and then it opens underneath, which is showing us these reversals. So there's many ways we can use this tool. When we have wide pivots, and I'll show you this on the charts soon, guys, it's going to blow your mind. When we've got wide pivots, it's letting us know we're in a ranging market. And when we've got thin pivots, it's letting us know we're in a trending market. So as the market opens, the moment it opens, you can look at your pivots and it will tell you what is going to be the conditions of that market that whole day. We go into some setups over here, which I'll actually show you manually on the chart. So for instance, over here, I showed you we've got the monthly, the weekly, and the daily pivots. I'll show you over here. We've got the daily pivots. The daily pivots we use if we're just day trading. This is for scalpers. We've got the weekly pivots for mini swing trades, and then we've got the monthly pivot for bigger swing trades. So right now I'm on the weekly pivot. All the pivots work exactly the same way. This is a weekly pivot. So how these pivots work is they're calculating data 1 month's. So this is a weekly, so it's 1 week's worth of information. So the pivot starts at the opening of the week on Monday, and it ends at the end of the week. And it calculates the data from the previous week. So this previous week's worth of price action gets calculated for the next week and worked out for you into where these key levels are located. And I'll show you the difference over here. So if you can see over here, this market over here, we started the market. So as the market opened on Monday morning, you immediately would have seen that we had wide pivots. So this would have told us that for the next week, this asset would be ranging. So we can know what will be the conditions of the market a whole week in advance just by looking at this. And then you can see we got a ranging market for that week. Price just ranged around the resistance. It hit resistance point, bounced off, hit resistance, came down. So this wouldn't have been the best market to trade, but also if you see it's going to be a ranging market, then you can trade the range. And this is where we can use indicator X. There's ways where I show you how to combine indicator X with trend X, but we won't have enough time to go through that today. But you can combine the two together. If it's a ranging market, that's when you want to turn on indicator X, trade the range. And then look, guys, this is what I want to show you. Pay close attention to this. The next week opens, and can you see how much tighter this pivot is than the previous one? This week opens, immediately we know we want to get super interested because we've got a tight pivot. Tight pivots let us know that there's going to be a trending market's going to occur. And you'll see price oscillated, and then when it found support on top of the pivot, guys, these pivots, they do multiple things. First of all, they tell us what is the condition of the market, and they are also launch pads for price. Price likes to launch off of these pivots. It also tells us whether we're bullish or bearish. And you can see over here, we've got an uptrend happening because this pivot is higher than this pivot. So immediately when this week opens, we know we're in an uptrend because we have this ascending pivot. The next thing we look for is we can see when price is above this weekly, we know it is extremely bullish. And we're looking for buys in the market. And you can see price got above this pivot. It found support in this region, and then it just exploded up. I mean, this shot up. And this is pretty common, guys, especially on weekly pivots. Price likes to make big movements off the weekly pivot. It did like a 10% move. So where would we have entered in this position? The best place is to enter in this position. You can see here, we've actually got contraction happening. If I had to turn on the indicator X, it would work out this contraction for us. It would probably work out that this is a contraction point right over here. So it's nice to know when you understand, where contraction occurs, it helps us. So we got contraction happening in the market, and we know after contraction comes this expansion. You can see we already got the whip phase. This would have been another area of contraction. So, when we apply these all together, guys, it really creates a story for us. Now I'm manually doing what indicator X would do, just showing you how it works. So if we had indicator X on the chart, I don't want to put it on because it will make it a bit messy, but I'll just manually work it out for you. You can see we've got contraction happening over here, and then this contraction goes into expansion. We've got this expansion phase, and then the expansion phase will move into this thin pivot, which we know is going to be a trending market. So we know that there's going to be a trend occurring soon. And price breaks on top of the grid, and this would become our very precise entry, guys. We're underneath the value line, and we're above the pivots, and we can target either resistance 1, resistance 2, or resistance 3. But when you get tight pivots, we know price is going to go up to resistance 3. And look, price went to all our targets. If we wanted to re-enter, guys, these blue lines, I created this indicator to show you perfect re-entry points when price breaks these blue lines, because this is the previous week high and the previous resistance 1. When price breaks these lines, this can be our re-entry point. So if you missed your perfect entry over here, we've always got a re-entry at this point over here. And then price just shot up, guys. It just like exploded. And then we come into the next week, and you can see we've got a wide grid. So I wouldn't be that interested in trading this because it's going to be more of a ranging week. How this is extremely valuable, guys, is that what I do, the start of every week, I go through here and I start flipping through all the tokens, and I looked for, see here, I've got weekly narrow. So I've already categorized all my weekly narrows, and you can see I had weekly narrow over here, weekly narrow over here. So I put them all together, and these become the best assets to trade for the week because we know that these are going to be trending movements. You can see here, price looks below, and we get this massive short below the trend line. Same with OGN, all these tokens. This was actually a fantastic trade that I took at the opening of the week here. So look, as the market opens, guys, we know immediately that it's going to be a trending market. Immediately. I mean, there's no other tool that can give you this kind of insight. So then we could either enter on the grid. That's first entry, or second entry, we enter off the break of the previous week high over here. if we had entered on this grid, I'll show you. If we entered on the grid, we could have had multiple take profits. Take profit 1 at resistance 1, because price likes to go to resistance 1. This would have been the safest place to take your profit. Otherwise, we target resistance number 2 or resistance number 3. Didn't go quite that high. The second entry would have been the break of the previous week high, and then we target resistance 2. So these would have been 2 amazing entries we could have caught at the beginning of the week. And then what I do in my group, I mark out all these levels, and every week I post all the narrow grids, because these become the best, most volatile pairs to trade for that week. And then this tool makes it easy, guys. It shows you all the key levels. It shows you where to take your profit, where to enter. Here, if we look at the week before, we also had a nice weekly grid. Can you see? Price got into the grid and then shot up to take profit 1. So there's multiple ways we can trade with this. And I just want to show you an example. So we've got the weekly pivot. I'm going to turn on the daily pivot now as well to show you how you can get super precise entries, because the daily pivot is going to show us the best. So the yellow is this week. So we know the week is going to be trending. But then every day we can come to our chart and we can turn on the daily pivots to find out when would be the best times in the day to enter. And you can see we've got a narrow weekly grid. And then at this point, we've got a narrow daily grid as well. So we know at this point, this would be an excellent time to enter our trade. We're above the weekly, we're above the daily, and both of them are narrow, and we can target the top of the weekly range. That would have been one entry point. If we missed that entry, we've got the next day. You can see it's not a tight daily, but it's a tight weekly. Price typically likes to respect these grids. So we could have entered the next day when price is above this grid. That could have been our second entry point. If we go over here, you can see the primo combination, the prime AAA grade combination is when we get narrow weekly, narrow daily. So at this point over here, you could have known with certainty that this was going to be a winning trade. And I actually took this trade. You enter when price is above the grid. Stop loss can go just below the previous swing low. You target the top of the weekly range. And this would have been a nice 5% move. Guys, this is a high probability setup. This indicator will show you where to take trades and when not to take trades. It'll show you the highest probability trades to look for when we combine these assets. Like you can see here, this would have been not the best trading environment. But if you look on the daily, if we were just trading purely off the daily, so if we turn the weekly off, like I said, in my group, I teach you how to use this, guys, because there's a few different ways. So I can't show you everything in this live training. But look here. If I turn on this full grid, which remember, guys, this is a daily grid. So this is showing us a day's worth of information. So from the start of the open over here to here, it's 1 day's worth of information. And it's calculating the key levels from the previous day's price action. So you can see we got previous day, we've got a wide grid. And then the next day, it's a little bit thinner. And then suddenly we've got this very tight grid over here. This would have been a strong sign to get interested, guys. This pivot grid is one of the AAA grids, which I teach in my group to look out for. As price got on top of that grid, we would have entered because we can tell that this is going to be a big movement happening. We can target the top of the range or up to resistance number 3, which is the most likely place price will hit in this scenario. And that would have been a nice confirm, guys. If we saw this setup, we could be 90%, 95% sure that we were going to get success in this trade because the grid tells us so. So it's giving us information, and we would have known at the start, guys. I don't know what time the market opens in your country. In my country, it happens at 2 a.m. So I'm not really awake for this, but if you were awake, I would have seen the moment the market opened, the moment it opened, I would have been able to see, let me go into lower time frame. I would have been able to look at this grid, and I would have been able to see that this grid was going to give us a big movement this day. Let me find it again. Okay, well, here's another example. Here's another example of a perfect grid. We're looking for narrow grid. Price gets on top of the grid. Remember, we want price to be on top of the grid, and then it shoots up, takes profit 1. So these grids, guys, they're giving you so much information. If you guys want to know more about these indicators, go check out my website. It's 𝗂𝗟𝗔𝗓 /sniper school. I've got a lot of information on the website. I'm currently running some good specials at the moment for if you want to buy monthly, weekly, or even lifetime. I'm offering lifetime membership at the moment. I have a 3-day free trial, guys. Go to the website, try out the indicators for 3 days, no expectation, test it out and get the results, see for yourself, and then only make your decision if you want to go and purchase the indicator. But go try for 3 days. I will give you everything in those 3 days. I'll give you my training. You get access to my Discord group over here, where you can actually have access. You can see I've got training for every single indicator X. I've got training, Trend X, I've got training, TDIX, I've got training. And then I've got my setups area where I actually post every week. I will post the narrow grids, the best grids to trade. And you can see, guys, we have so much success on these grids. Like, the results are crazy because, you can't beat price action. If you understand price action and you understand how it works, and you can calculate these manually as well, because I'll even show you how to do it now. You don't even need the indicator to do this. Indicator does make it easy, but basically what it's doing, see these blue lines, it's calculating the high of the previous day, and it's calculating the low of the previous day, which you can do by hand very easily. So you can see this previous day, this was the low point, this was the high point, and then it basically, I need to just grab another tool. It measures the high and the low. I'll clean this up for you now. It measures the high and the low of the grid. I'll show you. See, this is what it's doing. It's measuring the low of the day, the high of the day, and then it's calculating that. Then it's measuring the pivot grid, which is the center. It's basically the center of the range. And then based on whether the price moved a lot or a little, it'll work out whether it's a narrow grid or whether it's a wide grid, which is basically showing you whether it's going to be a trending market. You can see over here, narrow grid as opposed to the previous day, which was a wide grid. So you can work it out by hand. I strongly recommend you guys learn more about price action as well. If you're a new trader or even an advanced trader, price action is a very powerful tool that will really take your trading to another level. These indicators are basically just, taking price action principles, making it easy for us to understand, but you can do this all by hand. You do not need indicators to do this. I was doing all of this by hand for many years, and then I decided, well, let me create an indicator that does it all for me and make it very easy. And that is basically how I came up with these indicators, was just to simplify things for myself. And then I figured out this is actually an asset that can help other traders take their trading to another level when we combine these tools together. Let's just have another look. So over here, guys, I've basically put together, I'm constantly back testing because, the more you back test, the more you can actually see how effective these strategies work. And look at this. I actually looked at this a few days ago and I didn't enter it because I entered into another token. But I see sushi is pumping today, guys. Our entry would have been here. It was, we would have seen the start of the market day. We got a tight grid. We would have entered on top of this grid. Target 1, target 2, target 3. And look how it just shot up and hit all our targets. And then it came down and it literally hasn't stopped moving since then. It's still shooting up. But this was the start of this big move, happened at this narrow grid over here. So you can see, guys, these narrow grids, they're amazing. Let's go. I've got a whole list of narrow grids that I've actually created for every day. I go through, the chart, and you can see I was marking out these narrow grids. 𝗂𝗡 was another one I was looking at yesterday. It had a very narrow grid, and then today it's pumping again. You can see here, look. Super narrow grid. We would have entered on top when price got on top of this grid. That's where we would have looked to enter. And then we go target 1, target 2, target 3. Price would have hit all our targets. And then it came down. Look at this, guys. Guys, these levels, there's so many different ways to create these, to trade with these levels. They're showing you key levels. So if you're not an experienced trader, immediately it will put the key levels on your chart. You'll know exactly where to enter. Price shoots up, hits our targets, comes down, and look, it finds support on these levels. Does not break completely through, finds support on these levels. And then on the next day, we could have actually traded this day as well. So we want to look at the information. We can see, look at all these rejection wicks, guys. Price is rejecting this pivot, which is giving us a strong sign that it wants to go up. So we can also enter this day when price is on the grid. Stop loss comes underneath the grid. And here we go. Target one was hit successfully in this instance. So it makes it really easy. If you want to simplify trading and make it very easy, pivot points is definitely the way to go. It shows you where to enter, where to exit, where to set your stop losses. And it calculates it according to price action. So it gives you accurate levels, guys, based on the previous day's data. All it's doing is it's taking this day's price action, calculating into the next day. This day's price action, calculating into the next day, which is a very, very powerful tool to use. All right. So yeah, if you want to check out more, go to my website. At the moment, I'm running some great specials. It's been tested over 700 traders in a group over 1 year. So we have a lot of testimonials. But there's no better way to test it than to test yourself. And guys, this weekend, I'm launching my new screener as well. I'm bringing out a screener, which is going to be assisting you in being able to locate the best coins to trade for that day on top of all the other indicators, making it super easy for you. All right, guys, that's all I got in me today. We've got a few other guys that are going to take over now to keep bringing you more value. Hi, guys. How you doing?
Hello again, mate.
Hello.
Welcome back.
Long time no see.
Yes.
Having lots of fun here.
That's good. That was excellent, mate. Well done.
Love it.
Thanks a lot, guys. Couldn't do it without you guys supporting. Cool. Take it over.
All good. All right. Thank you. Cheers. All right.
Hi,
Luba, how are you?
Hello, good. Hello, everyone. How are you guys? I saw your previous session was amazing.
Thank you. Yeah, we apologize. I put the slides up for some reason. It wouldn't let me or Matt share PowerPoint on StreamYard. We don't know why. It wouldn't let either of us share it. But it's in Discord for all you guys. So I put it in the trading chat for all the students. Hopefully you guys get a chance to check it out, and we'll do more again. We're gonna do some AMAs. So yeah, thank you.
That was amazing. What time is in your part of world? It's too early, I believe.
5 a.m. I've been
You
up for almost
guys
24
rocking.
hours, but I did sleep for 45 minutes. I like your shirt.
Oh,
Yes. We're
yeah.
all repping. Love it. Don't get wrecked. Yeah, that's the back said. Don't get wrecked.
Yeah. It's all about the risk management and psychology. Don't get wrecked. The market is
That's it.
designed to help to get your money out of you, not to give you. And that's
That
why
is it, yeah.
we need to protect ourselves.
We do.
Yeah. All right. So I still can't share this presentation either. So we'll just go through a bit about what it's about. But we're talking about risk, and then obviously the psychological effects that not managing risk can have, and also the psychological effects of just trading in general. And I know that Beth and both Luba have been through the ups and downs of this as well. So we're going to talk a bit about that, but it's going to be based around similarly the previous times I've talked about risk management and some of the techniques that I've developed. And again, we'll have you guys weigh in on this as well. But basically, the whole idea of what we're doing is we want to manage the downside. So if there's no one out there that gets 100% of their trades right. So you need to stay in the game, and the only way you can stay in the game is to still have money, right? Because it requires money to be in this game. So what we're going to do is talk about how we can safely trade and stay in the game by controlling our risk. Now that risk is controlled via not via, but I mean, we're controlling our risk, and I'm talking about spot trades. I'm talking about, you know, leverage trades, and even, you know, some of your medium to long-term trades, you may wish to have, you know, your stop losses and whatever else in there so that you don't end up in a hole if the worst happens. So there's some tools in place to do it, but there's other things as well, like other tools you can use as well. Like you can use your friends to lean on to help you as well when things do go bad. So that's where we start to touch in on the psychological, you know, aspects of risk management as well. So a lot of traders, when they start off, they don't know about risk management, right? And you just dive in. Potentially some people can just dive in and just start, you know, it's a weird thing. The first time people start trading, a lot of people actually win a few and they think this is easy. And then reality strikes and they get a couple wrong. And then before they know it, they're losing more than they're winning. So experience is a big thing, but what you have to also do is you have to learn from your experience. So the more experience you get, the more better equipped you come to handle those emotions that come with trading. And the more tools you develop in your system to manage the downside, the better you're going to be at avoiding those mistakes. Okay. So risk management is all about defining a strategy that manages it all and keeps you in an emotional state of stability. Okay. So you can, you know, you can set up a trade, you can look at it, and you can go in on a position size that if it doesn't work out and you get it wrong, you're not going to be in an emotional state other than relaxed. You know, yes, it's okay to also go, oh, I got it wrong, and be annoyed with yourself for that, but you're not going to be stressing about the money side of it. You know, you should be able to enter a trade, leave it for a day, leave it for 2 days, get on with your life and not be worried. Because if you're in a position size where you're worried, the position size is too big. That's my motto. And then the other thing is discipline as well, right? So you've got experience, you've got the risk management side, and then it also requires discipline. Like being in this game requires discipline, where you stick to your rules, because we work hard to develop rules that make us successful in this, you know, successful with trading and investing and whatever else. But if we just throw all of our discipline to the side, then it's kind of like, why have the rules in the first place? So you do have to be really disciplined and adhere to your own program and keep yourself honest, and also make your friends keep you honest as well. All right?
Yes.
So yeah, it's about cutting down the losses in terms of not the losses in terms of the number of trades you lose, but more about the losses that you're losing in terms of dollars. Okay. And it's about making sure that when you take a trade, the upside is far greater than the potential downside. I reckon it must be a full moon, because this dollar is crazy.
It is a full moon.
I'm sure he has something to say. We need to listen.
I don't know. He
always does.
Kobe.
Be quiet, Kobe.
Probably
worst,
when
right?
you started all your journey, man, he was with you and he knows how you've been from very beginning.
Mm-hmm. Yeah.
Yeah. Also,
All
Beth
been
was
there.
visiting, you know, for a number of weeks. So
He's
isn't
sad
who he is.
now.
Wow, he's amazing.
Kobe.
Yeah. That's
Kobe,
he
do you
wanted
agree
to
with
be.
Steph
He
when
wanted
you're
to
free?
be on stage, and he has something to say. Definitely.
I know.
Oh yeah, my dog.
That's because
did
I've been
too
sitting here for
yesterday,
a few
trust me.
hours ignoring him too. So yeah, basically what we're going to do is talk about keeping your emotions in check. And if your emotions are more in check, you make smarter decisions, right? It's the same as, it's everything in life is like that. You know, with your day job, with your family, if you're not as emotional and agitated about stuff, you make better decisions generally. All right. So that's part of it as well. And then the other thing that I want everyone to understand is, which some people don't realize, or maybe just haven't even put any thought into, that, you know, if you lose a certain percentage of your portfolio, it actually takes a much greater percentage on the next trade to recover from that. You know, so for example, if you take a trade and you lose 10%, you need to then recover 11% next time to make up for it. Okay. So for example, if you have a trade where you have $100 and you lose $50, so you've lost 50% of your position, you then have to double your position. So you make 100% to get that $50 back. So it's all about protecting the downside, and you're not, because we're never going to win 100% of trades, but it's about limiting our losses in a way that we can still, let's say, get 6 out of 10 trades correct, and we can still grow. Okay, so it's limiting the losses and making the upside still worthwhile. Because if you manage those downsides correctly with the right risk management, you know, you can lose many trades in a row and your account will still be there. Yes, it'll still draw down, but at least you can learn from your mistakes and you can make some changes and still be in the game. Okay, which is a very important thing, because there's so many people out there get wrecked very quickly, particularly when you've got all of the indicators and everything lined up and you think, I've got 7 or 8 reasons why I'm going to take this trade, and it goes the opposite way, because that's what the market does. So it's about learning all that sort of stuff. So how do we go about doing it? Now, what I thought, guys, was I can show a bit of a trade that I'm in at the moment. So I'm going to just like share my screen, and then you guys maybe can also talk about some experiences that you've had with it as well. So I'm going to go into that one.
It's very important to prepare yourself to plan your trade. It's really important. And these FOMO trades, they are killing you. I know, because we are all in the YouTube shows, we are like everywhere. We can see pop up the trade in a Twitter everywhere, and you just like, you want to jump in straight away. And I can tell you, they are killing you, because the FOMO, it's okay, the fear of missing out. It's not the fear of missing out. It's straight away you can say, I will be losing. You need to just reprogram your mind and say, it's not the fear of missing out. It's I will be losing. Because
what can you lose?
Every trade you need to plan. And I can tell you guys from my experience, when I started with the banter team, at that point was a bull market, the second leg of the bull market. And I can tell you, even the brick flight at that time, everything flied up, everything. And you are thinking that you are genius. Really, that's what Ron is saying. Like, you are genius. You can do this. It's so easy. And when everyone is telling you need to learn, you need to learn, you need to understand. No, I understand everything. I can trade. I know this game. No, you don't know this game. You need to go
and then you start losing. You're like, what's
going on? And I want, because some of you are new here and the bull run is just starting, and you think like it's gonna be easy, I will do it. No, I lost everything last time. I made 100,000 pounds, like in UK money. For me, it's a huge money, and I lost everything, because the greed comes. It's psychology. That's why we are talking here about the psychology. The greed comes, the FOMO comes, like all these psychology aspects, and that's it. You are not anymore the genius. And then one day you just sit down and you realize, oh yeah, I need to learn. I need to learn this game. And the first thing is, it's so important, is a risk management, psychology, and you need to go through all this, guys. You need to learn.
Absolutely, it's true. Similarly, you know, I know Beth has been through it as well, but also, you know, me, I had it bad through that bear market with what happened with Luna and stuff. So anyone that's been in crypto since that last cycle would have felt that. And that's when I decided to go from being someone that just wanted to invest to someone that needed to learn how to trade. And as it just turned out, that trading and looking at the charts and stuff like that was something that I just really love. And it is what I get the most of a kick out of. But I grounded out hard for a couple of years. Like that whole bear market, I just learned and tried different techniques, and I lost money and I won money, and I went through this whole thing. But it was only, it took me probably close to being 2 years before I was consistently making money from trading. It was a battle, and I paid my fees. Like I've tried everything out there, and I've come up now with what I think is a simple system but effective. And I don't enter a trade without doing what I'm about to go through 100% of the time, and I've never broken that rule since I started it. And since I've started it, I've had a profitable month every month. And in 2 weeks' time, I'm going to be full-time crypto. No other employment. So yeah. So
congratulations.
I have one more month.
yeah. So it's exciting, and it's a craft that you can learn, that you can have forever. And it's all about the moment I started protecting what I was losing, I became more consistently better at making money. Now my win and loss rate didn't necessarily change, right? It changed minorly, but the money going out was far less than the money coming in. Before, you'd have lots of money coming in and lots of money going out, and now it's the other way around. It's more going up than going out. So yeah, guys. So on this screen here, this is we're not going to talk about the technical analysis at all on this. That's not what we're here for. We're talking about how do we manage this trade from a risk perspective. And how do we manage it in a way that the risk is comfortable to us and makes sense? Now, what is comfortable to me may not be comfortable to Luba, may not be comfortable to Beth. Everything's comfortable to Kobe at the moment because he's on my lap. But we've got to work out something that, works for you. I have my own system that I can talk about. It's pretty simple, but you guys can have a think about it. Let it marinate in the back of your head as well, what may work for you. So I'll talk about mine, and then the others can sort of weigh in on that if you don't mind. So for example, I wanted to, and I'm in this trade, by the way, I wanted to take this TIA trade for various reasons, which I won't go into exactly here, but I knew my stop loss had to be below this sort of like swing failure point here. So that's where I've taken my long position tool. I put it in where I was entering in. And I have I'm looking at this trade, and you can see on the long position tool there, it's actually 3.75%. You guys might not be able to read it, but it is actually 3.75% is the depth of the stop loss on the price action. I don't know if this actually helps by making it bigger or not. And then the upside all the way up to the top of this is what I'm hopeful it'll do, because it's been in this downtrend for a bit. Gives me a risk to reward ratio of 7.26 to 1. So that's a solid trade, right? That's a good trade. There wouldn't be anyone out there, I don't think, that wouldn't be happy to have that risk to reward. However, what's the risk going to be? If this trade turns around and goes all the way down to where I want my stop, which is my point of no return, how much money is it acceptable for me to lose? Now, everyone, like I said, everyone is different. I used to, when I wasn't doing this method, I would just take half my account or 3/4 of my account and just go bang. And my stop loss was where my stop loss had to be. It was terrible. And great if the trade wins because you're going in on a decent position size. But if it goes bad, you can lose 40-50% of your account in one hit, which means you don't survive very long before you run out of money. So for me, I have a rule. I don't risk any more than 3% of my entire leverage account. Now, I'm not talking about my entire portfolio or anything like that. It's just what is in my leverage account, what I've got allocated for leverage trading. Now, the way I calculate that is I use this website here called Crypto Win Rate. So it's very, very simple to calculate. You literally put in whatever your trading balance is. So how much money do you have in your leverage account? In this particular example here, to keep it simple, we've put in $100. The stop loss percentage is literally the stop loss percentage on the long position sizing tool. So if we go flick back to that screen, like I said, it is 3.75% from my entry point to my stop loss. So 3.75 is what we enter into that section there. Now my risk level, that refers to how much of my leverage account am I willing to risk on this trade. So like I said, I will risk no more than 3%. So for argument's sake, we are going to put that at 3. However, I will only risk 3% of my account if the technical analysis is in line with all of my rules. If it's not in line with all of my rules, I may taper it back to 2%. If it's something that I'm a little bit more 50-50 on, I want to take it because there's some speculation or there's some fundamental stuff, but the technicals aren't quite where they want to be, I may risk 1%. So I ratio up my risk level based on what I'm looking at on the charts, okay? So let's say in this case that this trade lines up with every one of my rules. So it's like 6 or 7 things. And Molman knows what I'm talking about because him and I failed on a unfi trade on my AMA, even though it met 7 of my rules. It failed miserably, and that's just because the market gave us the middle finger, basically. However, it met my rules. When it meets my rules, I'm typically profitable, and I risked 3%, and I got it wrong, but I lived to fight another day because it was only 3% of my account. All right. So you enter in 3, then you put in your leverage. Now I know that when Chris was out on his stream a few hours ago, he had a question on there about leverage. How do you work out how much leverage? Leverage is just a tool. Okay. Doesn't matter what leverage number I put into here. If you look at my loss section here, it says maximum loss $2 because $2 is 2% of 100. Okay. So it doesn't matter what leverage I put in here, I'm still losing $2. See that? I've got 100x. I'm still losing $2. It doesn't matter what I put in there. It's just a tool. It just means that I'm using less of my capital. So if you see here as well, it says required margin. On 10x, I'm using $5.33 out of my $100 because I'm 10xing the leverage. If I put it at 1x leverage and hit calculate, all of a sudden I'm using more of my account. Okay. So the important parameters are whatever your trading balance is, the stop loss from the long position tool, your risk level, how much of your account you're going to risk. So if this trade fails, I'm going to be risking $3 in this case. Okay. So $3 is 3% of 100. Okay. They're the rules. So now I can go into this trade knowing if it doesn't work, I'm only losing 3%. I'm not going to lose sleep over my account size dropping by 3%. Now, if we go back to the chart,
there's a question in the chat also. I know you're going to go over this, but he wants to know when would you take profit on this trade? Would you take it on the way up? What percent? And if you can explain how you would take profit, that would be great for.
Yep.
I hope I'm saying this name right. 𝗪𝗏 Lampos. Neat name.
Yep. No worries. So, a tough life, mate. He just like moaned like it was like a really bad day for him. So on this particular trade, as we said, we're going to risk $3 if the price goes from here to here. But because it's 7 to 1, we're actually going to make $21. So it's 7 times 3 all the way up to the top. Okay. So the upside is far greater than what we're risking. So because it's 7 to 1, I could now also lose the next 5 trades in a row and I'm still actually profitable, right? Because 5 times 3 is 15, but yet after winning this trade, I had $21. So if you guys get it, I'm still $6 up. Okay. And I only had to win 1 trade out of 6. So that's where risk management is very, very important. And where planning your trades, like Luba said, is very important. Don't go into a trade blindly, and make sure that you're taking a trade that offers you with a good risk to reward ratio, where the upside is at least a multiple of 3 greater than the downside. So if it's not at least a 3 to 1, I'm not interested in the trade, because sometimes you can plan out the trade to be a 7 to 1, like this question was asked, and it may only get to this bit of the price action before the market turns around again. So we may actually get to this resistance level, which is a decent resistance level, as you can see. It's like a resistance support / resistance level through there. Before it turns around, like the price may come up to here nicely, turn around and come back down again. So you go into it with the best of intentions, but if you go into it with, you know, the expectation that it's only going to make it to there, why would you risk 3% of your account when you're only going to gain basically 3% on the other side? And it may never actually get there. So always go in with a trade that's planned to be a nice risk to reward ratio, because it may not get there. And you'll still at least cash out with a decent upside. So the question was asked, I guess, about, you know, when would you take profit, etc. What I like to do is when we get up to that first resistance level. So in this case, you know, this is a resistance level. That's the second resistance level. And then finally at the top, I would kind of take profit away here. And then I'd take profit away there, and so on. So I kind of split it up into maybe 3 chunks. I do it on a case-by-case basis, but that's generally in a quick way how I would do it. I still haven't moved my stop loss yet, because what I also do is I wait for the price to come up, make a higher low, and then if it gets to that profit point, I will take some profit off, and then I'll move my stop to there, and away we go. There's no way I can lose this trade anymore. But I don't move my stop until I've got that higher low, because then we have an established uptrend again, and then we just let it go from there. But the point of this whole thing is about managing that risk in the first place. I don't go into a trade unless I've calculated that. So it also stops me from just getting my phone out my bloody pocket because I hear some news about something, and I just go into a trade and go, oh yeah, half my account's fine. It's only half my money, whatever. And then before you know it, you've lost it. So it forces me to.
Patrick wants to know, would you ever tighten your stop loss in a trade?
Yeah, I do tighten my stop loss, but I only ever tighten it after we've had that higher low created.
And can you break down the percentages? Like, do you do 33, 33, and 33? That's
sometimes, yeah.
What percentage? Yeah.
Yeah, sometimes I'll, like if I've got 2 intermediate stop losses like we've drawn in here, like one here and one here, I may split, take 33% of my profit here, another 33% there, and so on. So it'll be 33% away here, and then obviously that leaves that chunk. So then I'll take half of it away at that point, and so on. But I kind of play it a little bit by ear as well, depending on how the market is moving and how it's looking. So I try to also be adaptable, but I don't break those fundamental rules about protecting my losses and stuff like that. Because even if it gets up to this point as well, and some guys use this strategy, but even if the price gets up to this level here, I'll draw a box in. Okay, so even if the price gets up to sort of that area, and I haven't made a higher low, and I shave away some profit, if this profit percentage is greater than the stop loss, I still can't lose the trade. Even if the price hits that resistance level, I take profit, turns around and stops me out, I still can't lose, right? So they're the things that you have to look at as well. So if I look at this, for example, you know, it goes up to that resistance level. That's a 7% move. My stop loss is only 3.675. So I really can't, even if I don't move my stop, but I take off some profit there, you know, I'm still probably going to be profitable. Even though I'm only shaving off a portion, it'll still put me in a far better position anyway. So, yeah. Shawno, hey, buddy.
Hey, Matt. How are you, buddy?
Good. I'm getting a dead arm with this dog on my arm, but yeah.
I can imagine. Can I be your PA?
Yeah.
All right. If you stop sharing your screen, I have a copy of when we first worked on this risk management thing. I have a copy of your PowerPoint. If you want to present it and run through it, you just have to say it's an older version. You just have to say next slide, please, Shawno, and I'll just flick to the next slide if you want to go through it.
Okay, cool.
It's got all those things you were talking about.
Yep.
You know, the losing 100 trades in a row and that sort of stuff. It's got all that sort of stuff in there. I'm just going to be silent. I'm just sitting in the background, but this is a copy you sent me about 6 months ago, and I'll just flick through the slides as you need them, mate.
Yeah, mate. Would you want to go to that coin toss experiment, please?
Okay. So I'm going to go through.
Yep.
You just tell me where you want to go.
Yep. No worries. So what we talked about with that trade, guys, was just, keep going, Shawno. I'll tell you when to stop. Was about managing that risk. Now, the experiment that I want to show you guys was a coin toss experiment where you toss a coin. Keep going, mate. There we go, that one there. So this is an experiment where you toss a coin 100 times. Every time you get a heads, it counts as a win. Now, a win also counts as a trade that you've taken successfully that has a risk to reward ratio of 3 to 1. So if we use our last trade example and we're losing $3, in this case, we're winning 9 and losing 3. So every time we flip a coin and we get a heads, do this at home. You can do this with your kids or whatever. Toss a coin. Every time you get a heads, you get, 3 times what you get if you hit a tail, which is a loss. Now, because every time you get a loss, you're only losing 1 risk versus 3 rewards, you're protecting your position. So even with this random coin toss experiment, so you flip the coin 100 times, I think it was only 48 wins and 52 losses. So you essentially traded at less than a 50% win rate, and you actually ended up with, I can't see the number, but it was, there we go.
Yeah,
200. So you started off with $100. You ended up with, I think it was $256, Shawno. So you more than doubled your account size.
Mm-hmm.
Yeah, 254. Yeah.
254.19. Yeah.
So it sort of shows you that you don't have to have a successful win rate. So it was less than 50% of trades you got successful. But because you managed the losses and the wins were big enough, so 3 to 1, which is not crazy. We're talking about a 7 to 1 here on this trade, that you still can double your account over time. And I can say that from my experience, as soon as I did start protecting myself, I was still increasing my account size by multiples. Yes, it took longer than if I absolutely smashed the trade with my entire account. But I'll tell you what, I didn't have the downside at the same time either. So that's a really powerful experiment that I'm glad. Thank you, Shawno. I'm glad that you're able to put that up, because I really wanted to show you guys the power of your managing your risk on that. Have you felt that, Luba, with the ups and downs of?
Absolutely. Because you need to, one day you just need to stop and you just need to start to learn and protect your money. And because I've been through, I can do quickly, let's say in a like couple weeks time, I could do like, I don't know, 10x my account. And then when you don't protect, you just go all in and you blow up straight away, because you are like you're winning. And one day it's just the market shows you, as you said, middle finger and goes against you. And that's it. You are losing everything. And this is when you don't do the risk management, because especially in this particular market, you think that you are genius and you think everything will fly, everything will just go up, and you just FOMO in with all your accounts. And plus, if you do so huge leverage, it's so, because I know I can see people are going like 20x, 50x in.
And like I said earlier, leverage is just a tool. It's a tool to allow you to increase your position size. But if you keep your risk managed at the same level, you're not actually risking any more money. You're just using larger position sizes and keeping more of your account left over for other stuff, for example. Okay. And another rule that I have is I won't go in more than 2 trades if I'm risking 3%. So my exposure is 6%, if that makes sense. So I'm in 2 trades at any one time, risking 3%. That's my limit. Because I have found, for me, if I get both those trades wrong and I get stopped out and I've lost 6%, that is my point of where I start to get too frustrated and emotional. So I have a rule: I don't do 2 of them. If I do get stopped out on both of those, I have a self-imposed 48-hour ban on leverage trades. And I try to tell people in my life that know about my trading, I try to tell them about it, and so that they can keep me honest with that as well. And the ban's there to stop me from revenge trading and going, you know what, I just lost $100, but screw it. I know the next one I'll make it back. I'll go in on a bigger position size. And you know what's going to happen, because you only want to see the market in one way because you're in that mood. And I know that all 3 of you have experienced it as well, the old revenge trade.
Yeah.
So you have to have these rules in place, and that's
there's another part as well of this one. When you win big, you need to take the cool down period.
Profit.
Yeah, you just need to, because when you win big, again, it's from psychology. You think, okay, I'm gonna go in next one, and then you lose everything because you think you are the genius. You can trade. You just need this, because it's all about the psychology. It's all about your mindset. You need to plan, you need to prepare, you need to be calm, you need this environment around you. How do you think, how you open your trade, what you are planning, what is behind you. If, like, I don't know, the kids running around and the husband is here and dogs, cats, and everyone is like, and you try to keep trading, you need to prepare yourself, the mindset. Maybe I'm meditating every single morning. I do meditations.
Me too. I do it at night though. And for me, I just want to comment as well, because I started out doing it completely wrong. And now I've been able to double, triple, 4x, 5 times and I started with $100. I had at one point over $2,000 in there. And sometimes I will take that profit and put it over to spot trades. So versus me taking money out of the bank to do my spot trades, and I'm not using high leverage anymore. I will do sometimes 10x is my maximum. But I found that by using this method, it just made me a lot more confident, and I'm not pulling money out of my bank anymore. It's just, I'm taking money from my perp trades and moving it over to spot. And that took me a long time to learn, and I'm not risking more than 3% either. Yeah.
But also,
don't be upset. Don't be upset if you guys lose a couple trades. if they say you win all the time, they're lying to you.
But also, Beth, we use the same, we talked about it when you were here because we were looking at some spot trades to do, and we were using the position size calculator to calculate spot entries as well. It's like, why would you want to risk more than 2 or 3% of your spot bag? So it's about protecting yourself, even because the perception is it's spot, it's not as much risk, but it is as much risk if you're still going in risking more than 3% of your account. It doesn't matter if it's leveraged or not. So, we were looking at these, 𝗓𝗏 trades and whatever that we did actually very well on, but we still covered ourselves with stop losses and things like that because you just don't know. And if you calculate out your risk, you know that you're going in on a position size that doesn't stress you out. You're happy to be in it. If you get stopped out, okay, put it in the training diary, which is the bit we get to next, and we talk about it, and you learn from it. So that's sort of another thing we want to get into, Luba, as well, is training diaries, right? Because that's a psychological aspect as well. And everyone has their own methods. Everyone has what they like. Some people like to have their training diary with lots and lots of detail in it about the numbers. Now, I'd like you guys to all comment, including Shauna, about how you guys go with your training diaries and if you use one. Most people don't use one, which, that's up to you. But there's no point having a diary and then not using it. So if you're going to use it in the way that works for you and don't just copy someone else. I don't track all of my details on my trades as in the numbers and everything because that's always there on the exchange and that anyway. So I can always refer to it. I definitely write down what the trade is. And I write down my planned stop loss depth and that sort of thing. But I use it more for just words, how I'm feeling, what I wanted to achieve, and that sort of stuff. And it's more, for me, powerful about after the trade as well. Because sometimes you realize a lot of stuff. I mean, how many times have you guys entered a trade and clicked the button and then next minute gone, oh, hang on, now I may not be seeing this the way I think I'm seeing it. That is the thing that needs to get put in the journal. It's like, why do I feel like this? Why was I seeing it a certain way? And then the moment I commit my dollars to it, I've changed my mind. Obviously, there's reasons behind that, and you need to start tracking that. That's for me. But yeah, let me know what you guys do. I just have a notebook. Like I just literally have a notebook.
Because every trade, you can see from the bearish, and from the bullish side.
Yeah.
You
I
try to
use that,
see
and
it.
I also use CoinGecko too. Like I'll keep track of CoinGecko, and I'll put in the notes section. I write down this as well. I keep it in 2 places.
Yeah.
Like what % profit, what % loss, what was my stop loss, what I did wrong, or why I think the trade went wrong, or right. But I do that for every trade, whether it's $1 or 100. It doesn't matter.
And my biggest demon, honestly, and I know this, but I keep doing it because I'm not the sharpest knife in the block, but I constantly try to pick the bottom. So what I've started to do, like on this TIA trade here, is I've waited patiently for confirmation that it is on its way back up, because I was getting into a habit of going, okay, it's come down to a fib, it's come down to a support level, it has to bounce. I'm getting in, really narrow stop loss, and then next minute it dips lower again. So for me, I'm trying to learn it, and I'm getting better at not falling into that trap. But the brain is so powerful at haunting you that it still gets the better of you from time to time, So it's having the tools in place to try and let you get over that and change also be willing to change your strategies as well, right, guys? Like, how many times have you adapted throughout the bear market and into this new bull market? How many times have you adapted your strategy?
Yeah, and what do you lose if you don't take a trade? Nothing.
Exactly.
I think people need to remember that. Like, if you're going when you're in school and if you're checking off all the boxes and you don't see it, don't worry. This is 24/7. There's always another trade.
Yeah, that's where is my biggest achievement. It's a self-control of myself. I'm absolutely fine when all these coins are flying madly. I remember all the game projects, they've been flying like 3, 4, 5 X's, 3 bull. I can see now it's like was up, I don't know, 1000% something, and weight down like 50%. And now you can buy, now you can come in. But can you imagine if you are buying at the top? And so many AI projects now are flying, but now you can see the fetch is coming down, everything is cooled down, it's market. This is my biggest achievement. I'm absolutely fine when I see these green, huge candles. I'm just waiting because I know they're gonna come back to me. And the game of this, the biggest, like it's a game of patience. You just need to be patient. If you miss the trade, that's absolutely fine.
Yeah.
It's going to come back to you. Just be patient. And this self-control of myself, I just love it. It's absolutely amazing.
It's good. And that's a great segue into the slide that Shauno's brought up, actually. And that is, you know, that review where you keep a trade journal. And like I've said there in that first point, it can be in any format or structure that works for you. Remember, this is your journal. So you make it whatever you want to make it. If you want to have, you know, it on a spreadsheet, great, with all the detail in the world. If that's what works for you, then that's excellent. But it obviously takes time. You know, you've got to be able to fill it out and update it and stay on top of it, because if it gets away from you, it becomes a bit overwhelming as well. So that's why for me, the notebook's on my desk. It's sitting here open all the time. I just jot it down. I jot down while I'm planning the trades. I write down notes about them. I've always got, you know, also on my trading view, I sort of split it up into spot like trades I'm watching. So I'll write that down in my book as well. And I'll say, I'm watching this one, hoping for this, blah, 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 blah. And then if they don't ever plan out, I just literally cross them out with my pen. And if they do play out, then I just keep adding to the content of that note, you know, because it is patience as well. Like you said, Luba, it's patience. And same as Beth, if you don't take the trade, you don't lose money. So it's just about being patient, waiting for the setups to sort of come to you. You know, you shouldn't ever open up your laptop, turn on TradingView and go, oh, there's a trade, bang, and take it, because that's 9 times out of 10, that's not going to be a good one. So yeah, plan the trade using your journal, review the trade after, share it with your friends as well. Try to be honest with yourself, and then share it with your friends in the crypto space as well and say, hey, I'm struggling lately. Shauno, what am I doing wrong? Do you mind if I flick you my P&L and flick you my diary, or can we just have a chat in squad chat or like wherever it happens to be, chill and chat, or wherever, or Zoom, you can do whatever with your friends, and literally talk honestly to each other, because that will, even though you might hear something that you don't like, it will make you better. And we're talking about protecting your losses here. So it's a bloody good thing if your friends tell you to pull your head in, you know. And, you know, when Beth and I were working together and I was helping her with her trading as well, every time she'd say, I've taken this trade, I'd say to her, did you put it through the position size calculator? And so I kept asking her the question all the time, like a broken record, because it became a habit.
Yes.
And
Now it's a
now,
habit, but I used to not.
Yeah, and
I used to not, and that's why I was losing.
Yep. So now I just say, did you put it through the position? And now I don't ever have to ask her because I know it's fine. And for me, I have, you know, TradingView open, and then the very next tab is the position size calculator, because I live and die by that calculator. So it's always open on my computer all the time, because I just refuse to take a trade without it. So yeah, it's a good thing. Be honest with yourself, and then be honest with your friends if they approach you. You don't have to be a jerk about it, but you definitely have to say, look, I reckon that this is the issue here. You know, looking at what you're doing, this is the issue. Have you thought about this? Have you thought about that? Because often you know what the problem is. You just don't want to admit it to yourself as well, you know. So it's a good thing. You know, they do it in your workplace all the time. You know, they ask you to review yourself before you have your performance review with your boss or whatever. And if your boss is decent, they will actually be honest with you as well. If they just don't care about you, then they won't be honest with you. But the best people are the ones that are honest. Yeah. And it's hard to hear, but it's valuable.
And plus, don't be shy to ask for the help, because we are raised up in our mindset is that we always need to be right. And it's very, very difficult to admit that you are wrong. And you are shy to tell everyone that you don't understand, you are wrong, you don't know what to do with that. But that was my problem as well. You need to stop being shy. You need to ask for the help, interact more with the people, ask everyone around why I see differently, what you see here, this chart, and try to be more with the people around, and you will be much, much successful in this way when you work as a team together.
Yeah, I think this goes straight into, we had a question in the YouTube chats from 𝗂𝗡𝗂𝗏, or not a question, maybe more of a statement, but as a newbie, am I the only one that feels I'm a few steps behind? I'm hoping in time that the gap will close. The question is, do you guys go through phases of feeling like you're on point and then other times that you're lagging behind?
Absolutely. I mean, absolutely. There'll be days where I'll lose or get stopped out, and then I'll just get so frustrated. Like, I won't take more than 2 trades a day. I won't take more, well, it depends on the market. I won't take more than, if it's a long-term, you know, daily or weekly chart, then, you know, maybe 3. But yeah, you have to just walk away. But I take emotion out now. Like, I love certain tokens, yes, but I have followed certain tokens in Solana, for example, Render, Injective. Like, I know I can kind of see what their levels are, and they come back to the same levels a lot. But you can't let your emotions get to you, because I used to. And then, like Matt mentioned earlier, I would revenge trade. Like, I would lose $20, $30, and then I'm gonna go get it back. So up my leverage, thinking, you know what, oh great, this is a great way to get the money back, but not even thinking, losing again. And then, oh my God, like, and then I had to eventually stop and be frustrated. I'm like, I can't do this, I suck, I'm never gonna learn this. And I went,
it's not even
like months. And even with $2 trades, it doesn't have to be big money, but
it's
once you
also not just about the money though.
Right, it's mental.
Sometimes
like, oh
you
God,
stay and sometimes you stay up till all hours of the morning trying to revenge trade. So then that's costing you as well, right? Like, it's costing you.
I would take 10 a day. Yeah.
That is another. Another topic.
Yeah.
Yeah, that is another topic. It's like how you prepare, because I used to stay in my bed with a computer next to me all night, and you are like babysitting these trades, and your trade is going wrong, and you are like mad, and you just, and then you woke up in the morning and you are exhausted and you are tired, the energy is gone, and you don't understand, and you start to trade again. This all is a discipline. You need to change everything in your life. You need to organize around yourself. To take the trade is a plan, is a business, is a serious business. You need to plan. And if your life is around messy and all your actions are messy, you can, as I done before, I stayed in my bed with the next laptop next to me and I'm trading.
Yeah.
It just doesn't work this way. You need to plan, you need to organize your life, diet, everything, energy, your mindset, and then you just go to your trades. You are calm, you understand what you are doing, and this is the only way, because otherwise it doesn't work.
Yeah. And Sean, on that presentation, has that got the bit in there about what happened to me? I think it was like August or something, where I lost a heap of trades in a row. Because that sort of goes in line with that question as well, was, you know, do you ever feel like you're behind, or you're just not, you know, like I had a big slump. And And if it wasn't for the managing the downside, you know, I would have, psychologically, the impact would have been far worse, and I might not have got out of the slump as quickly as I did as well. So
it does have that slide. I'll go and find it, Matt. But I just closed your presentation that I have on file, and we had a question about, somebody said leverage won't make anybody rich. Okay. So I actually went through yours. I actually went into mine, and I wanted to just show something about the difference between leverage and position sizing. Okay.
Sure, go for it, mate.
Yeah.
So David will put it up for us. We're going to keep him on his toes now. Because we're going to be swapping screens, swapping presentations. When I'm done with this, David, don't go to the bathroom. I'm gonna close it down and find Matt's one. All right. So
he's hung in there for 23 hours and 50 minutes or whatever it is. So
no, we gave him 6 hours off. Remember? Okay. It's not leverage that kills accounts, it's position size. Okay. If you have a risk reward of 1 to 4, right, and you can see the top left box here, of 1 to 4, I'll even get a laser pointer going, right? You have a risk reward 1 to 4, okay? And if you take a $100 position and you lose it at a 1% loss, you're going to lose $1. If that $100 position happened to be $50 at 2x, or $25 at 4x, or even $10 at 10x, okay? If you lose that trade, you're going to lose $1. It's the position size that makes the difference, not the leverage. Okay, if you're going to put half your account in at 20x, you're trading 200 times your account. Or sorry, 100 times your account. That thing only has to drop at 100 times your account, has to drop 1%, your whole account's gone.
Mm-hmm.
If you're on cross margin, okay? So
yeah.
It's not leverage that kills trades, it's position size. And you see it all the time. You see these people posting a trade, oh, I got this at 200x.
Mm-hmm.
Okay. When you're playing with margin, you can open up a position at 2x. Okay, with $10, you've got a $20 trade. And you can go that 2x, you can go into, say, 5 or 7%. Say you go into 7% profit. You can actually go into most exchanges and change your leverage from 2x to 125x or 200x. And that you're still going to only make on a $20, right? You're still only going to make $1.50. But by changing your leverage, when you print your P&L tile, it's going to show that you just made 1,400% on that trade. It's still $1.20. Don't get caught out by these scam or these tiles of people showing 125, 200x trades.
Yes.
You don't know the position size.
Exactly.
And
it
you
could be
can,
$2.
I've done it live. You can do a $5 or $10 trade, you know, with $10 margin. You can do it at 5x, have a nice comfortable trade. And if you're at 5x and you're in 10% profit, you can actually go in and change your margin to 100x, right? That will now show you that instead of being in 10% profit, you're in 200% profit. At the end of the day, it's still $2. Mm-hmm. And that's what they do. They'll change the leverage last minute, take a P&L that only shows percentage, not dollar value. Okay. Yes. So it is position sizes and not the leverage
It's
that liquidates accounts.
100%. Once I found $28 in my one of 𝗍𝗥𝗢 accounts on a weekend, and I thought, okay, I'm gonna go in. Let's say I'm gonna trade heavily, and I did 10x. But the psychology is different when you trade $28. If I would have $28,000. It's completely different. Yeah, you can pump up 10x straight away from $28 because your psychology is different. But 28,000, you need to do the risk management, and it's a different leverage.
Yeah,
Absolutely.
Absolutely.
that's what we showed earlier with the position size calculator tool as well, that once you put in what you want to risk on your account, it doesn't matter what I type into that leverage section, the amount that we're losing remains the same every time. All it's doing is ratioing down or up how much of your own money you're putting into the trade, but your loss amount remains the same. So it's got nothing, the amount of loss you have, if you're protecting that and holding that at a certain amount of your account, the leverage doesn't matter. It's only if you have no regard for what the downside is, then you're going to get wrecked. And that is the important lesson, is consider what the downside is. Consider, if you get it wrong, what am I going to lose? And am I comfortable with that? Because, some people are happy to lose $1,000 on a trade, because that might be a very minor part of their account.
Mm-hmm.
So don't necessarily listen to the dollars people are saying that they're losing, because you don't really know. It could be a huge part of their account, or it could be a minor part of their account. But worry about yourself and the percentages that you're willing to lose. And also the percentages have to come about based on your win-loss ratio as well. So there's no point saying I'm comfortable losing 5%, but if you get only one in every 10 right, and then you win, the risk to reward ratios you're taking aren't high enough, you're still going to end up losing money overall. So it's about the profit and loss ratio, so the risk to reward ratio on the trade. Like the TIA trade we showed earlier was 7 to 1. Like I said, if we win that trade, we can still lose the next 5 trades in a row at our current risk level and still be profitable. We're still ahead. So that's where it's really important.
Yeah, and there is another psychological aspect when you open small trades, guys. Let's say you start like with $50 or $100, and for you, like the win of $2 or $3 is too small, and you want to go more and more. Don't look at the dollars. Look at the percentage, please, from beginning. Because can you imagine when your account grows and it's going to be 10,000 and 100,000? Look at the percentage from beginning. Don't look at the dollars. That was I found this much easier when I started to grow the small accounts. And because when it's like, it's just $2-3, but the percentage is good. It's like, let's say from.
No, that's so true. That's so true, because since I've been actually a part of, since I've been a mod and trading active, I have no problem telling everybody that my spot portfolio right now is up an average of 95%. And that's with me taking profits, right? So I have a system where if a token gets over 50% profit, I will take between 20 and 25% out. And I do long-term spot trades, and also, short-term, meaning 30 to 60 days. So it took me a while, you guys. I was awful. I mean, I was drawing fibs backwards. It was really bad. But it took a while to get there, but it's there now. And if the market goes down, I don't panic. I buy on the dips. You just have to remember, even though I'm doing well now, doesn't mean I'm going to win every trade. I don't win every trade. I just won't enter it unless, everything that we've discussed today. And there are questions in the chat if we can post this, Matt. So I'm not sure if that's possible in Discord, but I wanted to just let you know.
Yeah, I can put
so this
in there.
Yeah, this is an older presentation of Matt's. I'm not sure if we've got the slide you were looking for, Matt. I can scroll through
Yeah, keep going, mate. Yeah.
I'll be right
it's-
back. I'm running to the restroom. Be right back.
That's it.
That's it. Okay.
Yeah, that's it. Yeah. Yeah. So this was
Right.
to answer the earlier question where you feel like you're ever behind or whatever. And you know, even with these, all of the systems and tools in place, you still don't, you know, get it right all the time. But this is a real example with real numbers. Like this is legitimately this is a snapshot of my cumulative profit and loss from the date of the 11th of August to the 9th of September. So it's like nearly a month's worth of trading. I still had a profitable month, but I had a hell of a time that month during that because I was trying to pick the bottom and, you know, I got into this real slump about it. I thought I got it wrong. I'll get the next one. I'll get the next one. I'll get the next one and so on. So I actually took 27 trades that month. So they were leverage trades. Okay. So that's like pretty much one a day on average. I had 12 wins and 15 losses. Okay. So I had a less than 50% win rate, but I still ended up profitable for the month again, because like we said, even though I was less than 50% profitable, because I managed my risk, I was able to recover and still be profitable for the end of the month. Now, what happened was I used a 2% account risk that time. Okay. Now I pushed myself out to 3 because I'm better. But the thing to note was 11 out of my first 15 trades I lost. So you can imagine getting halfway through the month and going, I've only won 4 out of all of the trades I've taken. That psychologically really hurt. And I actually lost 6 in a row at one point. So that's when I really stopped. I took a few days off. I realized what I was doing, looking at my diary, going back through my charting again, trying to check what was going on. I actually rang Chaos, so Simon, everyone knows him, and said, mate, I'm in a hole. Would you mind looking at this stuff for me? And I want you to just tear me a new one when you know what I'm doing wrong. Like I want you to really drive it home so that I remember this. So we talked about it. He pointed out those things to me. I took a bit more of a break away. Then on my final 12 trades for the month, I won 8 and lost 4. So all of a sudden I was winning twice as many as I was losing. And I had a really nice, strong finish to the month. So actually over that last period of the month, I gained my account size from where it was at up by 33% to end up ahead for the month. So we all have slumps. I haven't had a slump like that, but because now since then as well, I have this self-imposed ban that if I lose a couple in a row, I'm out, because I don't want to fall into that hole, because that did not feel very good. I felt like I've lost my touch as a trader. Like this whole thing is just, you know, I really did feel like I was in a hole, and the hole is the best way to say it. And you could really hit my confidence a lot. So now I've adapted my rules since then as well. And that's why I included this in there. And I know it was, you know, back in August and all that, but it's still very relevant. And it's a lesson that I've learned that I'll never, ever forget. And it's caused me to change the way I do things. And it's been for the better. So without having a diary and without controlling my risk, like I would have got ruined. I mean, losing 6 trades in a row, like you can lose your account in 1 or 2 trades. So it was a big thing to learn, and I'm glad that I went through it now, because I have learned and I've changed what I do. And yeah, it's worked out for the better. So I'm sure you guys have got similar stories to share as well.
Yeah, exactly. That's basically what you are telling now. That was my regular story until I didn't get right my risk management. That was a regular, because I'm doing my trades. I can win, and then at the end, I think I'm so brave. I understand everything, and I'm losing everything. that was my, let's say, and I beat up myself all the time. Why I'm doing this? Why? Because it's like you understand technicals, you understand charts, you understand horizontals and trend lines, everything. And then comes psychology, and then comes discipline. Discipline, it's what you need. It's like you need to be like a robot and just follow own rules. Yeah. And it's sometimes quite boring. You are just a robot. And patience. You are just waiting for these entries. You are planning ahead. You are not jumping straight in any. Sometimes I can see the trades I can take, but because I am just in a stage, like let's say beginning stage to go full time. The guys, they are already full time, which is good. I am from the stage to come into the full time. And I can see straight away, I can open this trade, but no, I'm not jumping in because I need to prepare myself for that. Because my mistakes was to straight jump into every trade I can see. But if you are not doing preparations and planning and risk management, it doesn't work.
I agree.
Yeah.
Yeah, we got another question here. When do you consider it's a loss versus a win? If you hit your planned target, or when you get out quick enough to not lose capital?
Yeah,
that's a great question.
It is a good question. For me, I consider it to be a win if I don't lose any money. But what I do like to keep track of is the whole risk to reward thing. So your risk is always one R, whereas if I take a trade and I plan that I'm going to make 4R, but I only get to 2R, so 2 times my risk, I still write that in my diary with a circle around it. So I know that, hey, I planned this out, but I didn't get to where I wanted. So I can at least quickly look back at that and go, you know what, I've planned out the last 7 trades that each one's only ever made it halfway. It's time for me to reassess things. Because then that becomes a greater risk, really, because you're only trading at a risk to reward of 1 to 2 or 1, or less. But you have to say that if you do a trade and you don't lose any money, it's not a loss. So what is it? It must be a win, right? So I look at it from that psychological standpoint.
Yeah. So there was another question here saying that when they practice a small investment like 1%, then the fee eats up the whole gain, and a winning trade is often losing after placing the trade. And I think people misunderstand the concept of only risk 1%. How do you work out what 1% risk is? And I put up a slide of yours, Matt, that I think may help if you want to explain it.
Yeah. So if you don't have that position size calculator, which is just called cryptowinrate.com, and you want to risk 1%, then the simple thing you can do is you just divide your account size by the stop loss on your position tool. So in the example that's there on the slide, I think it's 3.61% is the stop loss position. So that's the actual price movement we're going to allow. We're going to allow the price to dip from our entry 3.61% before we're stopped out. So if you've got a $100 account size and you're willing to risk 1% of your account, you can just enter in 100 divided by 3.61, and that puts my position size of my trade at $27.70, and that guarantees me that if I get stopped out on that trade, I'll lose 1%. So I'll lose $1. However, the upside, if it goes all the way, I win $4. Okay, so that's the difference, is you're not risking 1% of that actual little trade you've taken. It's 1% of your account size that you're risking. Okay, so there's a difference there. But let's put a comment in the chat actually with the link to the position size calculating tool, because it is literally my.
Yeah, I'll do it for you. I'll do it.
Yeah, okay, thanks. It literally is my favorite thing to use, and I'm not, no word of a lie, it's on my tab completely. I've got a big curved monitor in front of me, and it's split in half, and one of them has charts and crypto win rate, then the other half will often have Discord or something else on it. But I always have TradingView and the position size calculator tool sitting there, because if I'm looking at trades, I need to calculate it all. And I refuse to break that rule.
That is amazing.
It served me well.
Mm-hmm.
It served me well, and it has saved me. Obviously, you look at that example in August, that could have taken everything out of my account. But because I protected myself, I lost a lot less. Yes, it takes more time to build your account, but it has kept me consistently building my account now for a year. So, you know, once you find a system that works for you, you just got to be consistent with it and be disciplined. You know, the discipline is the hardest bit, but the discipline also provides me with the psychological space that I want to be in as well. So, you know, I can be in this TIA trade now tonight, and I can go to bed, and I'm not going to flinch if I wake up and I've been stopped out, because I know that I'm only risking a small portion of my account. And I know based on my win rate that I will still end up ahead eventually, but I might not. If I get stopped out tomorrow, so be it. I'll put it in my diary, write some notes down, and then I'll move on to the next, onto the next trade. So
yeah, it's true. When you are worried about your open position, that means your size is too big.
Yeah.
When you open your position and it's you have your risk management, you never worry about your position, where it's going to go.
Yep, correct.
There's a question in the chat. Does the calculator different than the one available on the futures exchanges? So you're going to actually take you're going to build your trade into the actual exchange that you're using, because every exchange has different fees, and then you take that and put it into the position size calculator, if that makes any sense.
Yeah. So, yeah, I know some exchanges do have them in there, but because I do most of my trades on my phone, okay, like I don't ever have Bybit or anything open on my computer. Well, very, very rarely. I just do all of my work here on TradingView, use the position calculator, and then I just go into the apps on my phone and I'll enter in my position size. Then once my position size is taken, I then go immediately in and I add my stop loss. Then once that's done, I go in and I add my take profit. But I do them in that order first. I take the position, I then add my stop loss, and then I add my take profit. Sometimes I will enter in my position and my stop loss, but I won't enter my take profit because I want to wait and see how the market looks, because I may then start taking partials, but I often will wait and see how things are going. But obviously the most important thing is to get into the trade at the right time and to set your stop loss immediately, because that protects yourself, because that's what we're talking about. I can then walk away and go to bed and not stress about it. You know, it's happy days.
And not look at your phone every 5 minutes like I used to. I used to be like, oh my God. I mean, now if I set a trade, today I was in a phantom trade and a Ronin trade, long, and I had 3 different TPs. Now it did go higher, and now I've been on this marathon for almost 24 hours. So as soon as I looked at the market and did see that it was every time frame was coming down. I used some other indicators. So it was, one of them was at my first TP, one of it was under it. So I just closed it. And sure enough, if I wouldn't have done that, I would have lost. And I normally don't check. I'm confident with my TA. I just happened to look at that moment. But if I would have gotten stopped out, I would have been fine because I was only risking 1%. Mm-hmm.
Yeah, and remember, when you take slowly, the figures, they will add up.
They do.
It's just like mentally, you think you need to jump in and you need to do quick. The quick, you just can lose all your account. There is no other way around. There is no other way.
And you're like, oh my God, what did I do? How is this gone so fast? When I first started, I think I put like $500 or $600, and I was just being stupid. I was taking revenge trading, and even I was only using maybe $10, $20 trades, $2 trades, and then redid sniper school again, just myself, and started becoming better and better. Work with this team. And you'll find that the more you spend, the more time you spend with this community in Discord, join the AMAs, there's no stupid question, and you'll find yourself frustrated, but eventually it all just clicks, and you're not going to be right every time. Just don't risk what what you can't lose. Like, I mean, I see people doing that all the time and then revenge trading to get it back. So having a system in place and mindset is so important. I mean, I do yoga every day and meditate, but it really, really works. And this whole community, especially the moderators and mentors and the OGs here, they've been through it all. So we feel your pain. If you have loss, you're not alone. There's always another trade.
Yeah. Little change of subject. I see that 𝗂𝗚𝗢 sent a message here saying it's off topic, but as a fellow Aussie, how do you off ramp? So for me, I can withdraw and send to SwiftX. So that's an Aussie exchange, and I can then withdraw from there directly into my bank. So I can do that. The other thing that I actually just got in the mail yesterday was my new Bybit debit card. So now what I can do is, like I said, in 2 weeks' time, I'm going to be full-time crypto. So that's my only income is crypto, right? So I've now got a Bybit credit card, okay? So now, like, when I win trades, I can transfer that into the funding part of my wallet under funding. And now I can use my Bybit credit card wherever I go, and it'll just spend my USDT, okay? I can also have other crypto in the funding area. There's certain ones that it'll allow you to, and every time I use that credit card, it just deducts it out of my funding account that's there, okay? So you can also withdraw cash on this card as well, believe it or not. So you can go to an ATM because it's like a Maestro-friendly card, and you can withdraw cash. So you don't necessarily have to off-ramp, so to speak. But if you do want a card that, let's say you're running a bit low and you need to use some of your crypto to help you get your car serviced or something like that, you can literally just pay for it with these services that they offer. I know Crypto.com do it, and I've had one of those cards for a couple of years. It's a little bit cumbersome to get it transferred across and then into the correct account. Whereas what I like about this Bybit one, which literally arrived yesterday, you just put it into the funding account, which is an internal transfer. You don't change the currency. You leave it as USDT, and bang, 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 it just does it. So it's really cool.
Yeah. So I also have Revolut. I just put it in the chat on YouTube. Revolut, REVOLUT, is a Visa card that you can actually transfer crypto to it and spend in any currency in the world, just about. A friend of mine just went to Vietnam over Christmas, and she did a direct transfer from her bank into an ANZ account, which is her particular Revolut ANZ account, because they are registered in Australia. And she could do ATM withdrawals, pay for goods and meals and stuff like that on her Revolut. And she sent across a bunch of phantoms she had that she was in good profits on, as well as sending Aussie dollars directly from her bank account to the Revolut bank account, and it showed up on her Visa card. She could spend it. The one thing Revolut can't do at this stage in Australia, and it may be different in other parts of the world, is I tried last week as an on-ramp to, or a couple of weeks ago, to transfer Aussie dollars from my bank account to my Revolut account. And I bought USDT and tried to send it to MetaMask or send it to another wallet. And you cannot transfer off or to any wallet that's not in the Revolut system.
Yes.
I could send Matt 15 USDT for his T-shirt, but because he's also I'll give you 20 for yours, because he's also got a Revolut account. I can send him USDT, but I couldn't send it to my MetaMask or my 𝗘𝗘𝗏 wallet.
Yeah, I have that card too. So in the United States, unfortunately, we can't do anything crypto related. But when I was in Australia, it was great because I moved money from my bank to it, and then it would automatically calculate the price difference, right? So if I, by the way, Australia is just crazy expensive. I mean, when grocery shopping, $500. Like, what is that? But it's translated into US dollars for me.
Yeah,
I love that.
The other way is I set up a little business because I wanted a second screen, because I started doing presenting in AMAs and all that about a year ago, and I opened up a little trading account to essentially work for my screen. I traded from my screen. I put $100 in, and it was $285, and I once I got that profit. I got the account to $385. I took my $100 back out. I transferred my $285 to my Revolut account, and I walked into the local electronics store and I swiped my card and I bought my screen. So now I have my two screens that I use.
Amazing.
So that's a great way. Another way to off-ramp is those products. And there will be, as Matt said, a lot of the exchanges also have their own cards and things like that.
Yeah, I did the same thing with my new laptop, just took it out of my one of my little crypto businesses, put it onto Revolut, and then bang, 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 so there's a number of ways to do it. It's like Australia's definitely got it better than the US. Like with Beth visiting recently, I've seen firsthand really the struggles, that they do have. You hear about it, but then when you actually see it, like, we do have it good in Australia. So, yeah.
Really good. You do.
Where's everyone else? Aren't we supposed to be having just a little chit chat right now?
I thought we were.
I was just going to say two things. Firstly, if there's any other mods, if there are any other mods here or contributors who have done segments or any part of the our awesome legendary team that is around, we have half an hour left of the stream, and the plan was to get everyone together and let you guys, let the audience pat Matt's dog, let the audience ask us questions. We'll answer whatever. So that was the idea. If there's anyone here, David, or share the link again in our WhatsApp group, and let's get the guys up. The second thing was somebody said in the comments something about the Revolut international fees or something like that, and I have done it side by side where I have on the same trip in Germany used my credit card for one round of drinks and my Revolut card for the second round of drinks. And when you pay the international fees through the fiat system and the bank and all that, the extra fees that come up, the Revolut actually ended up cheaper, even though they charge 1.1% conversion rate. I was paying less in Aussie dollars on my Revolut than I was on my Commonwealth bank account credit card. So something to consider. Even though there are fees, there's even higher fees, I think, in the fiat system.
Yeah, because there's probably more.
Oh, someone's asking what is an AMA, and AMA stands for Ask Me Anything. So yeah, we do them all the time. But yeah, pretty much you can ask me anything. Molman answered it. Thank you.
Molman answered it. So if you've done sniper school, I do a 2-hour session every Sunday evening, my local time. It's Sunday morning. I get a lot of guys from the UK and that sort of stuff that pop in. Matt does one every Wednesday. Beth and them do one regularly. It's all in events. If you go to the menu on the left-hand side of the school Discord server, it's in events, and all we do is we'll sit there and answer your questions and help you out. That's part of the community. Part of how I became a profitable trader, how Matt became a profitable trader, how Luba's become a profitable trader, how Beth has become a profitable trader, And something Beth said a little earlier, how she redid sniper school a second time. Because she
and school. I did them both twice.
And yeah.
Yep.
And in all honesty, when you're thrown so much information, it's overwhelming. And all the human brain is capable of doing is grasping the little bits of that information that make sense. Okay. And all the rest of it kind of plant a little seed in the back of your mind. And it just plants it there, and it's just dormant. And you take the seeds that have kind of worked with you, or have that you understand, and you foster them, you grow them, you expand them, you just feed them, and then a couple of months later you go and watch that same video again. And because you have a solid foundation, those little seeds that went over your head and lay dormant in the back of your mind suddenly have the foundation, the soil, the nutrition they need to grow. And you go, wow, how come I didn't get that last time?
Absolutely.
And
I learn something new every time.
Absolutely. I've been here a long time, and I learned new stuff in this 24-hour just watching some of the other presenters.
Yeah, and you guys need to remember, we are different. Someone needs like 15 times to repeat. Someone needs 5 times to repeat. But it's fine because something you pick up really quickly from different areas. But it's fine if you need to go over and over again, even the 100 times. It's absolutely fine. Don't beat up yourselves. And do you know how mind works? You are like going through, and then you said, oh my God, I suck. I just can't do it. And it's a program. It's straight program in your mind that, oh, I can't do it. No, you can do it. You just maybe need to go through like 20, 50 times. That's fine. That's absolutely fine. It's nothing wrong with that.
Oh, yeah. The Fibonacci lesson, I think I watched that, honestly, I would say over 25 times. Because like I said, I was drawing them backwards. And I think by the 20th time I got it, but I couldn't see for like 6 months. So just for a little bit. But now I feel very, very confident.
Yeah, exactly. Yeah,
but
exactly.
I'm winning more than I'm losing, and
it's all here.
It took me some time. Yeah, it did, but now it just feels so good to actually understand it and to be able to give back to the community. Because I mean, I just remember, I remember the day when Bruce just pulled me aside. He's like, okay, listen, I know what you're trying to do, and it's working, but it's not. He's like, just slow down, do A, B, C, and D, and so I did. And it's just boom. Like I was like, wow, that really works. Wow, that really works. Oh, I see why I should draw this fib here. You know, this you can't draw a fib because the candle has it closes. Like, I mean, on that day. So like little things like that. I mean, don't feel bad if you don't get it the first time. It could take, you know.
And don't feel bad if you don't get it in 20 times.
In months, right. I mean,
just go
eventually, if you're dedicated and you spend enough time in the community, we're here to help you, you will get it. Don't get frustrated. I mean, if you leave, you lose. Because in my opinion, this is just beginning.
And don't be shy. And don't be shy. Come to us. Ask for anything. There's no stupid questions. There's no like you need to help yourself. You need to your mindset should be like you are doing like a program. Because if you say, I suck, I can't do it, that's it. You did a statement.
Right.
Your mind.
You
did a statement. Do you know what I did, guys, all the time? Even when I cried so badly. It's like, I am professional trader. I am professional. That's it. No way, no other way. I am professional. And that was a statement. And now I'm here in front of you, but you don't imagine how many nights I cried. How was I like up? And then I was like, oh, blood, you don't understand. You don't understand anything.
Yeah, no, me too. I would spend hours, like you said, with the computer by my side or my cell phone and just like, what am I doing wrong? But I wasn't doing anything to change it. I was just entering more trades. Like, that's not right. Don't do it that way. Take more time to learn.
Yeah. Look, this is another thing about the community. Chris actually said hearing different people explain the same things in different ways helps a lot, because you will all find one person that the way they say this resonates with you, and then another person, the way they explain that resonates with you. You know, we have so many different personalities, cultures. I mean, Matt and I at the moment, we're both in Australia. We got Luba's in the UK, but she's from the Ukraine originally.
No, I'm from Latvia, Eastern
Europe. Sorry.
Eastern Europe country, yeah.
Latvia, you know, we got Beth in the States. Our language, our culture.
I need dual citizenship.
Yeah, our language, our culture. Everything.
Where do I want to live?
Our life experience gives us different ways of being able to relate a concept in words that help you understand. So
different culture, different languages, different mindsets.
Absolutely.
But we can do it. We can do it because everything is here, and you need to trust yourself. You need to. It's not like the harder you do, you need to relax. The first thing you need to relax. And then start to learn like psychology, start to learn technical analysis. We are here day and night because we have like the planet, like timelines.
Get this book. Get this book.
Yes. Can you see, guys, what I have in front of me all the time? She believed she could, so she did. That is like you're programming your mindset. You need to program. You need to relax and take it easy, step by step, slowly. No one gets.
Yeah, I think that's with like everything in your life too, right? So I said to myself, I want to buy a BMW before I'm 21. I bought my first one when I was 19. I want my first house before I'm 24. I bought my first house when I was 23. So if your mindset is there, and now my life has not been perfect by any means, but I finally feel like if you wake up in the morning, like in my day job, I mean, right now, I mean, it's a great opportunity. I work in the animal health industry. Those of you that know me know I used to have a company work with athletes and celebrities, and I still have that, but my show's not on the air. But like if I wake up in the morning, I'm like, oh my God, I got it all in Miami. It's gonna be bumper traffic, and I'm sitting looking at charts in the car. I'm gonna have a terrible day. So, you know, I just changed my mindset. This is what I have to do in order to do what I, you know, really love to do. And yeah, I'm almost to the point, to where, you know, eventually, maybe one day, it is happening. But mindset matters so much. And I used to panic over trades. freak out, you know. For those of us that saw our story earlier, you know, we've all either been hacked, lost money, scammed, and you know, a lot of people think I'm, excuse my language, batshit crazy for still being here. They're like, why are you trading crypto? You're what? And then I show them my profit loss, and they're like, wow, will you teach me? I'm like, no, take sniper school. Take it. You know,
all my family thinks I'm crazy because I'm still here. When I start talking to crypto, and it's like, oh my God, rolling their eyes like, oh no. My daughter said, Mom, no again, no. But anyway, I'm still here and I believe in myself. And yeah, I know I can do it. You change your mindset. I know I did so wrong from the beginning, but I'm not going to beat up myself. There was the lessons from me. I needed to go through all this roller coaster to get right. And one day I just stopped and I was saying to myself, no, Luba, you are going the right direction. You are doing something wrong. I don't know what, because you understand everything. You know the chart, you know technical analysis, but something is wrong. And then I get to point that is, yeah, it's psychology. There's really, really good guy. He's German, I believe, 𝗏𝗏𝗏𝗏. You can listen his podcast, 𝗏𝗏𝗏𝗏. I think I lost.
I think she's frozen again.
Yeah, Luba just froze. Yeah, we actually had a question in the chats asking if there's any AMAs in the American time zone.
I lost this.
Yes, Beth does do AMAs in there. Brian does a
Sunday.
Sunday.
Yes, I am setting one up. I know that we're trying to do the Sunday chill and chart again. So that will be coming up soon. You can just check in the events, and then I'm going to be presenting. And Luba, you're more than welcome to help if you want.
Yes.
I wanted like how to trade crypto and really go over getting people learning. I felt terrible that the wallets weren't working earlier because it's so important. I mean, I can't tell you how many times when I started like that I moved crypto the wrong way, and we get asked that in every AMA I do. You know, it's not all about charting. You know, it is about charting, but when it comes down to it, this is money. This is your hard-earned money that you're turning into an investment that we want to grow. So, yeah, we really need to do that. So we'll be posting more. More are coming.
I lost the signal for a while. Yeah, and
but it was only like 5 seconds this time.
Yes, I know. That is another my fight. I'm fighting with my internet provider for the couple last months. What you can do, and I started to tell you about my journey, and I said one day, I said, you need to stop. Something is wrong because you understand everything, but you're still not winning, and that was a psychology. It's very, very big part of your mindset, how you need to prepare yourself for the trades, for the day. It's not just about the crypto, it's about the day. How do you live your life? How do you prepare yourself in the morning when you wake up? Or your mind is messy already and you are like programming, I can't do this, I need to do that. And it's like you're grumpy on all this stuff. Or you wake up, you calm yourself down, you're ready for your day, you put your goals. I always have a diary now from the evening. I know what I'm gonna do next day. It's a discipline. You start to write down everything. You discipline yourself, and then you know your goals, you know your plans, and it helps. And from that time, when I started to meditate, to calm down myself, because I was like that. And then you come into the trades, and then you are 24/7, 7 days a week, and you are revenge trading, and it's just a big mess. You need to stop. You need to come down, take off all the stress, and plan everything. Your day, your energy. You need to go out to the fresh air, because I know some probably the same like me. I've been indoors, like sometimes I could be for a week and just on the trades non-stop, on the shows, on the trades, on a Twitter, everywhere. and then you're just like, oh, stop, something is wrong. No, you need to change this. I'm trying to say, guys, that calm down, don't stress, plan not just your trading, plan your life, be more calm, and you will get it. You will, let's say,
Yes.
you will program yourself. Don't beat up with the bad trades. Do you remember when I told you, like I did on a weekend with this $28, I did 10x, but that was because just $28. It's like I had like five losses before that. The 5 losses before that. And then
Oh, she's frozen. We can't hear her.
Yeah, we just lost your sound, Luba.
Yeah, we lost your sound for the last 4 minutes, like the last 20
I am
seconds
back.
of that.
Yes, you're back.
You're back.
You're back.
So we missed like the last 20 seconds or 15 seconds, I believe.
All right. That's as I said, it's my other fight. Yeah. Maybe we have any questions from you guys.
I'm looking there right now. They want to know if the AMA recordings are posted. Do you guys post the AMAs? Because I didn't know if they were. John said they are.
Not. They're
not.
recorded.
Yeah, the AMAs
if
are
they're
not yet. We're working on it.
Well,
yeah.
If they're done through Zoom, the Zooms are recorded, but they're not. We don't post them. They're just recorded for record. Some of the AMAs are obviously done on Discord, so there is no recording either. Okay, so they're just broadcast through Discord. Yeah, so we want people to tune in on the AMAs, as well. Like I know that sometimes you can't get to them, but there's enough out there. We want people to tune in and
our
we can
legend.
teach you can learn. Yeah.
Dallas. The legend, Dallas.
Hello.
Hey.
Hello, everyone.
How are you?
How are you?
Tired.
We're going towards the end of this marathon, right?
Yeah, it's been great.
And Matt and Press, I'm sure you did a fantastic job. I did see every, sport beats for everyone. Luba as well yesterday, last night, and today. Good stuff. Hot stuff, should I say? Like the song, Hot Stuff, right?
So, yeah, I remember that song.
I just wanted to expand on something Luba was saying just previously, right?
Mm-hmm.
On she was saying, some things, and I think Beth touched on it earlier with her fibs. She spent a couple of hours with Bruce, and eventually it just clicked. And Luba was saying how she had to repeat some stuff, and I can only relate to my two boys are only. I got 2 teenage boys. They're now 17 and 15 and a half, and the older one, absolutely at the age of 3, he refused to ride his bicycle unless I took the training wheels off. He would not ride it unless I took the training wheels off. I took them off, and he got on and he rode. And he was a dynamite. And his little brother, who was only 15 or 16, year and a half younger than him, he had training wheels until he was almost 6. We couldn't ride to school when he started primary school because he didn't have that confidence. And it's just his older brother had that a better natural ability than he did. And a few years later, they ended up going to gymnastics, and they started at the same time. And they went to their little club competition, and the younger brother, even though they started at the same time, the younger brother walked away with like 4 medals and a trophy and all that. The older brother got 1 participation certificate. And the younger brother ended up competing at state level. He was state champion in 2 disciplines at the age of about 13 in gymnastics. but his older brother never got anywhere in it. You know, but his older brother was riding a bicycle without training wheels at 3, and he had training wheels till he was 6. So we all have our own methods of understanding things, our own methods of or our own sort of natural gifts. You know, ask me now, can they both ride a bicycle? Yes, of course they can. They may not be able to compete at state level gymnastics, but then, you know, at the same time, the older one at some stage did get to a point he could do most of the stuff his younger brother did, but the guys his age were doing way more. So he wasn't competing at that level. So it just takes a lot more effort for each of us to get to a certain level in different disciplines. And that repetition that Luba said, that repetition on the foods that Beth said, everyone can get there. The amount of effort is going to, and the amount of discipline and study is going to differ for different people.
It's the same as at school, Shauno. You know, when you're at school, for me, I was always found the math stuff to be easy, but then you try and get me to English class, and my God, like, you know, trying to write something was a struggle for me. So it's each to their own. There's other people, I'm sure there's people out there that are really good writers but can't grasp maths. And it's like, I didn't choose to be good at it. It just happened that way.
Yes.
But I had to work harder. And I can remember in my final year of high school, English was my worst subject. And I had to work so hard just to get a reasonable grade in it. But math stuff, I'd sit down and do it and I'd be done in 10 minutes. And then I'd work the rest of the night writing bloody stuff down that I just couldn't, you know, like, because my brain's just not programmed for it.
It's true. It's true. I mean, I had the same issue. I had the same issue. I mean, you give me numbers, I'm okay with it, right? I love it. I can do the numbers and I'm trying to do things. I'm more a visual guy, but when it comes to into theory and theoretical stuff, right, like religion or any other stuff like history, that you need to remember dates or you need to write an essay, that was the worst case scenario for me. I mean, like, no, I wasn't refusing, but I couldn't get it. That wasn't my top notch, right? But I can talk for hours, and most of you know I can do that, right? But you know, all
but
my
it's
no problem.
You're very beneficial. What you talk about really, really is. I mean, I can't draw. I was very good at both math and I was in AP writing. I've actually published a couple books, but when it comes to like drawing, I can't draw a stick figure. That's why when I try and draw things on my charts with that brush, I'm like, oh my God, I have to like do it 3 or 4 times because I can't draw anything. A stick figure is about it. That's why thank God for the pattern to, you know, the trading view tools for me, because otherwise it would be, you don't want to see my drawing.
But I mean, what I want to get to is that every single of us, every human being is different. We have some strong points and we've got some weak points, right? So to elaborate what Luba says and Shauno and Matt is that everyone has his own style because we see things differently, because we use our strong points in a different way than others. That doesn't mean it's wrong, and also doesn't mean that we only have one way of doing things, right? I mean, you have to know the basics, right? You need to know the basics that you need where to draw your horizontals, but after that, you can see them very quickly. Other people will spend more time to see them when you have a glimpse of a night, and then hey, here it is, and everybody goes like, where is it? It's like, it's there. I don't need to draw it. It's over there. It's obvious. And like, no, can you draw that? Oh, I can see that now. You know, things, you know, people, you get used to it. You have your own character and you're going to bring your own trading style. Get the foundation, understand the concept, find a strategy, fine tune it to your character, and then just keep on repeating the same thing. If it works, don't break it. Simple as that. Doesn't mean it has to be 100% my strategy. Doesn't mean that it has to be Shauno's strategy 100%, right? Doesn't mean it has to be exactly copy paste from Matt's strategy or approach or anything, right? Like, you know, Beth, she's not good in drawing. Okay, but she's good in other stuff, right? She can find projects out there that, I mean, I'm not very good with airdrops. Don't talk to me about airdrops. I'm useless. I can't do that, right? Because I can't see it, because I'm a technical guy, right? I'm a technical guy. I see the charts. I can see the lines. I can see the candlesticks. I can see the horizontals. I can see that. But for me to say, okay, I need to do this, and then I have to do that, and then move there because I'm going to unlock that, and then I have to come back. Oh, shit, I have to stake. Oh, I'll come back. I'm not qualified, or my wallet. No, I can't be bothered, right? It's not my strong point because it's a lot of theoretical things going behind it, right? It's not my thing. So I'm not ashamed to say, hey, that's not my thing. You better speak to Matt, or you better speak to Beth, because she has it. She knows how to do that, right? Or speak to Chaos. Or speak to...
the beautiful thing is, Dallas, as well, the beautiful thing is, mate, is that we can look at these charts and you and I could arrive at the same entry point on a trade, the same stop loss and everything, but the way we get there might be completely different. Because you're using what you use as your strength and I'm using what I use as mine. We end up with the same result, but we get there a completely different way from each other. And I just love that.
And remember,
100%.
exactly the same thing with school, right? The teacher, the old days, like 50 years ago, they used to mark you according to the strategy that you were using, right? And if you use a different strategy, you get an X. Nowadays, they don't do that anymore because there are multiple ways to get to the same result. So whatever, you know, there are 3-4 different rules how to get the same result. So each student can choose any rule, kind of matter. I see the comments there. And anyone can use its own rule, own strategy or method to get to the same result. So that now the teachers have to grade the students according to the result. It doesn't matter how they got there. Is it the right one? Because there are 3-4 different, you know, have you seen these TikTok videos? I've got fascinated. I've got like really like, wow, how do they do this? Small young children from Korea and China, how they do multiplications and additions, 3-digit with just the fingers.
Yes, I saw them. Yeah.
And they go like this.
Yeah.
Right? I don't know what they're doing,
For
right?
real.
But they're doing like they see numbers, right? And within seconds they come up with a 3-digit answer. We're like, what? I mean, no, it's going to take me like minutes for me to get there. No, I mean, you know, so there are different ways. So every different person, you know, they have their own character and style. Use it, right? Find the strong points, make it more stronger, and the weak points, we're going to find it later on. In, you know, on the way, we're going to find them a way to make them less weak. You cannot be perfect on every aspect, but get the strong ones and make them to the very top. And the weakened ones, we're going to fix that later. Don't worry about it. And yeah, great stuff. It's a great team, a great family. And we haven't, I mean, seriously, guys, I mean, we be around in the internet with other clubs and other gurus there. I didn't find so much success more than this group. And I'm serious about it because you're going to see a lot of posts out there and TikTok and Instagram, especially now that we're heading towards the good side of the bull run, right? Anything above 50, the Bitcoin will attract a lot of attention from the media and from the retailers. And yeah, I mean, the retail hasn't come yet. I don't believe the retails have come here yet. Right? No. So there's still time. Wait after the halving. You're going to see skyrocketing when Bitcoin's going to move after the halving, which is going to be, I don't know, maybe sometime in May, June, I believe, right? So
I believe either April. I think April. I thought, but it could be April or May, around there. Yes, I think it was 67 days
after
when
May.
Rand said that a couple
May's the halving, right? So May is going to be the halving. After May, I believe it's going to go skyrocketing everything, right? And then you're going to see the retailers going to come in, right? They're going to come in and jump in because everyone's going to start posting all these big profits. So be careful because I've seen all this on the YouTube. that, oh, I did a 20x and 50x and I did a 1,000 return. Okay, can you tell me how much do you put in that? Do you put $1, $5, $10? What do you put there? That's one thing to think. The other thing is that a lot of people, they start the positions on cross, right? And they put like $50 on cross on 5x. It goes up very well, right? And then they go and slide the leverage from 5 to 125, and then automatically the exchange will convert. If you 100% up, right, and you move the slide from 5x to 100x, it will convert that to 1,000 immediately, and then do a screenshot, right? And then they go back to the 5, and then they post a screenshot. Hey, I'm on 1,000x. Yeah, right. Okay.
Yeah.
That's not how
I spoke about that just recently. Hey, we've got a question here. I'd love to, Vince Pennell has actually asked twice. He said, he's posted twice. He said, how many coins do you go through a day to pick the best trades to do? Or do you have a dedicated set of coins you look at?
For the beginners, it's good for you to go to the top 20 market cap tokens. If you are a beginner and you want to learn, let's say, learn how to trade, right? You're a beginner and you need to get into an asset that you need to have high possibility that's going to run. Go grab some of the top 20 tokens as market cap 20 tokens, because the higher the market cap, it means there has more investors involved. It means that they are more stable with the variation of the price. So if Bitcoin jumps, they will not be so volatile comparing to the low market cap tokens, right? Like the after 100 mark, right? That's the one thing. Now, for the list, what I've got 3-4 lists, right? According to the exchange. So let's say, for example, I'm using Binance, Gate. I'm using any names. I'm not advertising here. I'm just giving an example. So what I've done, I said, hey, I got a list of Binance futures, right? How many tokens do they have? They have, I think, about 250. Okay, fine. Book them. 250 at least only on Binance. Then I've got another list on Bitget. I've got another list on Mexi. What I do in the morning, I go through all of them very quickly. I spend half an hour, go through 1,000 tokens. And I'm looking for the high time frame confirmations. I'm not looking on the 4 hour. I'm not looking on the 15. I'm looking the daily. I'm looking the weekly. I'm looking the 12 hours. The small, I mean, when I go through the list, the lowest time frame I'm looking at is 12 hours. And that's it. I'm going through all of them. And I'm waiting. Not all of them go on the same time. So they're going to have different sequence. So every day you're going to pick out of 300, because all the exchanges will have common tokens. So let's say roughly about 300 tokens. When you go through, half an hour, you're going to find 1 or 2 that are going to be ready. And you just set up your trade, plan your trade, set it up, and when it's getting ready, get in. And that's how I do it.
Yeah, and please,
absolutely. I did look up the Bitcoin halving. So there's a site called Bitcoin Halving Countdown, and right now it says, 59 days, 2 hours, 42 minutes, and 51 seconds. April 23rd, 2024.
April 23rd. So okay, so it's about right that after May, it's going to skyrocket. May is going to be like a green month. May, June, July, it's going to go.
Yes, and please don't forget to take profits. It's a so hard part. It's very hard part. Because last bull market, I didn't took any profits and I lost everything. That was my first cycle. Now I plan.
You didn't lost, didn't you? Actually, remember what we said?
Yes.
Until you close that trade, you haven't lost anything. You just got devalued, and you just need to wait to come back again. But then again, we have another way to fix this. Remember the DCA. We always have ways of fixing things up. So you have the powerful tools called DCA. You can escape from any bad situation. What time frame that is?
Okay, no, I want to show the guys something very, very quickly. if you want to scan a lot of coins very quickly, let's say you have, as part of your strategy, is step 1, horizontal resistance, step 2, fib level, step 3, whatever, and your step 4 is your RSI. It's got to be above 90, below 20, depending on whether you want a long or short. Here's a very quick way. You can scan a lot of tokens very quickly. And people ask, how can you scan 250 tokens in half an hour? Impossible. It's not. Okay.
Sorry, it's easy.
Look at this. You got your stock RSI here.
Mm-hmm.
Okay. If this is your 4th step, you can go in here and you can go to settings and you can adjust your line to where you want it for that time frame you're looking at. Okay. And you click OK, and these lines over there are going to move where you want it.
Mm-hmm.
And you increase the size of that, and you go on the time frame you're trading. This is the 12-hour, and you go, yes, this is one you can either make a note or you can move it into another segment or flag it. If you have a paid account, you may only have a red flag available if you've got one of the free or base level accounts,
Mm-hmm.
or you could flag it. You could flag it as, whatever, orange. Yeah, interesting.
Any color. I mean, you can put a flag of green.
Any color, but Bitcoin.
I flag them red for short and green for to take along.
Yeah.
Well, you have it.
Yeah, but that one's already gone. This one's actually, they're all currently. Okay, this one already gone. Forget about it.
Okay. You'll come back later.
That one.
This one?
Come back
looks
later.
Okay.
Come back later. It looks okay. It's one of those that, I mean, you could flag that, but if you want to scan through quickly, this is a method. You just look at your RSI and you just scan through. That's not at the moment middle ground. That one looks okay. And you will find there are times where there's a hell of a lot of charts that are at the same point. So there's quite a few here. Okay. This one, Adam's already gone. Forget about it.
Mm-hmm.
Don't spend your time on it.
Mm-hmm.
Here's another one. That's a nice looking one. So
that's another one.
Today,
another time frame.
You've gone through 15. Yeah, you've gone through 15 tokens, but you've already got 6 that are today really good. You'll find other days where you'll go through 200 tokens and you only find 2 that are good. And yeah, you focus your time on those 2. But
and there are times
this is
like
one,
you can't find it, which is not bad.
That's a great. I love that strategy.
Sometimes you can't find it. It's okay. You just relax and wait. Always wait for the price and the indicators to come to the areas that you're interested. Don't try to force. And if you find a trade, let's say, Sheldon found one that was very bottom. Was it ape? I think it was ape. If I catch my eye.
I think it was earlier.
Right.
It was
so
ape,
if you see ape that is trying to get away, right? So okay, that interests me. Can I go to the daily and see what the daily is telling me? And then you have another high time frame for confirmation.
You see,
okay,
he's starting to turn around.
It's starting to turn around. So okay, so now you've got 2 time frames to tell you the same story, and then maybe you say it's worth it for me to invest it as in time to do the TA, step by step, guys.
Amazing.
So yes, guys, well, it is 7
it's
o'clock
a
in the morning.
Great way you
I've
can.
been up for 24 hours. Sorry, I'm gonna have to go to sleep. I've been up for
Cheers,
literally 24 hours.
Thank you very much,
Thank you guys so much.
Thank you very much.
You've been a star. You've been a star of this marathon.
No, please.
I'm going to go, guys,
My
as well.
pleasure.
It's 20 to 11 at night, and I haven't had any dinner yet, so I'm dying.
Yeah, I'm gonna head off soon. Our official stream ended 8 minutes ago.
Basically, we need to wrap up because the marathon should finish at 12. We are like overstaying now, and all of us. Maybe if someone can stay, you can stay. Me too. I'm going. My granddaughter is coming, and she is a storm. Believe me, it's a storm. It's a storm coming.
Buckle up.
All right, guys. Thank you.
Yeah, so
everyone for tuning
I
in.
want to say huge congrats to everyone that's here and everyone that was here. Thank you very much. that last little thing, I'm not going to expand on it. I just wanted to show a very, very quick way that you can scan a lot of tokens very quickly, because if that's one of your tick boxes that needs to work, and you go to your last tick box and you check it and you go through, and you can easily, immediately save yourself the time of charting everything else and then coming to the RSI going, oh, that's not ready yet. Okay.
Yeah, and the first thing I do is go to Bubbles in the morning, and then
from me, one more say from me, please, from beginning. Please don't program your brain that you can't do it. Don't tell I suck, I can't do it, I don't understand. No, program. I am a professional trader. That's it. All you need to know, and go step by step slowly. We have a big, huge team to help you here. Don't program yourself.
The main thing is have a target, because a lot of people jump in without having a course, right? So it's like going into a ship and you speak to the captain and say, hey, where are we going? What's next? And the captain says, I have no idea. I haven't opened the chart. You won't feel safe, won't you? I mean, you want to jump up from that boat, right? So you need to do the same thing, have targets. Plan your course. I'm going towards that direction. That's my target. Have a big target, and then have smaller targets that's going to walk your way through to the higher target. And I'm trying to explain this correctly now. So you need to have a target for the year, but also you need to have a target for the 6 months, the 3 months, the monthly, and the weekly, and work on the weekly. So you can reach the monthly. And then once you will reach the monthly, work for the 3 months, and then work for the 6 months. But in between, you're still going back to the weekly. You're still going back to the monthly. And that, without you realizing, you're getting steps closer to the yearly target. So you need targets. Secondly, what Luba said, you need to be positive, right? Don't start small talking to yourself, right? Say, hey, I'm here. This is business. I'm going to do it. No matter what, I'm going to do it. No business goes from 0 to 100 in a straight line.
Yes,
no business, right? So you will have some difficulties on the way up, right? So it's not just one straight up. It's not like a plane that's going to take off, right? So before you become a pilot, for you to fly a plane, you need to do a lot of ground stuff. So it's going to go up and down most of the time, right? It's going to go up and down, up and down. It doesn't matter. In the long run, you're going to get there. So don't feel bad or sad that you find some difficult times. It's part of the game. It's part of the journey. You have your destination, but it's a journey for you to get there. So enjoy your journey, have your targets, right, which is your destination, and have waypoints towards that destination, and you get there step by step, like level 1, level 2, level 3, level 4. It's like a game that you play. You're changing levels until you reach, to the grandmaster, the boss, right? You need to fight the boss. You're going to do it slowly, steady, with a good team, with a good management, with a good strategies, good techniques, and also you have to be positive. You have to believe it. If you don't believe it, don't even bother, because you're going to lose the money. Mm-hmm. But if you believe it, you're going to make it. And time, forget about time. Doesn't matter when you're going to make it. What matters is you're going to make it. I mean, I'm not wishing you're going to take you 100 years, but don't think that's going to happen overnight. Don't think that's going to happen within a month. No. What can I do today? Can I do today something that I'm better than yesterday? Can I move my capital, right, from 100%, which is because you're going to start with $100, right? Can I make that $100 $101? $1. Can I make $1 today? If you make $1, that's success. So, okay, take green. It's a green day today. Okay, can I make 101 towards 102? Next day, yep, I did that. Okay, next day, 105, 110, and then you're going to raise it. Can I do that 150? Don't expect from day one to make the $100 to $1,000. There's no way, because since you're going to hit 99, $1, you're going to be demolished psychologically. You say, oh, I've lost. I'm terrible. That's not the way it works, right? You need to reach to 101, 102, 103. Sometimes you can go to 99, but it's okay. You got a target because the previous day was a good one, right? So you're going to have like 3 wins, 1 loss, another 3 wins, 1 loss. Doesn't matter. In the end of the day, in the end of the week, in the end of the month, did I reach my target? That's what it takes. And don't quit. Quit. Don't, people that don't quit, they don't lose.
I agree.
Yes, yeah.
Don't quit.
All right, guys, I'm jumping off.
Okay,
It was great to be
listen,
with you guys.
Everybody, Beth
that up.
needs some sleep. Beth's been up for the full 24 hours.
Yeah,
Matt,
gonna charge
it's
her
almost
up.
midnight. Matt's almost midnight. He hasn't had dinner yet. Luba only sleeps Saturdays. Today's Saturday. Gets some sleep. If we let Thalys go on,
No.
then we'll never finish. And David's been up the best.
That's why we love him. That's why we love him so much.
Exactly.
David's already had a
4 hours,
nosebleed
I'd say keep
tonight.
going.
Probably lack of sleep. So we're going to let David go up. We're going to close it up now. We love you all.
Yeah, thank you for being here with us.
We would not be here if it wasn't for you guys, the audience, you know, and our students and we are family. Okay.
Yes.
We're going to sign off now. We're going to close it down. Thank you, everybody.
Please.
Thank you, guys.
Don't be raped.
Sniper Club. Join Sniper Club too.
We're all shutting down.
Bye-bye.
We love you, Natalie. Bye-bye.
Bye.